that was a little bit small when they decided on the events, but we are aiming for Brisbane 32.
Brisbane 32. We'll see you in Australia.
For sure.
We hope for you. You're safe. Thanks, guys.
Thank you.
Congratulations.
Coming up, former U.S. Trade Representative Michael Froman joins us to talk about the new court ruling. He was booked before that, so that whatever we're going to talk about, we're going to change. It blocks most of President Trump's reciprocal tariffs. That's coming next.
MyKitch.com.
Welcome back to Squawk Box. Today's big story, and it is big, a court blocking most of President Trump's sweeping reciprocal tariffs. The White House appealing that decision. Joining us right now, former U.S. Trade Representative Michael Froman. He is now Counsel on Foreign Relations President. Good morning to you.
Good morning.
Help us try to think through what happens now. If you are one of our trading partners, if you are India, if you are Japan, if you are any of these countries that were supposedly getting close with us about a deal, what do you say?
So first, I think the administration will pursue all the appeals it can as quickly as it can. The
Right.
Federal Court of Appeals, potentially to the Supreme Court. It has other tariff tools available to it. And of course, all the tariffs didn't disappear. The ones on autos, on steel and aluminum, the ones that were called on national security grounds are still in place. And they can impose other tariffs using other authorities, at least temporarily, based on a balance of payments or a trade.
So is this so the markets are up today, in part because they think there's going to be less tariffs in the end.
I think that's probably, at least potentially in the end, depending on how the appeals go, it's certainly going to slow down the negotiations. You're one of the other countries negotiating, you're going to take a pause and see what's going to happen with this deal.
So here's is Europe playing us like a fiddle? I mean, think about it. Just 3 days ago, Europe says, you know what, we need till July 9th. Like, don't do this to us on June 1st. And in the back of their minds, they're thinking, look, Maybe we get a better deal with them somehow. But by the way, maybe the courts show up and make it a little easy for us. Who knows?
It's possible. I think, though, it's probably less that they were being strategic and that they were having their own difficulty in getting their act together around what they were going to negotiate with the U.S. The UK may look a little foolish for having agreed so quickly to a 10% tariff going forward. But I think, over the long run, they'll use other tools. They may well win on appeal, but using the IEPA, which was the Emergency Powers Act, the court said that this is not an
Let me ask
emergency.
you, if you were in this seat right now, and you said, "Look, we want to do reciprocal tariffs. That is our plank. That is our strategy. That is our plan." Do you think that you would think that the court should ultimately go along with the White House, or do you think that the courts are going to be?
So I think that there are laws that the administration can use. They have to go through the process. There are other laws that they can use to impose tariffs, and they need to work with Congress. Congress has a role in setting tariff rates. What the administration did is circumvent all that by using the International Economic Emergency
But
Powers
then
Act.
we get back to the swamp. So one of the things we were talking about this morning was just sort of the swamp versus Doge, right? But the swamp is also swamp versus tariffs, which is to say, once you get process involved, by the way, I like process because I think process hopefully creates trust and credibility among the public because they say there was actually a process that they could see and it was transparent, all the things. But process by default makes things slower and also makes things harder.
Well, one person might call it swamp, another might call it checks and balances in the Constitution, where Congress under Article 1 has the right to
By the way,
set tariffs.
I actually like that approach almost better than using the swamp phrase, but I was trying to keep the vernacular
That's
going.
you're conflating something. That's not what we mean by the swamp, not the rule of law.
Yeah.
That's not, people aren't talking about the swamp as the rule of law, and everybody wants process, and we have it. That's why we have the greatest system in the world. That's why Trump could never be a dictator, and he's not a dictator, because this is the stuff that he's got to work with, and you can't work.
And he can continue to
And
work
I
through
disagree,
other laws.
but I don't know that whether you what other rationale or act could he enforce other than the emergency?
He can use
act?
Section 301, which is the traditional act where you say there's an unfair trade practice. You have to go through a process, public.
You have to go
public
through
comments.
Congress or no?
No, he can initiate an investigation, and he can then get public comment and make decisions. It's reviewable by a court, but there is.
You have to do it
a process.
140 times.
Well, you have to do it probably in parallel with a lot of countries at the same time. There is another law around the balance of payments. If you have a trade deficit with a country, a balance of payments problem, you can put temporary tariffs on for a period of time.
And so they're looking at all these things right
But
now.
other countries, I think, are going to wait and see now and see how our system works in terms of checks and balances.
Was it just a quick? It was the easiest way to do fentanyl and emergency, or that was just the quickest way?
It was the quickest way.
Yeah.
It was the quickest way, but now he's going to
It
have
was
to go
always
through a process to
doomed
get
to.
there.
Yeah. Once you say I'll give you 90 more days, that's the point you made, Sorkin, was that Europe here's EU hears about 90 days. And it's like, well, the court's going to stop him before then. I'll agree to that, right?
I mean, that's the question.
You were going to come on and talk about how not all tariffs are bad, but the ones that temporary ones are bad. What was your point there? The temporary tariffs.
Well, I think
put on in a short-term way they're bad, but they can be long-term strategy if they're implemented properly.
Well, I think if tariffs are in reply to an unfair trade practice, and that's where some of these laws may well take the administration, it can balance some of those unfair trade practices. I think the challenge for President Trump and the administration is he wants to end up with a 10% tariff at the end of the day across the board, regardless of country. Is that enough to actually move manufacturing to the United States? Is it enough to raise revenue to substitute for income taxes or to pay for his other tax cuts? Probably not. And so it may be inflationary, it may be pressure, it may be non-efficient, but it may not actually achieve his objective.
Those are just a couple of the objectives. The other objective is just that he thinks we're being taken advantage of, and in some cases we probably are.
There are countries that have higher tariffs, but he's imposing it on countries that we have a trade surplus with, not just a trade deficit.
Michael, thank you.
Thanks for having me.
We'll see what happens. What do we think is going to happen?
I think there'll be a messy appeals process at the end of the day, and hopefully at some point the administration will work more closely with Congress to try and build a consensus.
Okay, real quick though, maybe we'll do it this way. When do you think we will? So there was a sense it was a 90-day, right? 90 days we'd have tariffs. That would be the plan. That's not the case anymore, I don't think.
I think
What does the calendar look like? What does the tariff calendar look like?
I don't think we know it this morning how quickly the courts are going to react in terms of seeing the appeals and making the decisions on the appeals. And in the meantime, I think the negotiations slow down. So my guess is that timeline is going to be extended significantly.
So you get that extended. If you see, the problem is if you get tariffs extended into the fall, and if the big beautiful bill gets extended into the fall, then you get a whole sort of stew of things that are not very helpful. Okay, thank you.
Thank you for having me.
Okay. It is just after 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernan. Becky's off today. It's just the boys. The future's positive, but well off their highs this morning. It's not just the boys. We've got,
But
we've got women and other.
she definitely chafed on
Yeah,
that. We're going to break.
Introduce me.
Yeah, well, no, but that was just once we do that,
Okay,
then
this
it's
is
a
your
whole.
show. I'm just here for the
It's a
ride.
whole different story.
Yeah.
No. Come on,
Glad you said
come on
that.
aboard. The Treasuries right now. Take a look at what's going on. We're looking at the 10-year note, 4.519. The 2-year at 4. Basically 4 flat, but still over. We were in the 3s. Now we're up to 4s. I don't know what we're going to make of that. Shares of NVIDIA sharply higher this morning and up 30% in the last month. Christina Partsinevelos is here with us at the
boys.
table
With
the
the
boys to talk about what's going on with NVIDIA. Good morning.
Good morning, and thanks for letting me join, guys. But NVIDIA just proved that even major geopolitical headwinds really can't slow down this AI boom. So the chip giant reported better than expected earnings and revenue. We know that, despite getting hammered by U.S. export controls that basically, we could say, banned its H20 chips going towards China. NVIDIA took a massive $4.5 billion hit from excess inventory of those restricted chips and said it would have pulled in an extra $2.5 billion in sales if the restrictions hadn't been put in place. CEO Jensen Huang had some pretty pointed words about it, warning that the U.S. government is really underestimating China's technology capabilities. His argument is, if American tech companies can get blocked out, China will just build its own ecosystem, and Huawei's already showing how it's done. Jensen Huang spoke with our Jim Cramer about why staying in China matters so much. Listen in.
That's probably the most important strategic reason to be in China, because there are so many developers there and because the world is going to adopt technology from one country or another, and we prefer it to be the American technology stack.
So it's better to be just American than be completely blocked out. But the bottom line, NVIDIA projects it's losing $8 billion in Q2 revenue because of these government policies. But the company still managed to forecast $45 billion in second quarter revenue thanks to strong demand for its Blackwell products. That's the latest iteration of its GPU architecture. And as for serving the Chinese market going forward, NVIDIA had some limited options to explore, but when analysts really pressed CEO on the call on specifics, he was pretty blunt, saying, we don't have anything at the moment, but we're considering it. So despite the China headwinds, NVIDIA's AI story is far from over, and most likely there will be another chip geared for that country.
What do you think of that chip? How diminished will that chip be?
Quite diminished. The H20 is already much lower than the Huawei
Right.
Ascend chip, the 910B, if I remember correctly. So on a scale, it's very, very low. And so that's the argument. If you're going to block an already lowered spec chip, you're just handing that market over to Huawei. Jensen Huang has said many times that they used to have a 95% market share of China. Now it's dropped down to 50%. Of course, they're spending a lot more on each individual chip, and it's still a big portion of sales, but
Right.
it's an opportunity for them to still maintain a foothold in that market.
You're an expert in this GPU world now. Can you help me with one thing that I can't figure out?
Sure.
So these folks who are building these big,
Racks,
these
more-
big centers.
Yeah.
The big question in that space and among tech companies is, are they going to need to buy effectively the newest, highest rated chip every year? And if that's the case, what happens to the old chip,
And what happens to CoreWeave?
right? And so what is the answer?
The argument from CoreWeave CEO, who corrected me upstairs here, because we were often talking about how these chips become obsolete, and he said no, there's at least a shelf life of 6 years. That's what's in all of their financial statements. So depreciation cycle is 6 years, and that he believes it could be repurposed. However, the H20 chips that we're talking for China, Jensen Huang literally said, the end. there's nothing they can do with those hopper chips. They're essentially dead. These are more watered. I shouldn't use the
This
word
goes
watered
to the
down.
whole idea of it, just like you're going to do all these things. These are like seriously depreciating assets.
Yeah, and he's sticking with the annual cadence.
Right.
What does that mean for every company that buys the Hopper? Now they're switching to Blackwell. So Blackwell chips are 70% of their data center revenue, and then the next iteration, Rubin, after that. Every single year, what does that mean for the the smaller guy that just spent a lot on those Hopper chips?
Right. There is this argument that you're going to use the newest chips for sort of like the highest end stuff. You're going to use, then you can use some older chips for some mediums, and then the oldest chips for like the easiest kind of
Yeah, they're not completely
Right.
obsolete. That's the argument, and they can be repurposed. But when at the level of compute that you need it at, you would need the most advanced.
Christine, thank you.
Thanks for having me,
Appreciate it.
guys.
Coming up, United Airlines CEO Scott Kirby is going to join us on the problems in Newark and the potential impact of aging air traffic control systems on airports across the country. I'm supposed to take off to Newark, I think, next week, so I want to hear this. We're coming right back.
Now.
You know. LeBeau knows what to do. United Airlines and JetBlue forming an alliance. Phil LeBeau joins us, and now it's more fluent in LaGuardia, but not because you wouldn't fly into
It worked out because of timing.
Because of timing.
Not because
We're
I
gonna
gotta
talk
stay
to
away
Scott.
from. We'll ask Scott about Newark.
We'll
He's
ask
out in the lobby right now. First thing
Yeah.
he said to me, he goes, "Can I talk about Newark?" I said, "You think that question's going to come up?" Yeah, we'll talk
That's
about
the
that.
first thing I ask you. Where do you
Yeah.
fly in?
So, but let's talk about the news that has just been announced within the last few minutes. United and JetBlue forming a collaboration. They are not calling it an alliance, they're calling it a collaboration. What does that mean? Each will be able to offer flights on the other airline. It's important to note this is not a code share agreement. They're not working each other's schedules, they're independently doing their own schedules. Customers can earn frequent flyer miles on flights to the respective other airline. And this is important. United will get access to JFK slots starting in 2027. This has long been one of the things that Scott Kirby has talked about, that someday, when it comes to New York City, as much as they are happy with their hub at Newark, JFK would be huge for them. So, as you take a look at shares of JetBlue and United, a couple of things to keep in mind here. Again, this is a collaboration, but it is not a code share agreement. And remember, for JetBlue, it needs greater access for its customers to have greater access, I should say, to other flights in other parts of the country and around the world. This allows them to do that. And then for United, as I mentioned, the fact that it can strengthen its market share here within New York with that access to JFK, that would be huge. Remember, they pulled out in 2022. Scott Kirby, as I mentioned, he is going to be here joining us on set in just a few minutes. We'll talk to him not only about this agreement with JetBlue, but also about what's happening with Newark, his belief that now more than ever is the time to fly in there because the schedule has been reduced by the FAA. The prices, have you noticed, check out prices flying into LaGuardia versus flying into Newark. You will notice a difference.
Because people are making the choice.
Correct. I have friends when they're saying, I'm going to New York, should I fly into Newark? You know, I'm not telling them not to, but in the past I did, when before they got this worked out with the FAA, I was like, hey man, you don't know if your flight's going to take off. So that's the hangover effect.
Well, we're going to see you soon at 7:30 with
If
Scott
I want to
Kirby.
get a cup of coffee, I'll come back.
All right, very good. Squawk Box. Welcome back to Squawk Box. Let's take a look at the futures right now. Dow's up 237 points. Nvidia's helping the Nasdaq. The Dow was up about 400 earlier on the tariff news. For more on the markets, let's bring in Ryan Dietrich, Chief Market Strategist of Carson Group. A lot of our guests today, Ryan, had to change all the things we were going to talk about and their take on things, given the news about tariffs. But I don't think that would have changed what you were going to say one way or another. And last time you were on, you didn't help us with if it bleeds, it leads. You felt pretty good, I think, and that's been borne out.
Yeah, Joe, good morning. Thanks for having me back. I was on the morning of April 9th. A couple hours later, S&P gains 9% up today. So let's keep it going. And you know, listen, you've had some great guests. You've talked about these things. What have we seen just the last 24 hours, right? Strong earnings and better news on trade. That's what we've been seeing for about 6 or 7 weeks. That's why we're flirting with all-time highs. I was thinking, what can I tell the listeners that might be interesting? Here's something you might like, Joe. It's safe to say after today, we're probably going to be up 5% or more this May, which obviously is over tomorrow. 10 times in history, the month of May for the S&P 500 has gained at least 5%. 1 year later, higher 10 times, up almost 20% on average. There's no better month of the year with future returns in May. We can get into more of the weeds of it, but I thought that was kind of interesting. Usually May's not that strong. So this is another clue, another signal from the markets that we've been saying for a while that, listen, this market wants to go higher. We know the headlines. We know the potential risks. But again, we have to listen to what we're seeing, and we like it so far.
I was actually said that to Katie Stockton. In a perfect world, if you could just use technical analysis, if it worked all the time, which it doesn't, obviously nothing does, and you got to use, I think, both technical and fundamentals. But if you could just use technicals and just get rid of all the noise, whether it's tariffs or the Fed or whatever it is, the market can kind of tell you what it wants to do. And I think that's what you look at.
No, exactly. You know, one thing I came on your network earlier this year. Now, we did not see a near bear market. I'm going to be very clear, but we were on record. We'd probably see a 12 to 15% peak to trough correction probably in the first half of this year. If you look back at history, Joe, the first quarter the last 20 years is the weakest quarter of the year. After a 20% gain, the first quarter is usually pretty weak. Oh, by the way, post-election years early are very weak, normally bottom in early April, and then are really strong. So these are little clues that after back-to-back 20% years, and I look around and, you know, some of the bears are coming on your network. Everyone's bullish all of a sudden this time 4 months ago. We started getting a little worried, so we shook, obviously, did a big shakeout. We had the historic sell-off. You know, one more thing, when I joined April 9th, those 27 days after that, S&P had one of its greatest 27-day rallies ever, up over 20%, or almost 20%. The other times, Joe, we saw strength like that off the 74 lows, off the 82 lows, off the 2009 lows, and off the 2020 lows. That's it, okay? So we know those times are major lows. The market did not go on to make new lows, and honestly, continue to work its way higher in those cases. And, you know, every time is different, yes, but with all the negativity out there, one more thing, you mentioned Katie, big fan of Katie. Advanced decline lines are hitting all-time highs. The NYSE advanced decline line is hitting all-time highs like as we speak. To me, that says market breadth is strong. That's normally something you see in the bull market. And the U.S. is just playing catch-up, honest to goodness, with the rest of the world, which has been doing really well this year.
So if at the very least, if the Trump tariffs did nothing else, it did give the market an excuse at the beginning of the year to correct an overbought back-to-back 20-year advances, and it was kind of, maybe it was cathartic. So even if nothing happens globally in terms of trade, it did give the market a reason for a pause, and it probably was healthy because the Mag 7 was controlling everything, and it just wrung out maybe some of the excess.
I agree. I mean, I totally agree. I mean, it would have, again, do we go down 20% if we don't get the tariffs? Probably not, but we might have had a double-digit correction for any particular reason, and that's what's happened. You know, one other thing that caught my attention, I know other guests have pointed this out, even in April 9th, when everything was really bad, or we're down almost 20%, credit markets were really, really hanging in there. You know, and I've always said the credit markets are the smartest people in the room. The worries were there, but if you follow the credit markets, follow some of the internals, the relative strength, honest to goodness, it said you probably want to be opportunist here, especially the market was selling off, and we've seen that. And you were sticking with, we like the U.S. still. We like large caps. We think those cyclical areas, your financials, industrials, if you don't have a recession, which we never were in a recession camp, those are areas that second half of this year, Joe, probably still going to do pretty good.
Good. All right, that's a quick rundown of your thoughts. So Ryan, we'll have you back. I don't know We're up 200. We need another set. What do we need to get to match your last time we were on?
We need a miracle, I think. But
Yeah.
we'll take another update. Is what we'll take, Joe. Thanks for having me back.
All right. Thanks, Ryan. See you.
Coming up, a major investor in sports saying a bubble may be brewing. That story straight ahead. You do not want to miss it. Squawk Box coming right back.
Time now for today's AFLAC trivia question. What year did the Entertainment and Sports Programming Network officially change its name to ESPN? The answer when Squawk Box returns. Fly. And now the answer to today's AFLAC trivia question. What year did the Entertainment and Sports Programming Network officially change its name to ESPN? The answer, 1985.
Welcome back to Squawk Box this morning. We've all seen the soaring franchise values, record-breaking media deals in the sporting world, but one well-known investor now warning that it may be a bubble ready to burst. CNBC Sports is CNBC Sport, I should say, not Sports is, but Alex Sherman sat down with Redbird Capital's Jerry Cardinal.
This notion that, it outperforms the S&P over a historical period of time, it always goes up, it's non-correlated to the macro. There are elements of all of that that's true. But I think if you're a student of history, you know that always going up is not a great arbiter for making an investment.
And joining us right now is the man who conducted that interview, Alex Sherman. Look, I've been worried about this for quite some time. We've been asking so many different executives who've been coming in here saying they're interested in sports. We talked to Rory. Everybody's trying to be in the sports business one way or the other. Some in terms of buying franchises, some in terms of sports tech or these sort of ancillary businesses that live inside the sports ecosystem. What do you think?
Well, you heard Jerry talk specifically about this idea of investing in teams, and I think that's what he's really concerned about, because you've seen with private equity investment, particularly in minority stakes in teams across the board, it just became legal to do this in the NFL. They just changed the rule last year. It's been around for a few years for the other major U.S. sports, but it has picked up steam recently. And as it has picked up steam, the valuations of all these teams have increased because now you have this new outside capital. Everybody wants in. It's a big rush. These are scarce assets. And his point is that if you look at the underlying tenets of the business, particularly driven or connected toward media rights, the valuations don't really add up.
But we're talking, hold on, let's just go back. Are we talking what I call big sport?
Yes.
So big sport is NFL, NBA, Major League Baseball.
Yes.
Then there's all the money that's flooding into everything else, including pickleball and sailing and drone racing and you name the sport.
So all of these assets, in theory, should be connected to the future growth rate of media because most of the revenue comes from media.
Right.
Even for pickleball, to be honest, the future valuation of that business is tied up in whatever we think the future of the media rights of the pickleball business will be. So for women's sports, there's like euphoria right now because there's a feeling that we are on the cusp of the media rights for women's sports, big time women's sports, going through the roof.
Right.
Will that happen? I don't know yet. I mean, they got a big 6x increase on their last media rights deal. This is the WNBA. But I think the feeling is, well, that number could go much, much, much higher in the years to come. There's still an enormous delta, if you think about it, in that 11-year deal the WNBA struck with the NBA. About $2 billion of that deal went to the WNBA. $75 billion went to the NBA.
Wow,
So that's
okay.
the delta we're talking about, which is why there's so much enthusiasm behind women's sports. But Jerry Cardinal's point is that, yeah, but the assets valuations for all of these sports are too high right now.
Okay, let me ask one other related question, because there's investing in the leagues themselves, and then there's all this ancillary investment that's taking place, as we described before. If the franchises don't have the value that we thought they did, does it therefore trickle down to everything else that lives around it?
Yeah, I think that one is probably it depends what the business is. Certainly, Jerry Cardinal's point, you can listen to the interview on podcast form or on CNBC.com, he says it's very dependent on the business itself. You can still create businesses from scratch around the sports ecosystem that can be phenomenal businesses with much better underlying tenets where there's a clear top line, bottom line growth. His point is that the equity research does not exist today in terms of the team valuations. It's just non-existent. So there's all of this money flooding in because they want a piece because it's cool to own a minority stake in one of these businesses. But actually, if you do a little bit of digging, that piece of the puzzle doesn't add up, in his opinion.
You see Bonnie Hammer on yesterday. She created a bunch of stuff, obviously. Dramas, suits, all that. You saw
the program. Yeah.
News and sports. News and sport. I don't think this has ever come. Maybe some of the third and fourth tier stuff, maybe. But the main ones, that's just gonna buy it now because it's gonna cost more.
Well, right. That's the counter argument, which is that these are scarce assets. These are really rich people that are buying them. Forget about private equity money.
Yeah.
It's a vanity play, and that will never stop. It's the same thing in investing in art or collectibles or whatever. There's only so many of these things, and then if you look historically, in fact, there's a cool chart in my newsletter today, which you can sign up for on CNBC.com/sport, that shows the astronomical rise in team valuations, and it is truly up and to the right over the past 70 years.
That's not changing, I don't think. And business news.
You can grab the newsletter right there. Just point your phone at the screen.
Does that really work?
You get the podcast at the same time that way?
Magic.
You get the newsletter and then you get the podcast.
That's right. The podcast is right in the newsletter. Exactly.
There you go. Thank you, sir.
Thanks,
Nice to
sir.
see you. Appreciate it.
All right, coming up, an exclusive interview with United Airlines CEO Scott Kirby. We're going to get to everything from air traffic issues at Newark Airport to a new alliance with JetBlue.
Big. That's big.
Phil was just talking about that. Squawk Box. Coming right back.
AI meeting agent.
Welcome back to Squawk Box, everybody. I'm Contessa Brewer. Let's get right to your morning movers this morning. Salesforce shares have been all over the place after reporting earnings that beat expectations, and the company raised guidance. But as you can see right now, the shares are just off fractionally in the pre-morning trade. A slew of analysts now are raising price targets, but not all. For instance, RBC downgraded the stock to sector perform from outperform, lowered its price target from 420 to 275. Mark Benioff, though, sounded bullish on the future and highlighted the company's plan to acquire data management company Informatica for $8 billion. Let's take a look at HP as well, another earnings mover in the pre-market. And you can see, look at those shares off by 9.5% in the pre-market. After reporting a mixed quarter yesterday, beating the top line, missing on the bottom line, guidance weighing on the stock, the computer company missing estimates on third quarter and full year guidance. The stock now down around 24% year to date. And Southwest Airlines higher after an upgrade to buy from hold at Deutsche Bank, which cited three key reasons. It says it's a recent board shakeup, initiatives like charging for checked bags and assigned seating as revenue drivers, and the potential for improved return on invested capital due to unique transformation underway. That's according to the analyst. The stock is up nearly 20% since it announced it would start charging customers baggage fees on March 11th, but as you can see, those shares in this morning up 1.7%. Squawk Box returns with an exclusive interview with Scott Kirby. That's next.
Welcome back to Squawk Box this morning. We got Phil LeBeau at the table, and he joins us right here with a very special guest with a lot of big news this morning.
As promised, Scott Kirby. Just a half hour after you guys announced this collaboration with JetBlue, we're going to talk about Newark. I know you guys have a ton of questions about Newark, but the deal with JetBlue, it's long been talked about. Everybody's known it was eventually going to happen. Why is it so important for United to have this greater access to JFK?
Well, it's two things for us. It's really a big program. It's all about our customers. It's a great program for our customers. JetBlue is I think, an airline that has customer service in their DNA at their core, and a really good airline. And so a partnership with them makes a lot of sense. It also gets us back into not just into JFK. It gets us back into JFK with our own metal, but also with a partnership with JetBlue. But also, we'll be the largest airline in Boston. The two of us combined will be the largest airline in Boston now. We'll be big in the Florida and the Caribbean. So it's really complementary. Those are places that United's the biggest airline in the world, but we're not as big in those key geographies. And getting a partnership with JetBlue is great for our frequent flyers to really have the biggest.
I'm reading the release. I noticed you guys do not say anything about asking the Department of Transportation for approval there.
Yeah.
And you know what happened. Everybody knows what happened between JetBlue and American and their Northeast Alliance, and it was deemed uncompetitive.
Yeah.
Are you going to ask the DOT for approval?
We are. It's not clear. This is because a deal like this has never been done before. It's not even a code share, and because of that, it's not clear we have to legally. But we're going to. We briefed them yesterday. This is such a pure kind of good customer benefit that it's not like traditional deals. This is really good for JetBlue customers, good for United customers. Makes each airline more competitive with others.
Yeah, we heard that also about American and JetBlue in the past. But you're confident that, under the Trump administration, let's be clear here, they're not. There's very little chance of them saying, I don't know if this is competitive.
Well, I don't think it's about the administration as much as this really is a different kind of deal. That was a code share deal where they were managing capacity.
Right.
This is not about managing capacity. This is not even a code share deal. This is really about a frequent flyer deal that gives each of our frequent flyers access to a larger network.
But is it, just so I understand, there's the DOT, but then is there the FTC or the Department of Justice?
For us, it's the DOJ. They could, but again, this one is much more straightforward.
And what's in terms of pricing though? So let's say I'm a United customer, I got a lot of miles in United, and then I want to buy a JetBlue ticket. I'm going to buy it through you.
That's you could,
right.
But the point is, because we're not code sharing, we're not pricing each other's flights. So you'd be buying it whatever JetBlue sets the price at. So you use your miles to buy there. We're also going to sell on each other's websites. So now you'll be able to go to United.com or use the app to buy a JetBlue flight if you wanted to fly from Boston to Orlando.
So the idea is it's more to make it more convenient for me just to plan around working either through JetBlue or through United.
Yeah, it's to give you more options. So if you're a frequent flyer that you want to use Newark as your home airport, but sometimes you want to fly out of JFK, it gives you more options, which we didn't have that option for customers before. We're on both sides of the house now.
Let's say you are. You're Ed at Delta this morning. You're seeing this news. He's thinking what? Meaning, or flip it around. If he was doing this with somebody and the Department of Justice called them and said, hey, is this good or bad for business? They would say what?
Well, it'd be hard to argue it's bad for the customer. Delta's a really, really good airline. They've done a great job. In fact, a lot of what we've done at United has been copying some of the things that Delta did successfully. But their number one competitor, JetBlue's number one competitor is Delta. At JFK, Boston, and even in Florida, the Caribbean, and this makes JetBlue more competitive.
Because it makes them more competitive because they're going to get more traffic to their
site. Because
site.
now, if you're a frequent flyer, you like JetBlue, but if you're flying out of New York, for example, JetBlue Delta can get you all over the world,
and you get to capture the miles.
And JetBlue would get the miles. You could use them though to fly United, so you could earn on JetBlue, and then just say, I want to take a vacation to Cape Town.
Right.
Use your miles to go to Cape Town.
So you're looking at a Newark United guy.
I would never go to JFK. I would never.
I'm a JFK guy,
and I'm totally
quite interesting.
Yeah,
with all of Newark's warts and whatever you want to call it.
But by the way, Newark is. We could talk about it, but because the FAA is going to finally cap the capacity at Newark, just the thing they do at JFK.
Now's the time.
Newark is going to be the most reliable Newark. It is right now. The Memorial Day weekend was the best weekend we've had in our history.
That A terminal is pretty nice, although
it's very nice.
I prefer C.
Let's talk about Newark, because Secretary Duffy was out yesterday with an update saying, look, that the runway work may be finished sooner than June 15th.
which means they can move up instead of, what is it capped at 28, they can move up to 34, but it's not going beyond that through October. The reality is it's the lack of air traffic controllers for that particular airport that are it's really going to limit growth for the foreseeable future. I mean, when do you realistically believe that you can go beyond 34, or do you sit there and say, well, now it's October, but come on, it's going to be like this for the next couple of years?
This is really the important point. Is at the 34 flights per hour, 34 arrivals, 34 departures, is going to be great for customers. You can now book with confidence. This is what we've wanted. Maybe that number inches up a little, but there's only one set of parallel runways at Newark. And even in perfect conditions, the theoretical max is about 38. And the problem with Newark has been when you schedule more than 38, that you wind up with delays that cascade through the day. And so this is the solution for Newark to be the most reliable of the New York airports.
Are you worried about the hangover effect? Look, I live in Chicago, and I hear from all of my friends, going to New York, like hell if I'm flying into Newark because I don't want to get, flight canceled or delayed. And I mean, it's hurt you guys in terms of traffic.
Yeah, it's been disappointing because first the safety issue, like the FAA has tower, TRACON, ground center. So there's 3 separate systems that can control flights. And if one of them goes down anywhere in the country, it doesn't happen often, but when it does, it's not unique to Newark. When it does, the other 2 back it up. Then we have a 4th system called TCAS on the airplanes. It's independent of those. So there's 4 backups for these systems. So the safety's always been high. So that was surprising to me. But the reliability point,
isn't there a hangover effect where you might have people around the country who are saying, I'm going to New York, stay the heck away from New York? And how long does that last?
Well, I hope it didn't last long. We've already seen that the leisure traffic has come back. We did take a big hit, but the leisure traffic's come back. Business is lagging a little. But really, I mean, I think you just need to get people to try it. Because you look at it's going to be the most reliable. The fares are the best this year that they're probably ever going to be because we lost traffic. The least crowded airport now because the FAA has done. We've been asking for a decade for the FAA
when
to
did
manage
you
capacity
join?
there.
When were you CEO? When did you become CEO?
Right, it started COVID a little over 5 years ago.
Because you remember, this is what I remember, and that is that Continental was a great airline. I loved Gordon, and you remember United and Continental, and there were some issues initially, putting them together. There's some disgruntled United employees. Would you say, and I'm going to show you a chart, and I should get a couple of upgrades from this, but I'm going to show you a chart of a 3-year XAI versus a 3-year United. Is this just solid management? What do you attribute? There it is, Phil. It's we got United up 63%. The average
against the airline index.
Okay, is that
XAL? That's
what I asked for. Yeah, against the index. I also did Delta too, because you have highlighted some of the issues that Ed has faced over at Delta as well. So you're looking at 16 versus 63%. I guess my question was, is it all in the past? Flight attendants, everybody's happy. Flight attendants across the world, people seem happier.
They are.
There were some issues initially. I thought.
What I say I have the easiest job of anyone at United because I only have one responsibility: create an airline that our employees are proud of. Because if they're proud of it, they want you to feel that way when you fly, and they take care of you. And like really, everything I do is focused on an airline that they can be proud of.
Anyone
and
else
it works?
Anyone else close to that 3-year? So minus 21 versus plus 63. Anyone?
Maybe not, but also like Delta.
You
talking about Delta's a really good airline.
It
Started ahead of us.
Is it the CEO or it's the employees?
It's the employees, and really, it really is. I mean, it's about giving them an airline they're proud of.
Did you know that the outperformance of?
Yes,
you did.
Have you seen my reports?
That's how it's going. I guess I must have been answering.
I have to ask you because I don't know how long we have you here. A big part of your growth in the future will be the continued improvement of aircraft deliveries from Boeing. And Kelly Wartburg is going to be speaking later today at the Bernstein conference. How comfortable are you with what you're seeing out of them? And do you sit there now and say, these are the aircraft we're planning for in whether it's the rest of this year, 26, 27? Are you much more comfortable now that they're going to hit those targets?
I think Boeing has turned the corner and is heading in the right direction. I have to be blunt. I think the rest of the supply chain is now getting exposed to engines and biofuels, all kinds of other places. So I don't think that aircraft deliveries are going to get to the levels that we thought they would a few years ago. I think they're going to be constrained for years to come. The good news for us at United is we ordered so many we over-ordered aircraft believing that the supply chain would be challenged. So we want to take 100 narrow bodies a year. We ordered 140, thinking we wouldn't get the others. We're now only getting 60 to 80, so it's been worse than we thought. But we're growing. The growth that we have at United is, in absolute growth, is more than any airline in history's done. We're doing it year in and year out, despite the supply chain challenges. So we can manage through the supply chain challenges. But I do think Boeing has turned the corner.
Yeah. But you ordered some Airbus or never? No?
We have some. We're 85% Boeing. The XLR is the Airbus A321, and the XLR, which is a narrow body airplane that replaces the 757 to fly. So we're going to add, several destinations, smaller cities in Europe and North Africa that'll be able to fly that airplane here out of Newark.
Right.
Cool places for you to go on vacation.
Good. We got those. I need those pods.
They're gonna have low lie flat seats on them.
That's the future, is it not? And it's hub and spoke,
Yeah.
I saw a picture of I don't know what kind of jet. It was the biggest jet I've ever seen next to a normal 730. It's staggering.
It is. The future really, though, I think, is customer service and technology.
I thought the future's Boom.
Boom is cool.
Sound. This is.
Do you think that Boom will have a commercial aircraft, that you'll be a United supersonic jet?
Yeah.
When do you think realistically we see that?
It's hard to predict the timing. I think what Boom needs to do, and I've told Blake this, is extend the range of the airplane. It can't just be an airplane to get you from the East Coast to London and Paris. We need to get it to be able to fly across. But if they can get it to have longer range, then it will be.
But is it longer? Is it a longer range issue? Or I thought it's part of it's a regulatory issue about being able to fly over land.
Yeah, but that's why you're not going to be able to fly over land, I don't think, because of the sonic boom. But if you could fly from the East Coast to Europe, where you're over the Atlantic, but particularly if you could fly across the Pacific, so fly to San Francisco, LA across the Pacific, you don't have the sound problem, and those are longer markets. That's a huge opportunity set that opens. So I think that's the key to having Boom be successful.
I'm long Blake. I think it's very, very exciting.
Yeah, he's a great guy too.
We tried it before. Yeah, that stupid sound barrier. Can we change?
Part of what Blake I thought part of what Blake had figured out was actually how to reduce the boom. Wasn't that the whole point?
You got rid of it. Physics is a bitch.
You can reduce the boom under certain meteorological conditions. This is what happens. You fly at 1.15 Mach. The sound barrier will bounce off but it's impractical. It's a lot of fuel. You have high fuel burn there. Right. It's not much faster than the speed of sound, so it's probably impractical. The Air Force is working on technology though that essentially cancels out the sonic wave.
Right.
So there's theoretical ties.
What about these other wild planes? You're now seeing these
Jet Zero.
Yeah.
Those I really think are going to be the future. I don't know how far away it is, but that airplane, it's like the B-2 bomber, but those airplanes are
looks like a B-2 bomber, but it's a commercial.
Those are the blended wing bodies. The whole airplane is a wing. They're more technically efficient. They burn a lot less fuel. There's more space inside. You can carry more cargo. You can do a lot of things. I think it may be 20 years from now. I think 20 years from now, someone is going to be flying blended wing bodies. Blended wing bodies are going to be the future, I think.
And will we have room for them at the airport?
We'll have to make changes.
Gee, sounds like fun times at the airport coming in the future.
Not just those goggles where no one goes anywhere.
Oh, where no one goes anywhere?
Yeah.
No, people are going to do that too. That's going to be the other version of travel.
It's not the same. Either in person, it's not the same.
I'm telling you, I can't see it. I can't see it.
Yeah.
I can't see. I need to be there.
We're just trying to get Air Force One up and running. The new Qatari plane.
Yes.
That's a separate project.
Safely.
Yeah. Fabulous. Thank you for coming in.
Thanks for having me.
Really
Thanks,
great.
Phil.
Thanks, Phil.
Thank you, Joe.
Love your reports, Phil.
I appreciate it.
Listen,
you know what? I'm going to flag you. Next time I have a report, I'm going to say, Joe, I'm on the air in an hour.
No, you would never preferentially highlight you. I do stuff like that. You don't. You're like Mr. Airline Object.
Yeah, I have to.
Okay, we're getting the hook, folks. Thank you. Quick program. You don't want to miss the CEO of JetBlue. Who's going to be on a little bit later. Closing bell. Overtime today. That's at 4 p.m. He'll talk about the collaboration with United as well. You don't want to miss it. Squawk Box coming right back.
AI meeting agent.
The Trump administration has canceled a contract with Moderna for the development of a bird flu vaccine for humans. Our Angelica Peebles joins us now with more, and you could conjecture a lot of things about this between RFK Jr. and vaccines and mRNA. What's behind all this, Angela?
Yeah, good morning, Joe. So this is just the latest in a string of events that we've seen related to COVID vaccines over the last week. And what's happening here is that the Trump administration is canceling a more than $700 million contract with Moderna to develop a bird flu vaccine and other pre-pandemic influenza viruses. And so what's really notable about this is that obviously we've seen this, we've seen bird flu tearing through birds and also dairy cows, and the risk to humans. And so what we saw in the Biden administration is that they really ramped up this work, and they were helping to fund, they were going to fund a phase 3 trial to see if we could use mRNA for a bird flu vaccine if it indeed spills over to humans. And now the cancellation of this vaccine is quite a surprise. Maybe not a surprise now, because we had been hearing rumblings about this for the past few months, but we just saw this this contract ramp up right before the last administration left. And now you have the Trump administration saying that they felt like after a rigorous review, we concluded that the continued investment in Moderna's H5N1 mRNA vaccine was not scientifically or ethically justifiable. And they're saying that it's not just about efficacy, it's about safety. And so it's interesting to hear them really casting doubt on just the safety and the efficacy of mRNA vaccines as a whole.
I know, and that has been swirling around since COVID, and people talk about myocarditis and that, I don't know, some anecdotal evidence about some of the vaccines we use for COVID that sometimes don't point out that you can get terrible myocarditis from COVID itself, and it's a much lower incidence, obviously, with the vaccines. But there's a whole, you've seen it sort of increasing the skepticism, and then you have the RFK Jr. in a position has expressed some skepticism about vaccines in the past. Angelica, the J&J was not an mRNA vaccine, I don't think, for COVID. I mean, what will we use for bird flu if we don't use? It's very quick, and it's like software. You can update the software with messenger RNA. It's a pretty powerful platform to develop a vaccine. What would we use if it did jump? What would we use if it did jump to bird flu if we don't use an mRNA virus? We'd use some adeno virus or something?
So we do have 3 licensed vaccines that do use older technology grown in eggs and also cell culture. But like you said, Joe, these take much longer to produce. And that's been really the key with mRNA. And that's why we've seen so much excitement, whether it's about seasonal flu and also pandemic flu, because you can just quickly update what you need. It only takes like days to produce this. I've been to one of Pfizer's manufacturing facilities up in Massachusetts, and it's just a very small operation compared to the output that you can get with mRNA versus what you see with some of the egg-based vaccines, for example, where you need thousands, millions of eggs to actually produce the vaccines. And so I think that's why this is a little bit surprising, because the hopes were so high. And also, again, the mRNA vaccines were originally developed under the first Trump administration, and that was seen as such a win, of course, during the pandemic. And now you have this new administration coming in and saying, whoa, we need to, hold the phone. Yeah. This is under tested, and we're not going to continue what the Biden administration did. And so it's a really interesting, turn of events here. And also, I do want to note that tomorrow we're actually expecting an FDA decision for Moderna's next generation COVID vaccine. That PDUFA date is tomorrow, and it's hard to see, what happens with that.
Yeah. It's troubling, I got to admit, because it's all rolled up in the lab origin, and whether we should have closed everything down and whether kids should have not been. It's all rolled up into that. There's an entire. It's not. I'm not going to call it a conspiracy, but there's an entire social media group of people that just anything that has to do with the COVID vaccine, they're against, and it could be cutting off our nose to spite our face if we're not ready for bird flu, because of this perception that messenger RNAs aren't aren't safe, and we need more testing. I mean, I have seen some things that maybe the mRNA stays around longer. The half-life was supposed to be seconds, I think, wasn't it, or something originally, Angelica? And then have they found it?
Yeah, it's
months
not long.
later. What's that?
Yeah, I don't know exactly off the top of my head what the half-life is, but it's not supposed to be something, that lingers forever.
I don't know. Well, politics informs everything these days. Angelica, thank you. Pretty bad for work, right?
Gotta get ready.
For a bird flu. Well, hopefully not. When was the last pandemic? 1917, before that one. It's 8 a.m. On the East Coast, and you're watching Squawk Box on CNBC. I'm Joe Kerner, along with Andrew Ross Sorkin. Becky is off today. Among today's top stories, a federal court striking down the president's reciprocal tariffs, ruling he didn't have the authority to impose them. The White House appealing almost immediately. Trade-sensitive stocks moving higher this morning, helping the futures market. Salesforce beat estimates, gave strong guidance. The company says sales grew more than 7% year over year. Your CEO, Mark Benioff, on Mad Money last night.
It just was an incredible quarter, and you're right, we are raising guidance by $400 million. That means we're going to do over $41 billion this year in revenue, Jim. Pretty awesome for Salesforce. We're so proud of our team.
And Shell is buying Total Energy stake in an oil field off the coast of Nigeria for $510 million as it looks to increase its presence in the country's deepwater Bonga field. In case you were wondering, the deal increases Shell's business there to 67.5% from 55%. Good old Bonga field. You ever said that before?
I haven't.
I haven't either.
Take a look at futures right now. We were higher, by the way. Let's just be honest. We were about 400 points higher on the Dow when we began this broadcast. We're up 133 points.
Start being honest?
At some point, you got to break down and be honest with the audience.
It's 8 o'clock.
The Nasdaq up about 288 points, 290 points, and S&P 500 up about 50 points. This on the back, we think of maybe this court case and the tariffs, but we'll see. Meantime, I want to get over to Contessa Brewer with a look at this morning's pre-market movers. Lots of stocks moving around, Contessa.
Yeah, hi Andrew. Good morning to you. And we're keeping an eye on a group of retailers who reported results this morning, starting off with Best Buy off its earlier morning lows because it reported a mixed first quarter, earnings coming in better than expected, revenue slightly lower, just off. Comparable store sales had a larger than expected loss, and Best Buy updated its full year guidance to incorporate tariff costs, lowered its top and bottom line guidance for the year, and as you can see right now, those shares are off 2.5% in the pre-market. Foot Locker, meantime, reported first quarter earnings and comp store sales in line with preliminary results. The sneaker giant reported on May 15th. That's the date that Dick's agreed to buy out Foot Locker for $2.4 billion or $24 a share. Foot Locker will not hold an earnings conference call, nor is it providing guidance because of the pending acquisition, but right now those shares are up by 0.2%. And Kohl's is a big earnings winner here. We're seeing that move up higher by 6% this morning after reporting a lower than expected loss and beating revenue expectations in the first quarter. The department chain affirmed its full year guidance. Now that stock is still down about 40% year to date, which it's just been turbulent. Former CEO Ashley Buchanan was fired in late April because of an undisclosed personal relationship with a vendor. The company also previously plunged after cutting guidance in March. So we'll keep an eye on what those shares do throughout the day. Andrew, I'll send it back to you.
Okay, Contessa Brewer, thank you. Great to see you. We're going to talk NVIDIA shares in just a little bit after this because those shares are rising. You're looking at 1 year chart there, up at 23%. We're at about $141 right now, up about 5% this morning. This after the company reported a 73% jump in data center sales. We've got a reaction from an analyst straight ahead on what's going on and the implications with China as well. We're coming right back.
Fly.
Video shares higher following quarterly results that beat expectations. Joining us right now is John Finn. He is KeyBank Capital Markets Equity Research Analyst. Good morning to you. John, the stock up about 5% on the back of this news, 73% up in terms of revenue. I mean, it's just the sales numbers continue to outperform in many ways. But where does this go from here? What do you think the value of this company really is at this point?
Yeah, we think these guys have a $190 price target, based on kind of roughly, 32 times our kind of $6 numbers and out year numbers. Obviously they're the clear leader in this space. Stock is trading at relative value at kind of 22 times kind of next year's numbers. But yeah, we think there's a meaningful upside from here going forward.
In terms of headwinds, do you see any, and what do you think of what Jensen said yesterday about the China situation?
Yeah, I think China is still kind of an unknown out there. Obviously these earnings calls are historically typically targeted towards investors and analysts, but you saw last night what I felt was kind of Jensen appealing to the current administration, right? So the concern is that there's a ban in place on a chip that they had developed that was compliant with the prior administration's requirements and then was recently banned. They acknowledged last night that they are evaluating and working on another chip. And if they are not able to successfully bring it to market and get clearance to sell this chip to China, there is potentially a $50 billion market opportunity that they are not going to participate in.
What is reflected to that degree in the stock right now?
I think in the near term right now, I think the stock is looking through a lot of these headwinds. Obviously, the stock's up pre-market. The bar had been lowered going into the print. I think what you're seeing right here is that there were a lot of concerns that the China headwind would be a bigger headwind to their guidance. And obviously, they came through in flying colors because of all the sovereign, non-AI, and kind of major hyperscaler demand in North America and the US remains extremely robust.
John, in terms of competitors, is there another stock in this space that you would like more than NVIDIA?
I don't know if we're at a point where we have to kind of look at kind of zero sum and things like that. But our two favorite names in the AI semiconductor space right now are going to be NVIDIA and Broadcom. And they serve kind of two different AI markets right now. NVIDIA kind of has the leadership position in terms of merchant silicon. Broadcom is servicing kind of the custom AI ASIC space, right? Their largest customer right now is Google with the TPU franchise. They've got a handful of other hyperscaler customers that are developing AI ASICs, and they're clearly the leader in that space. So these two horses are probably the two favorite stocks of ours right now in AI semiconductors.
John, I want to thank you for joining us this morning. Great to see you.
Thanks for having me.
It's still to come. CEOs and market watchers sounding the alarm on the reconciliation bill making its way through Congress. We're going to talk about the deficit, whether or not DC has a spending problem. Really? You don't know that? In just a few minutes. Squawk Box, be right back. Welcome back to Squawk Box. Citigroup, loving AppLovin. The analyst naming at Citigroup naming the software publisher a top pick, replacing Take-Two. Price target $600. Another 50%. I did that really fast. Sorry.
Wow.
I did that really fast.
Human calculator.
Yeah, really. I know. The human brain, there's nothing close. I don't care what you do with your little chat GPT. It's still not this. It's still not this. They didn't take a shot at me. They're just leaving that on. According to the Committee for a Responsible Federal Budget, the House Budget Reconciliation Package will add roughly $3 trillion to the debt, including interest over the next 10 years. And bank CEOs, among others, talking about the economic impact and worries about the deficit. Maya McGinnis is the president of the Committee for a Responsible Federal Budget. She's not happy, and rightly so, probably, Maya. If I were to tell you how difficult it is to make a dent on discretionary spending, you'd say, yes, I understand that. And if I were to tell you that it's a very narrow margin in the House, and you've got Republicans that also are very unhappy with this, would you at least acknowledge that 1.6 trillion is maybe of cuts is maybe the best that could be expected in this environment?
I sure hope not. First, I would tell you that this isn't actually the discretionary cuts that they're looking at here. That's done differently in the caps. But this is where they're taking the real part of the budget, the mandatory or structural reforms we want to see. It's where the biggest growth in the budget is. And overall, the changes we're seeing are tiny. And let me put it in context to say that, no, I think we should be able to do more in spending cuts. But over this same time period, the federal government is going to spend $86 trillion. Okay, so I don't think 1.7 trillion out of that is very large. And then we pivot to the Senate, where it's moving next. Their aspiration, what they've put out in their roadmap for what they are going to try to save, is $4 billion. That's their standard out of 86 trillion. So no, I don't think this is serious about reducing spending at all. And one thing we know is part of the purpose here is for growing the economy. You do that by pro-growth, focusing on pro-growth tax reform, and also by as little debt as possible. And so the $3 trillion that the House would borrow and the more the Senate might borrow is anti-growth. That's one of the big concerns.
Right. I mean, in a reconciliation bill, you can't do discretionary. I mean, that's what I meant. It's not possible.
Well, taking that off the table, you're totally right.
Yeah, so taking that off, and that needs to be addressed at some point. But how much could actually be done here, given not one Democrat is going to vote for this at this point? In their view, Maya, the spending cuts that we're seeing right now, Grandma's going off the cliff again in her wheelchair from the slightest thing you do to Medicaid.
Absolutely. So first, you're right. Discretionary can't be part of this, nor can Social Security. So those are big chunks of the budget which we should be committing to reform as well. You can't focus on cutting taxes and ignore the fact that we should be doing all these spending parts. Number two, that's right. This is not a bipartisan effort. Unfortunately, reconciliation rarely is. Something that used to be used to reduce the deficit, now it's used to increase the deficit, and both parties use it in a way that is not at all conducive to bipartisan efforts, which is what we're going to need. You're not going to make any of these difficult choices if we don't have cover of bipartisan work to do it. I'm afraid a huge tax bill will make it more difficult to get Democrats engaged afterwards. I would like to see us focus on a big debt deal. But you are right. Every article I read where there's the description of all the benefit changes as slashing is so unfair, kind of, and stacked against the fact that a lot of these policies that are structural are going to have to happen, and then much more. So there's a huge bias against doing anything hard, which is what fixing the fiscal situation is. But when you've got interest as the fastest growing part of the federal budget, when you have a Senate that may well make a $3 trillion addition to the budget worse, not better, you have to start looking at every effort you can. And if it's going to be a purely partisan bill, listen, Republicans have wanted to cut spending for a long time. Now is their opportunity. So I really hope we can do better than 1.7 trillion out of a very large budget over the same time period.
So Maya, the Treasury Secretary, we're at 7% deficit to GDP. He wants to get to 3%, and you applaud that. This will not do it. Or is there any way that you're underestimating the possible growth aspects of the where it actually does come in much. That's what most Republicans will come back at you with. That we're going to have much. The CBO doesn't calculate this correctly, and the growth could be much more robust than people think. Is there any way you're underestimating that?
Yeah, they will indeed come back at us with that. And we're not actually estimating it as much as looking at the ranges of estimates out there. I would say there is no credible way that this bill is going to generate the kind of growth that the advocates are arguing it would. So listen, outside experts, there's a range of what the growth effects of this bill would be. They range from about negative 50 billion to about 710 billion. That negative number comes because the negative effect of all the borrowing can outweigh the positive effect of the economic growth, particularly in a bill like this where a lot of those tax cuts aren't pro-growth. They're actually the opposite. They're cutting up the tax base. We should be broadening the base and lowering rates. But if you've got a range of negative 50 to 710 billion from growth, and then the House budget resolution is assuming 2.6 trillion in growth, many multiples, no, I don't think that is what we should be banking on. We certainly shouldn't assume it ahead of time. Remember, there are things outside of government that are going to be negative on growth, looking at the uncertainty from tariffs and possibly from immigration. So we're not talking about a situation where you should spend all that growth, which nobody except the advocates of the bill are arguing is a credible number, ahead of time. I know that's what people want to make this seem easy, say, don't worry, we're going to grow our way out of the situation. Usually tax cuts generate enough to offset about 20% of the cost of the bill. This is less pro-growth than the previous 2017 version because that had the corporate rate cut, which is where a lot of the growth really
How
came
would we broaden, and Andrew once again, but how would we broaden the tax? What is your answer on, is it on the revenue side or you just purely on the spending side?
I would do as much as possible. Listen, I would love to see a reconciliation bill that would reduce the deficit. We have people who have said out there, and I completely agree, we should not be passing any legislation that makes this worse. Over the next 10 years, we are set, if we do nothing, to borrow 22 trillion more. We will have a debt as a share of GDP that's the record of what it's ever been. So I would start with, don't pass legislation that adds to the debt at all. I would increase the offsets as much as possible. If we're not going to do Medicare, which we should, there's still a lot more we could do in Medicaid. And yes, there will be accusations of slashing benefits, but there are a lot of gaming and gimmicks and taking advantage of the system goes on where we could focus the efforts. I also would get rid of all of the tax cuts that aren't really the fundamental pro-growth cuts and focus on the extension of the existing ones. And there's more offsets we can do in other areas. Yeah, Andrew.
You know, Ray Dalio talks about what he calls a 3% solution, which is basically you have to get interest rates in this country down to 3%. And that the only way to do that effectively is using these sort of three levers, if you will. One is cutting costs, but the other, ultimately, he would say, is raising taxes. And the last one, which is related to the first two, is getting the interest rates down. That actually, interest rates are the most important piece of this, but of course are a function of the first two. Nobody is willing to touch the idea of raising taxes at all, and clearly nobody's really willing to touch the idea of cutting spending. And so if you can't even touch the first two, you never get to the third. And my question is, what's it actually going to take? I mean, he talks about a crisis is what it's going to take, but how do we force the issue earlier?
Yeah, first I would like to say absolutely endorse what both Ray and Secretary Bessent are saying, which is let's get this deficit to 3% of GDP. It's the right goal. It would require savings of about $750 billion over the next 10 years. So that is clear. I'm sorry, $7.5 trillion over the next 10 years, clearly moving in the wrong direction. This is something that would bring those deficits up to 7%, not down. Number two, absolutely what you're saying is true. We have to reduce spending, we have to increase taxes, and we have to do it in a way that promotes as much growth as possible, but has reasonable estimates or assumptions about growth, not these kind of huge wishful thinking ones. We don't have the political dynamic to do this. We have two parties who are in a cage match against each other, fighting each other by trying to give away more than the other party. And the levels of polarization we have in this country are leaving us making bad choices. The fiscal choices that we are making are weakening our economy, weakening our ability to respond to emergencies, weakening our national security. We had a conference just yesterday with a lot of folks from different areas about what do you do if there is some kind of downturn or emergency, because we're so indebted. Any response that we have right now would be much more difficult than it otherwise would be. So I'm worried about the political environment.
They're playing us out. If we went back to pre-pandemic spending, what would that take? And we're not going to do that. I mean, would that get us close? Oh, we got 15 hard. We got to go, Maya. We'll have you back.
Okay.
You know, I still think it's more spending than we've just blown out spending since the pandemic. And we're
Still to come, despite falling 2% yesterday, Bitcoin is now up 13% in the past month. We'll talk about crypto's latest move with Lex.
Initial jobless claims and the second read on first quarter GDP coming out. Rick Santelli is standing by at the CME in Chicago, and you've got about a second to analyze this, Rick.
Yes. Yeah, you're right on time, Joe, 8:30 Eastern. And of course, initial continuing claims have been awfully well behaved. But let's start out with our second look on first quarter GDP. Expecting down 0.3, we gained a tenth, down 0.2%. And if we look at the consumption numbers, well, they backed up a bit from 1.8 to down to 1.2. So this is definitely a bit of a miss on the consumption side. And 1.2, how does that stack up? That would be the lightest consumption since the second quarter of 23. Pricing index, 3.7%, exactly as expected. Same as the rearview mirror, no change there. But just to put a face on it, that would be equal to the last quarter of 22 to find a higher price structure. You're going to the third quarter of 22. And finally, let's go to the core side of the PCE price index. Quarter over quarter, maybe especially important in front of tomorrow's PCE data, 3.4. So we're a tenth cooler than both the rearview mirror and the windshield. How does that stack up? 3.4 will be the warmest since the first quarter of 24. Initial jobless claims, they got a little warmer, Joe. We're expecting a number of 230,000. This comes in at 240,000. That's up 14,000 from a very slightly revised 226,000. But 240,000 will be the highest since the last week in April, not that long ago. And of course, we haven't been over 250,000 since October of last year. Always important to pay attention to. And on continuing claims, we now have our third 1.9 or higher. Yes, once again, 1,919,000. This is a third reading over 1.9 million since the second week of April of this year, and it would be the warmest levels that we've had basically since 21. Interest rates have moved down a bit. The entire curve is down roughly a basis point or so, but still hovering not far below 4.5%. And I suspect that we're going to continue to be on the warm side on long-dated interest rates. And finally, the last of 183 billion in coupon supply comes today at 1 Eastern, Joe, in the form of 44 billion 7-year notes. Back to you.
We're all below again. On the 30-year, we were above 5. Now we're below 5. On the 10-year, we were above 4.5.
So
now we're below. And on the 2-year, we went back below.
So what do you think that is?
I don't. It's just a couple of basis points. What I'm interested in, and we're going to talk about it next, Rick. We're up only 100 points now on the Dow. It's everything that the panicans wanted on tariff. They got everything they wanted. They're not going in. Why isn't the market up 10,000 points that there aren't going to be tariffs? Is it because now we don't have any negotiation?
Probably because the market's pretty darn smart, and the market has been moving up because no matter how the tariff situation ends up panning out, the market's made a very simple, clear, but maybe nobody wants to talk about decision, and that is all the tariff talk is overblown in terms of its negative effects. No matter how it turns out ultimately, that's what I hear the market saying. Is the market going to be right? Listen, all I know is that for my part in this, I think the market is right, and I also think I want to see more deficit reduction in that bill, Joe. I really enjoyed your last couple of segments.
Oh, good. All right, well, we're going to talk to the head of the Thundering Herd coming up. So he may know something about what's going on with the market up next. We're going to talk about that with Merrill Lynch co-head of Merrill Lynch Wealth Management and President Eric Chint. And then we also have David Marcus. Andrew's going to talk to him about...
You are too.
I might a little bit. You know more. What?
No, I thought you...
Welcome back. Let's bring in the aforementioned Eric Schiff, president and co-head of Merrill Lynch Wealth Management. I told you that's my big regret, was ever leaving Merrill in, I think it was 1984. So the Thundering Herd.
We have that in common. Well, first of all, good morning. We have that in common. We're both trainees.
Great company. I should recuse myself probably, but we'll just talk about markets in general. What a bounce back from all the fear we had on April 2nd.
Yeah, first of all, again, Andrew, as well, good
Nice to see
morning. Great to be here to represent the 25,000 teammates at Merrill Lynch that do great things every single day. Our job is to give advice to Americans, and the volatility that's been in the market has been real, but when that happens, Joe, I mean, it tests, in your gut, hey, am I investing for the right reasons? What's the purpose that I'm investing for? And when you have some volatility, you have to think about it and say, and goals all of a sudden can change, right? Because
you got to know your client.
Yeah, of course. Know your client, and that gives you the opportunity to have those conversations, which we do every single day with, again, remind us, what are your goals? What is that time frame? And then put that money to work. In April, it got volatile, and I think the volatility continues because headlines are headlines, but we sort of say, okay, read them, pay attention to them. Let's sort of operate, in fact, on an individual basis with somebody's plan and try and help.
But you would still say Merrill Lynch is bullish on
America.
Right. That was do you still use that? Is it still?
Yeah.
That was the greatest.
Bullish on America, the Thundering Herd.
Yeah. Mother
Merrill, all the things that you remember. We do every day. But I also get the great benefit of being part of Bank of America.
What is with AI and everything else? What does the future look like for your 25,000 financial?
I don't think it would surprise anybody that the leader of Merrill Lynch believes human advice is advice is best given by humans around the kitchen table, on the telephone, talking with people. But you also see a desire for clients to do things when they want to do them, right? And so AI kind of combines that and helps us. Can we get more productivity? Can we do a little bit more digital work to allow clients to do some things when they want to do it, but then help our advisors maybe be a little more predictive? So think about someone's career path. This year already, we've delivered several million alerts to our advisors that says, hey, here's some interesting data about a client that we've seen. Maybe they moved, maybe they've been promoted, maybe they bought a home. That helps them then think through, okay, how can I better give advice to that individual?
So that's what we hear, that AI could just help humans with what they do.
Yeah, I mean, we've created something, we've been on the forefront, we've created something called Ask Merrill, which for our client associates, I mean, the backbone of our business, the people that really service clients every single day, I think we've used it 3 or 4 million times already this year. It's an AI-driven tool that allows them to get a better answer, how to do something quicker, how to fill out a form, what's needed to do something. Mm-hmm. I mean, we've used it millions of times already.
You have an answer for how we deal with this, what's going to be a suffocating amount of debt for the country? I mean, the CEOs are getting more nervous. Jamie Dimon, people are getting, I mean, we're seems like we're heading towards something eventually that there'll be a reckoning.
I don't necessarily have an answer, but again, I think what I said earlier, rings true for the work that we do. Headlines are there. You read things, you hear things. You have to sort of then say, okay, read through the headlines. What's really going on based in fact? What's going on with earnings power? What's going on in the economy that helps people make decisions? And through April, the volatility that we saw, the majority of our clients put more money to work. Right, and we took advantage of it. Things like tax loss harvesting and some of those things aren't just year-end activities, right? They're things that investors can do throughout the year, and if you have, a plan, it's sort of easy to revert to it and make decisions.
We're gonna have David Marcus on a little bit. We'll talk crypto with him and Bitcoin, but that's the next big thing. So is the Thundering Herd calling its clients saying crypto is a thing and you should be in it?
We made crypto available through ETFs last summer, I think, when it became available as an accommodation to our clients. It's not something that we write research on yet, or not something that we do on a solicited basis, but we did take advantage of the change and make it available.
Do you think it's going to be that, though? Because part of the argument for Bitcoin bulls is that once you're writing research, once you're out there actually making recommendations around it in a meaningful way, not just sort of doing it as a service to
as an accommodation.
You used the word accommodation as an accommodation, but rather as an advocate. Not that you'd be an advocate, but you advocate for different stocks and things like that. That then the whole dynamic changes, and therefore it takes off in a whole new way. Do you believe that?
I think you're starting to see it already. You know, solution providers, you know, companies that create ETFs and things like that, starting to put allocations of crypto in models. Really, at all risk tolerances, you're starting to see that, and I think as those come to market and start to find their way into retail wealth management, you know, I think it does head that way.
Would you still try to bring over a big, like poach FAs from other places that have a lot of money under management? Is that still going on? They give you low, you know, higher commission?
I have 100%
higher payout?
I have 100% confidence that the Merrill platform is the greatest wealth management platform.
Is it
on
still
the planet.
happening? Guys still moving around?
Sure. And I want the best advisors in over 500 cities that there's a Merrill office.
So you're still talking to, if someone comes in from a competing firm and says, I want to bring my book over here.
Would you like to come back, Joe?
It might be too late. You know, I'm not sure. I have dreams that I still have to make my numbers every month, and they're not pleasant.
I think it's a very different business than the way you and I were trained.
Yeah, you don't have to, you have to eat what you kill quite as much anymore.
The demand for personal financial advice, I think, is at an all-time high. And I want the best advisors to work with.
Well, I still am scarred. I'm scarred from purely commissions. I am. Eric, thank you. It's not your fault, but thanks for coming in.
Thanks for having me, Andrew. Thank you.
Thank you. Meantime, this may be the water cooler story of the morning. Maybe it's people don't have water coolers anymore. They have like Slack channels, right? So this is like, we're going to enter the chat. I don't know what you would say. OpenAI leading a group of tech giants that won a deal to build one of the world's largest AI data centers in Abu Dhabi. But behind the scenes, reports now saying that Elon Musk worked to try to derail that deal if it didn't include his own AI startup, with implications that, given his proximity to the president, that would have an effect on all of us. Kate Rooney joins us this morning to talk about this story that is making a lot of headlines and a lot of chatter, as we just said, in the group chats, or maybe around the water cooler, if the water coolers are still a thing.
Yeah, I think Slack or the group text, Andrew, is more like, it's what I'm hearing from a source as well. There were some reports, the Journal out with this yesterday, but I'm also hearing from a source who was involved in these negotiations that Elon Musk did try to derail this entire AI infrastructure deal that we heard about last week. You had NVIDIA, you had Cisco, SoftBank, and of course OpenAI, and Sam Altman, who is Elon Musk's nemesis at this point. You know, they were co-founders of OpenAI way back when. Altman has said that they were friends. The backstory here is that Musk has now sued OpenAI and has gone after him repeatedly on social media. And you flash forward to this Middle East deal, Elon Musk, from what I'm hearing, was trying to intervene and basically get his company involved, his OpenAI competitor, which is XAI. He was saying to the Emiratis, to G42, and to the group involved here, saying, hey, hang on a second, we need to look at more competition, talked about his influence in the White House, and said, really tried to throw off the deal. I also heard one of the details was that they were ready to go with a press release. They were ready to announce this at the 11th hour, had to basically go back, talk to Musk, kind of smooth that out, and then days later, this was actually officially announced. So absolutely at the last minute trying to throw that off. And the context here is the animosity between Sam Altman and Elon Musk. It is a win for Sam Altman and OpenAI, the fact that they were very publicly involved in this, that they won the deal. I'm told Altman also has relationships in UAE going back years at this point, but some interesting behind-the-scenes drama, guys.
Kate, help me though with this. To me, it seems completely reasonable for Elon Musk to want to have his company in a transaction like this. That doesn't seem untoward in any way whatsoever. I think the only thing that makes this unique or potentially interesting, actually, is this other piece that you suggested about the either implication, directly or otherwise, that his proximity to the president, closest to the president, would therefore have some kind of other influence in all of this. I remember talking to Sam at the DealBook conference last year and really put that question to him. Did he feel like it could become a problem for him, or that Elon would somehow use his power or influence with the president to somehow upend his situation. And Sam said that he didn't think he would, actually. And the question now is, did he?
It was interesting, Andrew. I thought back to that deal book conversation too. It was a very diplomatic answer by Sam Altman, saying, you know, of course Elon Musk wouldn't do this. It felt to me almost like a challenge at the time, saying, you know, that would be the un-American thing to do, would be to try to push your own influence in some of these deals. I would also say, if the argument is, hey, Elon Musk is saying there needs to be more competition, there needs to be more actors, it shouldn't just be OpenAI, then you would need Alphabet and Google involved. You should suggest that Meta should be involved. If it's about competition, you would think that there are other AI players out there, Anthropic, for example, that if you wanted to level the playing field, it wouldn't just be XAI. So I think if you're going to go under the guise of, hey, we need more players involved here, it shouldn't just be one American leader. You got to think of the big tech companies too. But that deal book conversation, we got to go back and pull some highlights.
Interesting. Kate Rooney, as always, thank you. Good to see you.
Thanks, Andrew.
When we come back in just a moment, we got David Marcus. He's going to join us from Sparklight. We'll talk about crypto, Bitcoin, and what he's seeing in the White House and everywhere else after this.
I'm here today to say loud and clear, with President Trump, crypto finally has a champion and an ally in the White House.
That was Vice President J.D. Vance speaking on stage at the Bitcoin 2025 conference in Las Vegas. Joining us right now is Lightspark's co-founder and CEO, David Marcus. Marcus previously led payments at Meta. He's also at PayPal and has been going to this conference, I believe, since something like 2013.
Yeah, that's right.
Okay, so what, it was like 5 guys in a basement in 2013, and now it's this?
It was, maybe 100 people in San Jose who didn't know what they were doing, but they found Bitcoin interesting.
And how many people were talking about this time?
35,000, I think.
So,
yeah.
When you saw the vice president there, I mean, if I had asked you in 2013, the vice president shows up and something like this, did you ever think that was in the cards?
If you asked me a year ago whether that was going to happen, I would not believe you.
And so, where does this go from here? We were just talking to a fellow from Merrill Lynch, talking about sort of, when and if some of these major firms are actually able to start pushing this stuff, not just sort of accepting it, if you will. How does that change it? Or do you think that's already built into the price?
No, I think there's so much room to go from here because Bitcoin is becoming mainstream. It's becoming really the true digital gold that we've all been talking about for a while. But now it's actually happening, and people care.
But you've always talked about also trying to make it a payment system.
Yes,
actually buy stuff with it.
Not necessarily with Bitcoin to unit of accounts, but build a real-time settlement method on top of Bitcoin.
Which is what your company does.
Yes.
So the question is, when does that take off?
Well, it's taking off right now. We're having very large digital banks coming onto the network. We have Nubank that has 100 million customers in Latin America. We have Revolut coming on. We'll make announcements soon about U.S. banks coming on as well, and other large wallets that are coming onto the network. So we're live in 70 countries, and you can move any currency to any currency in real time 24/7 on a weekend with Bitcoin in the middle. So it's happening.
How do you feel about a company like a GameStop putting it on its balance sheet, maybe playing a little bit of a Michael Saylor game? I don't know. And whether you think that's coming to corporate America writ large?
I think it is. The really interesting thing with Bitcoin is the incentives that were baked in 16 plus years ago, and now you see it play in such an incredible way. We have a lot of concentration with strategy, and suddenly you have dozens of other companies that are spinning up. So you're spreading the risk basically into other companies, and even Michael would say that he welcomes other people doing it.
You've given a lot of your support to President Trump. I believe you sort of switched gears.
Yes, I did.
And went that direction. And so my question though is, I imagine you're very happy about some of the policies as it relates to Bitcoin, but what do you think of his family's involvement and his own personal involvement in Bitcoin? Well, and not just Bitcoin, crypto, meme stocks, the whole thing.
The question would be the same if you're talking about stocks and the stock market. Is the president's family allowed to actually trade stocks or deal with the private and public markets? And I think the answer is yes. And I think this is a new category.
I think the answer is yes.
I mean, it's a class. It's a new. Is the family not supposed to be able to buy stocks?
Correct.
Or even
yes.
bonds, or
yes, they're not. They're not.
Are they allowed to hold dollars?
Well,
that's an asset class too. I mean, it's a decision that you're making to hold dollars. Might not be a great
historically,
decision.
presidents have either gone to blind trusts or done other kinds of things in the same way that if you want the head of the SEC, I would imagine you wouldn't want them trading. I would imagine you would not want Congress trading if they knew or had any influence over any of these things, right? But this from a public trust perspective.
But I think we talked about this last time. But it's like Nancy Pelosi supposed to trade?
No, she's not. I've said it publicly. It's a disgrace.
But individual companies in Congress, I mean, that's rife with conflict. How does the president control Bitcoin? Necessary. I mean,
well, if you have a regulation that says, okay, now the whole world can actually have it, that's a big impact.
That's the same as mortgages then too. You can influence mortgages. You shouldn't be able. It's such a big.
You wouldn't want to owning Fannie and Freddie if you could influence mortgages, or.
Well, I wouldn't say you can't have a mortgage or can't have a savings account or can't have a bond. These are much bigger. And less,
like everyone should have a bank account. I'm not saying you're conflicted by having a bank account.
Your family's supposed to be able to buy stocks, like your family. I would say. So I think it's just the reality is digital assets are becoming mainstream, and alongside other asset classes are being traded by many more people, including probably and increasingly so families, elected officials, and others.
David, why would a stable coin based on the dollar not supplant the idea that Bitcoin will be used for frictionless transactions?
So People actually get really confused with stablecoins because they think it's both a digital dollar and a payment network, and it's only the former, it's not the latter. And so the way we see the world is we're very asset agnostic at Lightspark. So you can move fiat currency, you can send dollars to someone in Mexico receiving Mexican peso, or you can move stablecoins on top of Bitcoin. And we think that that is actually the best combination.
Not on top of the dollar.
I mean, no, the stablecoin is a dollar stablecoin, but like a network is actually that allows those stablecoins to settle is actually Bitcoin.
I think we should do a
Make sure you join us tomorrow. Us again? Just us. Just the two of us. You'll be watching me. I'll be watching you. Squawk on the Street is next.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Kingston here with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Pre-markets rallying as a federal trade court blocks the president's reciprocal tariffs in a unanimous decision. NVIDIA is powering ahead on earnings, but futures are off the highs as Q1 GDP consumption is revised lower from 1.8 down to 1.2. Our roadmap begins with that federal trade court striking down Trump's worldwide reciprocal tariffs and ordering the administration to stop collecting them.
NVIDIA's earnings beat is sparking a global chip rally. CEO Jensen Huang speaking with Jim last night about the fallout from China restrictions and, of course, what's ahead for this AI chip giant. And Elon Musk is leaving his government work at Doge, certainly in terms of it being more of a full-time gig, saying his scheduled time has come to an end.
Let's begin with this federal trade court blocking the sweeping tariffs announced by the president in early April. The three-judge panel ruling he did not have the authority to impose them under a decades-old emergency economic powers law. The decision voids tariffs on dozens of countries and the fentanyl-related levies on Canada, Mexico, and China. The court is giving the administration 10 days to implement the ruling, and the White House has already filed plans to appeal. Jim Hassett and Navarro on the tape this morning saying, in Navarro's words, not much has changed.
It is amazing to me how, if you read this, you would say, you know what, the judiciary is secondary and subordinate to the executive branch. And by the way, Wall Street's falling into line. I'm reading 7 different reports from Wall Street. All of them say, listen, nothing's changed. Everything's changed. I mean, unless you feel that this is Andrew Jackson, and we're back in the unfortunate Cherokee ruling, where he said, well, how many divisions does Justice Marshall have? I mean, I don't want it to be that. Obviously, that's a constitutional crisis. David, if this court means nothing, you know that the judiciary is not subordinate to the executive.
Well, there have been a number of instances, of course, in very different policy areas where the administration has been stopped by the courts, but it's unclear, I think, to a certain extent how much it's obeying or not, and that continues to be a question. A broad question, of course, not one we deal with here in terms of our coverage as often.
Yeah, Steve Miller's tweet about how it's a judicial coup.
Yeah, I mean, it's not as though there haven't been any number of questions as to whether you could really say this is an economic emergency, right? Using the International Emergency Economic Powers Act, IEPA, to impose these tariffs. And in fact, it wasn't just in this court. There are any number of other cases, I believe, that are pending as well, based similarly on the concern or the opposition to the use of that particular act, saying, what's an emergency now that wasn't an emergency at different times? Now, that said, there are different tools, and in fact, the Trump administration the first time did not use this act, but used different tools to certainly impose significant tariffs on China, for example, and we could go back down that road, as we all know. Section 122 for the immediate imposition of tariffs is up to 15%. That's just 150 days. You can do Section 301 for the imposition of more durable tariffs. That's country by country. We've talked as well about, what is it, 232, the national security thing.
Yeah,
so
just steal.
There are tools available to them, but again, we'll have to watch and see what happens in the courts. This is being appealed, and I would assume it may end up at the Supreme Court.
Right. Well, the reason why everything's changed, what I'm saying is, Peter Navarro has said the party line, and I think the party line is nothing's changed, and Wall Street says nothing changed. I'm thinking about the people on the other end. I'm thinking if you're a leader of trade in every country. Now you've got this very curious, do I go to the table before they get to the Supreme Court and get a good deal, or do I roll the dice?
Yeah, there's a great piece on the tape quoting a former WTO judge. I don't know why any country would want to engage in negotiations to get out of tariffs that have now been declared illegal.
Right, that's my point. And then you look at these. I think if these countries, they should be looking to make up the Supreme Court and trying to figure out which way Gorsuch is going to go,
right?
Which way Roberts is going to go, because that's what's at stake here. Because if they're going to go toward Trump, you better make a deal right now.
Yeah, I mean, I don't even know when it would get to the court. And, obviously,
I think it'd be fast track, but again, now
it would be. But we get back into the conversation around the unitary executive theory, which has obviously been something that this administration has certainly believed in and is testing the courts on, I think, to some extent.
But I do think that when I look at Wall Street research, I say to myself, well, I'm back in constitutional law class in '81, except for I'm smarter than these guys. I knew that I didn't know. These guys all act like they know.
Which guys are these guys?
They suddenly we've got Lawrence Tribe here. I mean, honestly, can I just say that the knowledge of the Supreme Court is limited right here? I'd say to the Supremes. I mean, I'm talking about like baby love.
I know. Listen, I guess the one thing it does introduce once again is just even more uncertainty. And if we haven't said that word enough, we'll just keep saying it, because when you do talk to companies, in terms of their decision making and their willingness to make long-term plans, they will bring up the uncertainty around tariffs, and this doesn't help. I can't imagine it helps anybody figure out what's coming and what's going to be the new normal.
I agree with you.
All right. Look at that.
I agree with you. Look, I think that when we look at IPOs and we look at transactions, those are the people. Where are all when is Chime coming? When is Goldman going to have a deal? You see Goldman Sachs was down yesterday. They need deals because people said there'll be deals. But why would you do a deal now, not knowing what the tariff's going to be? Look what happened with Elf last night. Elf's numbers were cut down dramatically because they source a huge amount from China.
We're going to get to Best Buy. We're going to get to HP. A lot of cut guidance today.
HP's conference call is a woe is me conference call. Best Buy at least is putting on a good face. But holy cow, we're starting to see the numbers from the guys who can't mitigate.
Right, and you can't
non-mitigators.
The non-mitigators can't move it. got to stick with it, and you're kind of out of luck because the tariff is still quite. I mean, we're still talking 30% from China. Even there, it's sort of again, you're like, what is the? Where are we? We were 145. Now we're at 30, but we could go back up. But
Well, did you read?
but we don't. Do we have a deal or?
NVIDIA,
Right.
it was 4.5 billion, but we thought it was going to be 5.5 billion. We got that wrong, but 2.5 billion might be able to repurpose. And then suddenly, out of nowhere, 50 billion. It's 50 billion, billions. I mean, I read the question. Billions of dollars are at stake, because rather than specify exactly how many, but Jackson did specify how much is on the line here.
Yes.
When he spoke to me last night.
By the way, of course, Jim had Jensen on Mad Money. NVIDIA shares are up sharply in the pre-market this morning on the heels of that quarter. Again, Jim, $8 billion in H20s lost to China. We know that.
What was so stark was that you would think that they could, one, offer some sort of Grace Hopper, the lesser, to them, but he said, no, Jen said, no, that's not possible. And two, you can't repurpose most of the stuff. I mean, it's just kind of a dead weight loss. I happen to think that this is the next leg in NVIDIA has to be sovereign AI or China. If they get both, then the stock goes to 200. I mean, next week, I was just looking at Jensen's travel schedule. I mean, the guy is going next week to London, France, Belgium, Germany. I think that all of those places are going to have, so you're going to see deal after deal after deal, because if you don't, and you get left behind, it's like not having electricity, not having water.
It's a race. It's a global race, and it's another reason why the guardrails that we've talked about are nowhere in sight. In fact, I think part of the big beautiful bill is a 10-year moratorium on the ability of any state to even stop AI or put in AI restrictions. We are in a race. There is a view that we're in a race with the Chinese. Of course, that is something
it's an
that
arms
I know
race.
you spoke to Jensen Wong about. His belief is if you don't let us into that market, then the Chinese are just going to come up with it on their own, and then they're going to potentially be in a position to compete and even dominate other markets around the world.
And well, take a look. Listen to what he said. It's very valuable.
NVIDIA's market share in China was about 95% 4 years ago. It's about 50% today because of the limitations on the products that we sell. But more strategically, more importantly, this is very important. First of all, the China market is, of course, very large, but it's also the home of 50% of the world's AI researchers. The platform that succeeds is the platform with the most developers. Just like iPhone successful because of lots of developers, Windows successful because of lots of developers, all these platforms succeed because there are a lot of developers. China is home to 50% of the AI researchers in the world. And so we want the world to build on American technology stack. We want every developer in the world to prefer the American technology stacks. Once that happens, the developers develop on American technology stacks. American technology stacks will run AI the best all over the world. And so that's probably the most important strategic reason to be in China, because there are so many developers there, and because the world is going to adopt technology from one country or another, and we prefer it to be the American technology stack.
Jim, how do you think that gets received at the White House?
I was thinking about that, and I said after, I said, you just had the president, the commander-in-chief, getting you very good deals over in the Gulf. Obviously, he was instrumental. Don't you think that he will somehow take umbrage to the fact that he just gave you sovereign that Biden would not let you have? Do you really think that you can come in right now and say what would be right would be that you also give us China? I don't know. That's not part of the deal.
No. All of that being said, NVIDIA was still able to put up a number that was in excess of what many analysts who follow the company have. And in fact, even the guidance, even though it may have come below some, it really didn't include necessarily. Many of them had underestimated just how big the hit would be in China.
You're talking about numbers that he's putting up. They're missing billions and billions, and it doesn't matter. And why is that? Because the sheer number of chips that he is selling, and then the demand is just incredible.
Well, but despite the fact that I think back to China, the latest iteration of DeepSeek's model is using even less compute. than the previous one. It just keeps going down in terms of the results they're able to get with less less
DeepSeek this morning
Yeah.
now approaching overall performance, now approaching that of OpenAI 03 and Gemini 2.5.
Well, I think that
With
what
less
Jensen-
compute on
I think what Jensen would say is, look, Blackwell Ultra is a real step function higher. Rubin comes out next year, another step function higher. What he's really saying is it's time to. It's about reasoning. Right now, when you go into the various sites, they don't really reason. They're one-off. Now, the DeepSeek is still giving you one-off. He's talking about reason. And reasoning cannot be done until you get to the next level of NVIDIA. Meaning that you can ask it something now, and it will regurgitate and not be anything really special, or it can tell you who was the lineup in the 27 Yanks. But if you go and you say, can the 27 Yankees beat the current version of the Yankees given this? I think that if you got Blackwell Ultra, I think it would have an answer. And if you get next year's Rubin, I think the answer would be so professional that you would think, wow, it's better than anything I could ever come up with as a human.
Meantime, JPM desk this morning, this felt more like an Apple call than an NVIDIA one. The discussion was meticulously scripted, and the Q&A struck us as less expansive than previous calls. Not surprising given the fresh memory of retribution on display in Cupertino last week.
Wow, I'll tell you, it was I was actually going it over with a famous actor. I said, look at this. This is the way it have to be. This is how it's orchestrated, but it's still not even good enough. But you did have someone who used to be an analyst from Golden who ran the call.
Right. It is interesting that you have to be very careful about exactly what you're saying. I mean, obviously, there are a lot of things at stake for this company, and they do have to, I would assume, make sure not to cross certain lines. I don't know what actor it is that you're speaking to regularly.
To Shia. Do I speak to... What's the matter? I have people outside of the business I talk to.
I'm aware of that.
You talk to everybody. You
Walton
talk to
Goggins, Michael Chiklis.
You know what? I used to be a liberal arts. I was like a humanities guy.
Yeah, I know you were.
I like the opera. I used to go to the opera.
Okay.
All right.
Just
I
happy
like
that you're
Wagner,
talking.
just,
You're happy that you're talking to actors who are weighing in on the theatrical level of.
We're going into whether this call is orchestrated as well as say a Nike call. It used to be perfect, but Jensen's no longer just logging, throwing bombs in.
Right.
He's now in there, and his final comments are the coda correct. But what's still lacking, I think, is an orchestration of here's what we'd be like with China and here's what we would be like without. That's the crux of last night's call. And I think that what you could do if you stepped away is you could say, are we going to go Cold War? They have their nukes and we have our nukes. Or are we going to own the platform of their nukes? And I think we're going to go Cold War.
Yeah, we're already getting senators not happy about the Shanghai R&D facility.
This is
stories
Cold
about
War.
that on the tape this morning.
I mean, I feel like this is you're one step away from the Berlin airlift right now. I mean, while this call's going on, they're stopping the computer-aided design software companies, although Synopsys had not gotten the note when I checked in with Synopsys last night.
But you mean in terms of the FTC action on Ansys Synopsys, that deal?
No,
Sorry.
that's okay. That deal's okay.
Yeah.
No, I'm saying that there was a note about Cadence and Synopsys and what they are stopped, but Synopsys has not gotten the note saying they're stopped. The fluidity with which you're getting, okay, we're not even letting Chinese, we got to revoke Chinese visas.
Well, yeah, student visas, that's a focus. I think Secretary of State is out talking about that.
I'm about to apply for a visa to go to Europe, and I went to Harvard. It looks like I'm knocked out. I kid you not.
No, they filed this morning. I think. Yeah.
I got it. Can I borrow your visa? No, I'm not kidding. I'm not kidding. It's not clear. I went to Harvard. I can't go anywhere. All right, fine. Take that. Tell my wife.
That's a lot of graduates you're talking about conceivably could be affected.
5 years, I got everybody.
And you graduated back in the 40s, so.
He says these things. He says these things. It's like, and then he makes fun that I'm talking to actors. I mean, this is starting to really bug me.
Why?
Because I'm trying to bring. I hear the music, but I'll tell you why. Because if we don't do this stuff, we are going to be replaced. DeepSeek you, me, Blackwell Ultra. Okay?
That is true.
Rubin.
That is true. We are going to be.
We'll see what the viewers have to say about that. Take a look at the pre-market here. We've kind of unwound the rally that we got on the heels of the tariff news. Still hanging on to some gains, though. We'll see what we get at the open in just about 15 minutes.
And make it count.
Watching the chips for sure this morning. There's NVIDIA at the top of the NASDAQ 100 gainer list pre-market, along with Marvell, Broadcom, ARM. A lot of price target increases. TD Cowen goes to 175. NVIDIA company is set to become, once again, the most valuable company, surpassing Microsoft. We'll get Kramer's Mad Dash and the opening bell in just a couple of minutes.
NBC Plus.
All right, let's get to a mad dash here. We've got 7 minutes before we get started with trading on this Thursday. Short week, sometimes kind of forget which day it is. Want to talk a little Starbucks?
Yeah, and I do want to say just during the commercial, we have so much to talk about. It's so strange. It's just a Thursday in late spring, but I guess mid-spring. All right, so this morning, TD Cowen, which is division of TD Securities, downgraded Starbucks by to hold a latte moving pieces. All right, so what it's saying basically is that they're going to miss same-store sales, and the consensus is too high. I will say this about Brian Nickel. Bet against Brian Nickel, and what am I going to send you? An invitation to your funeral.
Right.
Brian Nickel is one of the foremost turnaround artists in the. He turned around Chipotle at the worst, darkest possible moment. He is very confident that the turn is for real, and I think if you want to sell this now, I don't know. Well, you can sell it here and buy it back here.
You put a lot of stock in the power of CEOs to
I sure do.
turn
Bracken
things
Darragh
around.
bought $1 billion worth of
I
VF
can
Corp
think as well
yesterday.
of another turnaround, UNH, and you're very encouraged by the guy they brought back
The
there.
guy's a hitter. That stock doesn't go, but see that stock the way it hugs 300? You don't think he has something up his sleeve?
No, I'm just saying it's interesting
This
because
one's coming up aces.
you believe that they can overcome, even if there are
There's
issues that seemingly are intransigent or
Well, certain
difficult to
turnaround
overcome.
artists. Bracken Darragh turned around Logitech. Now he's doing VF Corp. Just bought $1 million worth of stock. Brian Nickel is a guy who's a seasoned turnaround person who started with infrastructure. See, he started with the idea that we've got to get the coffee in 4 minutes, and now is working backward. I think it's brilliant.
Look at that, right to my support level, baby.
China's done a little better than people realize. What people should say is, you know what, I can't be so good as to sell it at 85 and buy it at 80. We'll talk about Salesforce soon. I think very similar.
Okay. Yeah, we will talk about Salesforce, of course, reporting earnings last night. Mark Benioff was a guest on Mad Money as well. And don't forget, by the way, you can catch us anytime and anywhere by listening to and following the Squawk on the Street Opening Bell podcast.
I'm here.
Opening Bell, 5 minutes from now. Stay with us.
Where's my keys at? That Jimmy, you Jim? I'm here. Oh boy. Oh. Okay, we got less than a minute.
Mr. President, Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
Well, I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number? And I said you have to open up your whole country, and because I gave the
He's not a chicken,
Union a 50%
bitch.
tax.
How dare you?
Exactly. I can invest and trade on my own.
Yes, and I for me too.
Let's move on, shall we? No can do.
No can do.
Get
And
out here.
how dare you? So we got less than a minute. Whoa. Now that's less than a minute. I don't think you get much less. Woo! Well, yesterday I read the market wrong. I'm going to show you a trick here in a second after I get my first beach trade in. Unbelievable, that's what you are. And mind the video, don't go far. Damn. $135s. Woo! Aren't they cheap now? God. Glad I only got one. That kind of sucked. Okay, here's your 3 black crows right at open. Just so all 5 of them. Today's the 29th, and I'm looking at the 594 calls. 3 black crows, right at 103. It's dead. This time I'll get in and out of these suckers. Oh shit! Don't start in on me. $103 to $115. 118, 120, okay. Thank you very much. $103 to 120, and I'm off to the beach. Off to the beach, where all the women are in reach. I'll give myself an A+. The famous 3 black crows with 2 hammers with a tweezer bottom. Does that make any sense to you? Someone say yes. Three black crows with a tweezer bottom, baby, yeah. Jim, was that 3 black crows with a tweezer bottom? Yes. Do you think I can make that bigger? I'm going to show you a trick here in a second. 3 black crows with a tweezer bottom. What do you think about that, magnificent? Now we're retesting. Okay. Magnificent's still in awe. He says, I can't believe that. How'd he get away with that? They don't call me the comeback kid for nothing, you know what I'm saying, man?
Next, and you might see this more of a flight to quality type of trade rather than treasuries, given the other headwinds.
I got a AAA plus.
Yeah, understood. All right. Well, last but not least here, we're looking at the treasury markets. We're looking at the VIX. Can you touch on those?
Yeah, for the treasury market, if you're looking at the 10-year 3-month spread, especially after what we've seen over the last 24 hours or so, you are seeing the 10-year 3-month spread actually moving lower here. That's not really.
Now, let me explain the 3 black whores. Now we're pulling back to support. So maybe I just might want to try this again. Now this is where I got stuck yesterday. And I should have took in consideration Pow Day and NVIDIA earnings. And everybody was talking bearish, and then it ended up being bullish. So you can't believe the fat cats. They had me convinced. And I'm usually very bullish on NVIDIA. But after Trump came out with that no chips to China, I got very bearish on it all of a sudden, and I won. I should have sold all my puts because they went up really good. But you seen what happened after hours. So 3 black crows is a bearish signal. Now, a lot of people will tell you that that's a bear trade. I mean, to me, it's an opportunity in almost any time frame. But, you know, it could pull back more. It could consolidate after the 3rd crow, have a little bounce, and then pull back again. But I've always found it, sometimes they lead out with 3 white soldiers, which I think is totally racist. Because all soldiers ain't white. They got Chinese soldiers, they got Mexican soldiers, they got black soldiers, they got Muslim soldiers. They got albino soldiers. They got transsexual soldiers. So we have snake breakout, pullback, high or low, boom. Now we broke the 9, so I had my chance. And they probably got down to $1. Ladies and gentlemen, I've took off my shoes. Man, does it stink in here. What about my shoes being off? That it stinks in here? That's a real good point. So, you see, I hesitated. I didn't want to jump in it yet because that's where I got stuck yesterday and it cost me. I'm going to go turn my water on and look at, oh, she got her sexy legs out today. Whoa!
Tariff environments and the uncertainty around that. The CEO talked about that, but it sounds like the expectation is that they can mitigate this risk and that there are.
Good morning, Johnny.
The CEO saying, quote,
"You used to be my best friend."
Tariffs creates risk and opportunities for our business. We have many advantages that traditional retailers do not have. We can move more rapidly and more flexibly. And he knows that the next months could be challenging, but if we navigate them well, they could come out ahead. So that, again, Nicole, reminds me of what we see when we when we talk about TJX, for instance. They do have that ability to be more nimble and to make shifts when it comes to their inventory.
And it's amazing because some are talking more about tariffs, some are talking more about just strategy overall. American Eagle Outfitters, for example, basically, I'm paraphrasing, but saying we got it wrong. They didn't do particularly well. Abercrombie was good news. Urban Outfitters was good news. Dick's had some bright spots in there. I mean, they made that Nike acquisition. So it's a case by case. Which ones are exposed to the tariffs?
Diane?
And is his strategy on point?
right? Yeah, and can your strategy mitigate the risks and the impact of tariffs? And again, it just goes to show
God,
that
shut
this
up.
is the kind of climate. It reminds me of, it's obviously we've made this quick recovery, but at the beginning of that downward pressure that we saw and worries about the consumer reminded me of that period of time around the GFC, right? And that's where you started to see the advantage being gained by the discount retail.
I don't know why they didn't worry about the consumer when inflation was up 21 to 40%. All of a sudden they're worried about the consumer. It's hogwash. Complete hogwash. My chicken went from $14 for a 5 chicken breast halves to $32 for a couple of years.
Revenue was slightly ahead of estimates at just above 13.2 billion, but it wasn't just about missing on EPS. Their guidance is disappointing.
Okay, we're pulling back.
They're forecasting for Q3 a range of between 68 to 80 cents. Street's looking for 90 cents. They also lowered their full year guidance to between 3 to 330. That's
God darn, look what I did. I was looking at the SPY and I traded the SPX.
For the Trump administration, driven costs higher. It's weighing on guidance. They said they're working to offset the impact, but they're trying to shift their supply chain. They've been trying to expand production in Vietnam, Thailand, India, and Mexico. But again, they're trying to shift all of the North American products out of China by the end of June. So they have a lot of exposure.
I'm off to a good start.
So again, you're seeing major pressure, even as we're speaking, down even more right now, down more than 8%.
Okay, we just hit my third support
What's going on with C3AI?
on the /ES. I charted this up this morning. We just now hit the third support, so we got to see if this holds. It's a major support level. 59, 33, 34. And I'm going to the SPX. I can't believe I did that. Oh, I traded the SPY. Never mind. What the hell was I thinking? I think I'm ready for the loony farm. I really do. I think I'm ready for the loony farm. Okay. So I got the 5950s. We had another big bounce up. So I'm going to show you a trick. Take your Fibonacci. Let's clean this up. Although I should leave these on here. What to do? So go to your Fibonacci. Go to the top of your Fibonacci to the bottom. Right there's a support level. And we pulled back to the first support level at 59.1964. See that? Your Fibonacci from the breakout to the bottom of the breakout. I like to wait for 50% pullback, but that first support could do it. It's called a 38.2% pullback from the breakout point. And we could see it, and we got a confirmation right here off this previous high. So you want to draw that across. So there's two reasons why that's a good spot. Come on, you stupid moron. I know I hit that. It's too much delays, Jim. The previous high. And we hit it twice. So this would be the third time. Washboardjim's getting ready to buy a call. $7.40. Now this might be a little risky. Or $7.20. $7.10. And the 50% one right here. We're going to take it at 50. If this thing pulls back to 55, 59, 12, 36, could start a position right here. Okay, the crowd's going wild at the sports arena. $6.10. May 59.50s at $6.10. There it is, $100. Another beach trade. So that's 2 lessons today, free of charge. Now it's $8. So you want to take the SPY. God. $8.40. 850, 860. That was a good discount. So let's take a little lesson here. Boom, 3 white soldiers out of the trade. If you're in that trade, oh, these went to 930. I just left. Fudge. That was uncool. That should have never happened. And today she's got her cleavage covered, so that's probably why I did good. Can I talk to Schwab, please? Yeah. You know that girl that's on the show right now? She's not showing her cleavage, and I had 2 good trades. Yes. So let's keep it that way. Bye-bye. Peppolini. Oh, that's some good news there. Sue's on top of things. I think she'd be fun to trade with. La la dee da. SPY had a nice reversal to the 63.
Do well, and you get to a fair share price one of two ways. Either you do really well and the market buys your shares, or you just cannibalize the shares yourself as the company. There's really no other alternatives. And so as long as Ulta maintains its cash reserves, continues to expand upon their Ulta Beauty Unleashed, I think the earnings are going to come in and the stock price is going to go up.
Yeah, understood. I mean, when you think about the big picture, do we have waning consumer sentiment, or is it just volatile? You said people they're willing to spend, and you don't even think makeup is that discretionary. You're almost putting it into somewhat of a necessity. Is that where it is? I mean, people will be spending?
Yeah, I think so. And, it's just human beings are wired that way. We want to look good and we want to be perceived in a very nice way. We want to be liked. And a part of that is looking and feeling our best.
Some Americans don't want to be liked.
Ulta doesn't sell beauty products, but they sell beauty. And
Who is this guy? I want to be liked, but nobody likes me. Ain't that right, Angel? I want to be liked.
Decades ago, one of the things he looked at was, well, See's has great pricing power, and he could increase the price of all of the chocolate per pound. And as soon as he did that, all of that extra revenue just falls to the bottom line. And I think a lot of these beauty retailers could do the same thing. I think they could raise the price of their products, and all of that revenue is going to fall to the bottom line. And I think that will surprise the market ultimately, when you look out, 1, 2, 3, 5 years out in the future.
Even Estee Lauder is making its way back this month, 1 month up about 16%. Do you think that, you've had the court ruling pertaining to the tariffs and blocking many of the tariffs that the Trump administration has put into place. Do you think that will help this group? Which name in particular?
Yeah, absolutely. The companies that are most affected by tariffs are the actual manufacturers, the companies that are making the actual product and then distributing them. You have to remember, Ulta's a retailer, and so when you...
We got a Head and Shoulders set up?
Yes, the products that are in the stores, those
Head and Shoulders set up?
have to raise prices, and then Ulta will ultimately have to do the same
SPY?
to the consumer. But there's a little bit of a buffer and barrier there where Ulta can absorb some of those margins.
We're going to move these calls up
Estee Lauder
to 593.
Anytime you've got those companies that are producing products, those are going to get hit the hardest from tariffs from a margin perspective. The retailers will also get hit, but not as much because they're a little bit more insulated.
Prepare ye in the name of the Lord.
Balances and cash reserves on the balance sheet, they can actually
I
withstand
wanna
that
be
storm,
liked.
a little bit more. But you're right in that the fact that we have a little bit of a reprieve, with the
Spy calls.
tariffs being blocked by court order.
Trade number
that
3.
might be a big boost and a big catalyst down the line if that's upheld.
Okay, Raoul Shaw, CEO, Doc Shaw Financial. Thank you so much. Good to see you. And we'll keep our eyes here on Ulta because now we're going to have an example trade as well. Alex Coffey, host of Next Gen Investing, joins us. And I was just saying how these stocks are really bouncing back. What was an example trade here for Ulta?
Yeah, similar example trades for both these names, but of course we got an event to worry about with Ulta, and we just got through that event for ELF, so a couple different time frames. But nonetheless, neutral to bullish
98 to
strategies.
112.
Looking for potentially sideways to higher in both these names, as your guest talked about. Selling a put vertical below the market. In the case of Ulta, just going out to next week's expiration, that's June 6th. And selling the 400 $395 put vertical for $1.65. That $1.65 is pretty close to 1/3 the width of the strikes, so creates a 2-to-1 risk reward, which is sort of in that ballpark of what we use for a loose guideline when structuring this style of strategy. You can make $165 as the max possible profit. That takes place if these options expire worthless, which is most likely to happen if the stock is above the short strike, in this case 400 at expiration at the end of next week. It does take risk to the downside. That risk is capped out below $395 and it's limited to $335. Break even would be $398.35. So you got a little bit of cushion, but we know we got that event that can move the stock.
Yeah.
Right, understood. And then what about ELF, Eyes, Lips, Face? This name, I couldn't believe it when I was just talking to Raoul Shaw. When I said it was up 85%, I mean, you blink and these stocks are
Nicole,
moving
I love you.
The example trade here for ELF.
Yeah, big acquisition announced as well yesterday. Initial reaction was lower, but the stock turning around now. With that, similar style strategy, selling a put vertical below the market, but giving it a little bit more time. We're just through that event, and so now that we're through it, we don't have to worry about that
What the heck?
earnings announcement.
What is this?
Quarter, absent any sort of surprise early preliminary results that were coming.
Well, that's
from
a
the
bunch
company.
of
So
shit.
neutral to bullish strategy. In this case, the 110-105 put vertical in the June 20th expiration. That's the June monthly cycle. Looking to collect again $1.65, about 1/3 the width of the strikes. Can make $165 on $335 in risk. Break even would be $108.35. So very similar style of strategy here, similar pricing and risk profiles for two companies that both operate in this cosmetic space.
Yeah, Alex Coffey, great to see you. Thank you so much. Good luck there. Those example trades there on Ulta and ELF. Thank you. Coming up next is the morning trade, and we'll preview Costco earnings. So those are due out. We have the retailers report coming. We want to get into that. Details, groceries, and so much more. Next on Morning Trade Live.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Whether you're a bull or a bear,
We are now
you
at
want to get
108.
the latest market action on Morning
110.
Rumors with me, Diane King Hall, live from
112.
the New York Stock Exchange, only on Schwab Net.
I would make a business decision unless we squeeze between the 9 and the 21. The crowd's going wild here at the sports arena. Right now we're at 104. If this doesn't hold, I'm going to stop out because I didn't sell it. 97. Double bottom. 3 black crows. What's NVIDIA doing? Did NVIDIA puts working? SPX is hitting my third support. 50% pullback right here. Watch this one here. SPX. The 5950s. $4.80. Oh. Some more risk. $4.10. Same thing yesterday. Don't tell me it's going to come down to a double bottom. I don't want that. Okay. $3.80. Just like yesterday. U.S. pending home sales month for month, April minus 6.3 versus minus 9. Well, that's a huge difference right there. 0.9. Estimated positive 5.5. That's not good. Like, I'll be right back. I'm gonna get my water going. I'm gonna check my blood pressure too. I haven't checked in a couple days. I don't think I checked it all weekend. Last time I checked it was on the 23rd. Jeez, 6 days ago. Well, I'm in a bad trade. Let's see what I got here. Just have a rebound. Should have grabbed a couple at 380. Ooh, that don't look good. 79 over 76. I felt a little pale there. Okay, I'm going to grab another one here. 2 more of them. $3.80. There we go. Right there. Two at 360. You got a megaphone. Dang, 94 over 90. That ain't good. I'll be right back. We'll wait here until this here. In case a lot of you don't know, I have epilepsy. Back at 4. I see a breakout here. That's kind of low. I might have to go work out. I took another blood pressure pill last night. I gotta put a new battery in this. They're at 430. 100 over what? 32? That's got to be fucking nuts. I'm going to put new batteries in this thing in a second. I'll get out of this trade. $4.30 right there. I'm at $4. There's $4.40. So right here. Thank you very much. There's Chris. Well, let's put new batteries in this thing. Just have to have 4 of them. Always clean janitorial. Can't you see I'm measuring my blood pressure right now and I don't need to be bothered? Who in the hell is this? How dare you? Back down again, get ready. One of them days, 290. Not a very good day today. Market is not happy. $275. Let's look at the /ES here. We got a double bottom coming up. Head and shoulders on the 3-minute. God, this blood pressure's low, 97/92 with new batteries. Feel a little dizzy. Might go get something to eat. Oh, that's right. If I start to faint, be sure to call 911. 92/86. Well, that's 5 in a row. Let me get up for a second. It's funny. Is anybody stuck in a trade right now? Anybody stuck in a trade right now? I guess not. Magnificent, will you give me mouth to mouth, please? I don't have a cigarette. I'll be right back. I don't like my blood pressure being slow.
Schwab Network. Welcome back to Morning Trade Live. We focus on the ETF space. Folks are loving what they can do with the ETFs. Joining me right now, Robert Hum, U.S. Head of Factor and Outcome ETFs at BlackRock. So, Bob, tell us some of the ETF trends that we're seeing.
Yeah, sure. And Nicole, thank you for having me today. So I think one of the biggest trends that we're seeing in the market today is the growth of outcome ETFs or options-based strategies. Now, what we've seen is them grow from about $5 billion to $180 billion today, and we think they're going to grow to over $650 billion by 2030. So what are outcome ETFs? They're really just strategies that are trying to deliver permanence and definition, specific outcomes, whether that's growth, income, or protection in a portfolio utilizing options. And so we think, given the market dynamics and the volatility that we're seeing today, along with the aging demographics in the U.S., those types of strategies are really becoming popular with our investors.
Say that the outcome ETFs could triple to $650 billion in a short time by the year 2030.
Bounced up a little bit.
What people are really looking for? Explain more about the growth, income, these option and outcome ETFs, why they're so popular here.
Yeah, sure. So I think there's really two reasons why we're seeing investors really gravitate to their strategies. One, it's around the demographics that I mentioned. So if we think about a decumulation phase for some of the aging population, people that are in retirement, what are they really looking for? It's ways to protect their wealth. So think about buffer strategy that can protect on the downside, or they're looking for new sources of income. Think about covered call strategies. And we think that trend will continue, especially, as I mentioned earlier, the volatility that we've seen in the market. The second trend is really more about the access to these unique vehicles. Right? These strategies weren't around 5-10 years ago in the ETF wrapper. And so the innovation of bringing these strategies in a tax-efficient, unique structure like the ETF, we think it gives investors more ability to make choices within their portfolios, and we're seeing that today, whether it's wanting to protect on the downside in this market through buffer ETFs, or as I mentioned earlier, looking for added sources of income through covered calls.
Yeah, I mean, and you have some of these ETFs that you've brought to us today. We're showing Max J, S Max, D Max, M Max. These ones in particular are based on what mostly?
Yeah, sure. So if you think about a max buffer ETF, what we're trying to deliver is a certain set of return, an upside cap, with 100% protection on the downside for a 1 year period. So take Max J as an example. When we launched that product in June of last year, if you held it for a 1 year period, it would have that 100% protection with up to 10% return, depending on the S&P 500. And so what I think is really unique about these products and why they've garnered so much interest is think about the investors that have been sitting in cash, right? Not only are they potentially not getting as high of a return they were a year ago, but also there's some tax implications of holding that cash or T-bills. And so we're seeing a lot of investors think about how do we step out of cash? How do we get equity allocation, but not have the full downside of the market that people are worried about, especially given the volatility that we've seen this year. And so these products have grown to over 300 million in just over a year across the suite. And we think, especially with upcoming uncertainty, I think a lot of investors are looking at these vehicles more and more.
Yeah, and then what about the iShares Advantage Large Cap Income ETF BALI? Why is this one of the large caps? People love to look at that, right, and get involved.
Absolutely. So BALI, or BALI, is our Advantage Large Cap Income, is a covered call strategy. Now, these have been extremely popular in the market today. Covered calls make up over $120 billion in assets. But when you think about a covered call, it's important to note that you're giving away some of the upside to generate income in a portfolio. And what makes BALI so unique is that it's an actively managed strategy that's actually trying to generate more upside than traditional covered calls with an 8 to 10% income threshold. So think about it as buying the large cap US exposure, but getting 8% yield on top of that. And so in a year like 2024, when we see the market rallying and a lot of covered calls underperforming because they are giving up the upside for the income, BALI was able to keep up with the market, up over 20% last year. So a really unique strategy and a popular area because of its ability to generate upside potential as well as that income that clients are looking for.
And then USMV, I mean, people are looking at also volatility, some of the action there.
Yeah, sure. So our US minimum volatility USMV, it's been around actually since 2011. So this isn't a new strategy. It's one that investors have been using really for over a decade now to reduce risk in a portfolio. And what those strategies are trying to do is generate market-like returns with about 15 to 20% less risk. And so when the market was down 15% this year, that strategy was down about 3.5%. And over the long run, you look over the last 10 years, it's generated over 12% annualized returns. So it's really trying to give you market participation, typically around 70 to 80%, but really protect on the downside where it's delivering about 50 to 60% of the downside. So it's a great way for those investors that want to stay invested in equities, maybe want more upside participation.
So we had a hammer, 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 hammer. Hammer, hammer, hammer. This here's almost like a long-legged doji. Or almost a dragonfly, but it's a hammer. Hammer, 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 hammer. And then I don't know what they call that. So now you're hitting the 50. So this would be a good exit idea.
The board off the earlier highs, but still with green, and that's been the tone for this month of May. And we're still in earnings season. We have Chartmaster now for you, and Jenny Horn taking us through the fundamentals. Rick Ducat will take us through the technicals, and we're looking at 3 key names that are reporting. I believe each of these names are after the bell. So we'll start with Marvell, and we've seen some of these tech-related stocks doing well lately, not Hewlett-Packard. But most of the tech stocks have been doing well lately. Marvell results due out after the bell. Some of the chatter.
Jimmy's going to go cook a hamburger.
It's difficult to gauge like what bucket they will fall in, because Marvell does have its hand in some similar businesses.
Ooh, God darn.
HP,
What one are you in?
Time also has made some serious developments over the course of the quarter. I mean, some major partnerships, including that with Amazon as well as NVIDIA. So they have been busy this quarter. Right now, we are expecting, I mean, their hyperscaler customer being, of course, Amazon, to start at least expecting some ramp up in their data center sales as high volume production is expected to set its course. Now, right now, only according to Gartner research, only about 42% of enterprises have adopted some form of AI within the workplace, with another about 40% still experimenting. And I find this so interesting when it comes to all of these companies, really growth potential still in AI. So the growth rate alone is, I think, a reason to be enthusiastic about the investment and the overall thesis of AI, but then how Marvell is able to really depict this is going to be hugely important. We are slightly lower today with some of the choppiness we're seeing in tech, but again, I mentioned that they announced a partnership with NVIDIA back in earlier in May. They also did early in April announce that they had a pending sale of the automotive Ethernet business to Infineon for about $2.5 billion in cash. So this right now sales intended to help their overall operations. The overall organization is again heavily focused on its data center portfolio, which accounted for about 72% of their revenue just in the last fiscal year. Also, though, the automotive business is being sold, and that's being read also as a positive because that's been a weak spot on the company. So as we know, the automotive reach as far as these tech and AI companies has been disappointing now for several straight quarters. Hopefully that's a headwind in the rearview mirror. But again, I think it's all about guidance and how you're able to frame your balance sheet and your cost controls as we still have volatility with pricing and tariffs and trade. It will be interesting to see how they frame that, because right now it does seem like if you're able to put up good numbers, it does definitely help, but it's all about guidance, Nicole.
Yeah, without a doubt. And the last earnings report, I mean, this stock is a choppy one after hitting the 127 high. We saw a few gaps down, but in the last earnings report, Rick, we saw that on the chart. You'll see that leg down. Let's take a look at the chart, the technicals, please, Rick Ducat.
Yes, the 127 level that you were highlighting comes in up here. That's our 52-week highs. And then we have seen a severe decline since that point here, basically straight down into the lows near 47. So a shape that's somewhat common among tech stocks lately here in this news-driven environment here. But what stands out...
Three black crows right here, 320.
Symmetrical triangle type shape starting to take place after we did establish those lows. You can see we have our two white trend lines converging toward each other, one starting with the highs after our gap down on earnings, and also another one starting with our lows, the 52-week lows on the tariff news. For now, though, it's looking like we are holding on above our yellow 21-day exponential moving average and a small gap that formed a few days ago near 61.30. However, so far, an attempt at breaking out above our triangle, our trend line, and pushing above the orange 63-day exponential moving average, that comes in near about 67.40 or so. That has been rejected. So now, if we were to look at our other studies here, volume profile and standard deviation channels, we can see that the volume profile point of control is right here, matching up with an old range-bound area near about 72.26. This red line is also where the volume starts to drop off. That represents the old highs from that range. So that would be one key upside point to watch. To the downside, our old lows, 53.19, August 5th, matched up with a lot of the chop where prices closed down here. So a break below 53 would be also noteworthy.
Right, understood. Okay, so we'll have to wait and see what they deliver to us, as you noted, Jenny, too. Thank you both for that. And then there's Dell. I mean, we talked about Hewlett-Packard being under pressure. Dell's under pressure. In fact, those shares are down more than 30% over 12 months. So what do you think could be standing out or important talking points for this quarter? Jenny?
So I think, unfortunately, for Dell, if you look at, I mean, you mentioned the wild price swings we've seen in this name. I think, unfortunately, for them, they are so tied to everything macro right now, where we've seen these significant trade downs on news that isn't even necessarily going to directly impact a name like Dell, like post-liberation move, for example. So this now is actually being seen as a name that's perhaps too cheap to ignore, just given its valuation. But the stock has rebounded sharply from lows yet again, does remain attractively valued at about 10 times its forward earnings, as well as, again, if you are a believer in AI, this name still has so much potential there. So again, it's been a wild couple of months, especially considering the stock did decrease by about 65% from its high of around $180 last summer to just about $60 during the height of that early April panic. Now, in hopefully a continuous appreciation process, the stock does still remain relatively cheap, even given its historical levels. So that's one reason I do think that this report will be interesting. But I also think that when you consider AI, you don't necessarily first and foremost think of a name like Dell. And while yes, there is still huge data storage potential in this name, they've been making investments to really reshape hugely their business model. This is still a legacy PC maker, and for that reason, I do tend to compare them to an HPQ and say, hey, I mean, some of these pressures that have weighed on the PC market, as well as names like Best Buy that also saw a sell-off after its earnings, it just never came to fruition the way the market had been expecting. All these names were trading up on what was expected to be this massive refresh cycle or the super cycle, but that hasn't come to play out nearly at all. So I will be curious to know the read-through and what that means actually for Dell, because, well, yes, there is definitely enthusiasm tied to everything forward-looking in regards to AI and data center. I still think that this is a company that does have that exposure to more of the hardware, personal device side of things, Nicole.
Yeah, I'm sort of torn on the Dell story because, folks are expecting some weaker guidance, but they did have some good news pertaining to their partnership with NVIDIA, as you were mentioning, all the different things that they're providing. It involves supplying racks, cooling, storage, mounted. And so Dell says that they've seen the demand, and that has helped to lift at least that one part of the guidance on NVIDIA's momentum of the early Blackwell chip shipments. So I don't know, I'm sort of torn on what we may or may not see from Dell. How about, Rick, you take a look at the technicals for us?
Yes, that's
We're
always
310 now.
Where are we going to go from here? But for now, it seems like we are.
I gotta go turn down my burner.
Very mildly sloping downward trend line that began with.
We got to hold this 200
from 2 quarters ago. But really, kind of like our last chart, it's a breakout that is failing so far. We have retreated back to test this old measure of resistance, which is now supportive. It also happens to coincide with an upward trend line, beginning with our 52-week lows that came in here just above 66. So now we are at a confluence of these two trend lines here. So either one could come back into play in pretty quick succession here. So it may be important to keep an eye on these trend lines going forward here. To the upside, though, the target seems like it could be near the 130 area for many traders here. The reason is because it's the high point that we saw after our gap down. It also was a previous low, high, and high once again there. So it's one of these key price levels that keeps coming back into prominence here. But along the way, perhaps some resistance at these old highs around the 120 level. To the downside, we have our 3 moving averages that we follow: yellow 21-day, orange 63-day, and purple 252-day, all clustered together. The longer term ones are more sideways. The shorter term 21-day is starting to overtake the longer term peers, so that suggests the trend is improving. So keep an eye out for that here. We did see a little bit of bearish divergence on the RSI, not really uncommon as we head into earnings. So if we were to keep moving to the upside, there's a volume node right around here that comes in around 135. That's just above our 130 price level that we highlighted. Where we are right now, once again, seems quite important. It's our +1 standard deviation channel lining up with our volume profile point of control. So a measure of resistance plus a heavy trading area that represents kind of a
come on, you
point
bitch.
Too. And then to the downside, our green line represents a gap near about 98 and additional a volume node there.
All right, and thank you for that, Rick. And then last but not least, let's take a look in the world of cybersecurity, Zscaler. The next name to report from the group. What should we be watching for, Jenny?
Well, interesting that this name is actually our best performer of the group, and by a sizable amount, as you can see from the
come on now.
chart, as we're up about 36% on the year, another 10.5% on the month. We actually were performing a bit better, of course, until we saw today some of that weakness, but about 50% from highs, while also remaining off lows by about 4% off highs, 63% off of those lows. But the all-time high in this name we are not close to, which does still remain around 376 a share, which is interesting when you zoom out and look at the 5-year weekly. I think you can see that illustrated pretty well. But as far as this quarter, we are expecting now revenue to grow about 20% year over year to 667 million roughly. That would be slowing from the 32% increase they did record in the same period a year ago. On adjusted earnings expected at around 76 cents a share. And you mentioned the latest name to report in the cybersecurity world. We've seen a fairly strong
We'll go in the kitchen and make a salad here in a second.
We haven't seen price necessarily match. Like Palo Alto Networks, for example, delivered on its
Put an egg
year-over-year
on it.
growth. of 15%. It beat expectations modestly, yet traded down
I had
about
a
7% following that report.
fried an egg the other day in my
it's been
waffle
a bit of a
maker.
choppy environment for how to gauge how
Turned
the
out pretty
street is
good.
reacting to these numbers. There
So I'm gonna
has been
fry another
definitely
one.
positive momentum in cybersecurity, the entire sector as a whole, climbing about 8.5% over the last month, with Zscaler actually slightly performing the group. So they have looked strong, but there's no real clear market leader in cybersecurity. I always find it fascinating the way, I believe it's Palo Alto Networks that has the leading market share with about 10%. So it's a very, right now, cutthroat and competitive space. All these companies are undergoing massive strategy shifts to prepare for AI, but as we know, that does weigh on costs, it weighs on profitability, as profitability is expected to contract pretty substantially for this name on a year-over-year basis. So again, I will be curious because it has not been the clear, like, beat and raise leads to a move to the upside in cybersecurity stocks. It's been a bit more murky, despite the fact that we've seen pretty strong fundamentals from, I mean, its closest competition. So where Zscaler falls will be a good question, I think.
Right, understood. Okay. Look, and that will really set the tone there. And the shares are up more than 45% over the last 12 months. Let's take a look at the chart, please, Rick. What are you seeing?
Yeah, pretty range bound for much of the past 52 weeks here. And really the big climb that we saw was starting with our tariff news related low point here. So from there, we broke above this rather persistent resistance level that comes in near 210.
Let's go.
And have, continued to advance from there. Moving averages diverging farther and farther apart from each other, which suggests the trend is continuing to improve. We are backing off a little bit after
We're at 350 again.
Near 250.
I don't know if I put this in the room or
really
not.
A significant breakdown or anything like that. The area right here in the short term near about
If
240.
Canada becomes America,
246. That would be noteworthy if we were to cross below, but then it comes to this area near 236 that represents the highs and then the subsequent low from that range-bound area. RSI, much like our last stock, showing a bit of a slowdown here, but really that's fairly typical as you head into an event risk situation like earnings. So we can see now that price is also at a rather extreme level according to our standard deviation channel study. We have our linear regression line, our line of best fit. 2 standard deviations to the upside is roughly where price topped out recently, about 258. So that could be one area to watch here as well. If we were to move lower, around 234 or so, that's where we would see a volume node develop here. And also to take a glance at our 5-year chart to help contextualize the move here. A big drop off here. You could have drawn this longer term.
ZS, I don't even know what that is. Right now we're in the 5950s at 320, and we want to get it to the orb at 592108. And I'm going to try to get out of this trade. I'm going to have lunch. And I'm going to fry an egg in my waffle maker. $3.60. Hello, this is the FBI.
Hi, it's Mike Borley.
This is the FBI. May I help you? This is the FBI. May I help you?
Exchange Michael McCurr, Director, Schwab Advisor Services.
Hello, this is the FBI. May I help you? Are you an illegal immigrant calling me? Caroline, I love you. You want to go to Punta Cana with me? I've got the perfect resort. Did I ever tell you that you look like Bewitch? Samantha? Break it. 59, 15, 46 has to break. That's the top of the first crow. God, this thing, man. I can't take it. As long as we hold the 9. $390. $4. After I get out of this trade, I'm tempted to hold them, but I don't know about this market. We are starting the reversal offer early today, which is a good sign. They're now at $4. You can make a business decision if you're in this trade. Why am I getting no sound here? Huh.
A little bit of a fade if we get additional headlines.
No fade.
Throughout the day and through tomorrow.
Right. Well, thank you both so much, Caroline Woods and Mike McCurr. Great to see you both. And right now, we are still holding on to some gains. The S&P is up 27 points. The S&P is gaining, and so are the Dow Jones Industrial Average, up 38 points. Thanks for being with me here on Morning Trade Live on Schwab Network, live at the New York Stock Exchange. And
there we go.
Next, Trading 360 with Diane.
$4.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Just hit the orb.
Hey, Dad.
Dad.
Question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all.
Dad.
Grab your coffee and tune in every
How come
trading
Grandpa
day,
doesn't
8
sleep
a.m.
with me
Eastern
anymore?
Time on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
A+.
Good morning, everyone. We are about 90 minutes into the trading day on Wall Street. Welcome to Trading 360. I'm Diane King Hall, live from the floor of the New York Stock Exchange. We've still got green on the board as investors process the latest on the tariffs front. Let's start out with a roadmap. Coming up on today's show, for our 360 Spotlight, we'll cover the latest for Bitcoin amid the 2025 Bitcoin conference and what regulatory clarity and legislation could mean for the cryptocurrency industry. The disruptor today is C3 AI as the stock is rallying after its latest earnings report, after its latest quarterly report, I should say, an extension of its deal with Baker Hughes. And for our 360 round, we'll bring in our panel to cover Salesforce. It beat earnings estimates and boosted its guidance for the full year. All right, let's wind down and take a quick check on where markets stand at this hour. You are looking at the S&P 500 holding on to a gain of 0.5% there. Among the sectors leading, you got information technology. Give a lot of credit to NVIDIA today. Shares continuing to push higher off the latest numbers. Consumer discretionary's got some gains. Real estate, healthcare. On the laggard sides, you've got weakness in consumer staples and communication services. Tempering the gains that we're seeing. The gains overall in the market being led by the tech sector, hence the NASDAQ 100 leading right now, up more than 0.5%. We are off the highs of the session. We'll see if we reclaim those throughout the day. Dow holding on to a slim advance, better by just shy of 0.5% there. Russell small caps higher by a little bit more than 0.1%. Let's take a look at some of the other asset classes that we are watching today. Again, as investors try to make heads or tails of the latest with regard to tariff policy, with the Federal Trade Court blocking the bulk of global tariffs from the Trump administration, ruling that they were legally imposed. The court saying that President Trump misused the national emergency law to justify sweeping levies on global imports. This is expected to be a back and forth as the White House is expected to appeal. You're looking at the yield on the 10-year Treasury off by 2 basis points. Dollar a little lower today, off by less than 0.5%. Gold slightly higher at the moment. Investors, again, just trying to read the tea leaves of what's next on the tariff front. Crude oil lower by 1%. This West Texas Intermediate below $62 a barrel here. You got Bitcoin advancing. It's higher by 0.5% above 107,000. For a look at one of the top moving stocks in today's market, I'm joined by Alex Coffey, Senior Equities Contributor here on Schwab Network. All right, NVIDIA returning to being the belle of the ball. Take us through some of your thoughts on their recent earnings, Alex.
Yeah, if I were to sum it up, noisy but mostly positive, Diane, and the stocks reflect that. When you look at the shares, they've traded in a relatively tight range today as the market's kind of swung around, but stable into the upside here. And again, a $7 move in a stock like NVIDIA, you're really talking about $175-ish billion. So it's important to note just how impactful just a $1 move is in the market cap of NVIDIA. Now we're talking about, a $3+ trillion company. So of course, every billion isn't quite as big relative to that. But what I mean by noisy, I guess, is that there was a pretty steep adjustment and impact from the export restrictions on the H20 chips. It led to what looks like a miss on the surface for EPS, but if you were to take out that kind of H20 charge off, it would have been a beat. Revenue was slightly above estimates, And then also the same applies in a noisy but mostly positive way to the guidance going forward. They had an $8 billion adjustment to their guidance figure, which was just shy of estimates for the street's consensus despite that. And if you were to factor in kind of where things were before H20 exports were really starting to be factored into consensus, it does suggest that the guidance may have been in the range of, maybe $5 billion better than the expected number. So it explains why you do see the stock a little bit higher today, but that doesn't mean that they won't have real impact from those things. And of course, the $8 billion number is a number they're giving themselves. So it does throw a little bit of cold water on things, but all in all, still a really, really powerful quarter. And a surprise in the strength of their gaming segment, which used to be their most important segment, is kind of been lapped by data centers, but a really nice number on that front too.
It is a nice number on that front, especially when you think about some of the challenges that NVIDIA is facing with regard to the export controls on China. So, Alex, I'm curious to see what you're seeing in terms of analyst reaction.
Yeah, mostly positive. I haven't seen a ton of them, but I see an upgrade from Summit Insights. I see a price target hike from Piper Sandler of $30 from $150 to $180. I see UBS saying that the results and guidance were as expected. I see D.A. Davidson adjusting their price target from $120 to $135, and then Rosenblatt, the most bullish of the bunch, from 178 to 200. All in all, analysts still very much in the positive camp. In total, you have nearly 90% of analysts in a buy equivalent rating. And then pretty much the balance is in hold. There is one sell rating, but it hasn't been, it isn't necessarily an analyst that I'm super familiar with. It's Jay Goldberg from Seaport Global. This is a name where basically every analyst has someone covering it. Most of the big shops in the buy camp.
Okay, all right, and so that lines up with what we've been seeing before. But what is interesting to see is the move today higher, because we knew in recent quarters that even when they've beat their expectations, that the stock had fallen under pressure. So looks like it's swinging back to an earlier kind of pattern. All right, thanks. That's our Alex Coffey, senior equities contributor and co-host of Next Gen. Appreciate it, Alex. All right, let's get some insights on the news that's shaping markets beyond NVIDIA. For that, let's welcome in David Traynor, CEO of New Constructs. David, thank you so much for joining us today. Let's talk a little bit about this court ruling that occurred. Essentially, we found out about it last night. This federal trade court blocking the bulk of these global tariffs from the Trump administration, ruling that these were illegally imposed under emergency powers. Court saying that the president misused the national emergency law to justify sweeping levies. There are still obviously tariffs that can continue. What is your thought in terms of the reaction and the ripple effect from this?
Well, I think that clearly the stock market and leaders around the world took the tariffs pretty seriously. And as you mentioned earlier,
I didn't.
This will probably
You
play out
idiot.
in court quite a bit. There will be more back and forth from this. I don't think the story ends with the ruling today. I think it continues, and I think we'll continue to see quite a bit more.
I didn't take it seriously, sir. You people wanted it to pull back on purpose. Why don't you just say it? And then you missed out on the ride. So let's, uh-huh. That's what I thought.
out there still. It's just harder to find when the markets tend to focus on the more popular names, like Nvidia, for example. A great company, great fundamentals, but a super expensive valuation that makes it very risky.
So what do you like that is less risky, I suppose?
It's a good
One of the
question.
things we want to point out is that people that are looking to be risk averse, and we're going to spend a lot of time on this at our firm in the next few weeks, don't need to be careful about what they think about dividend stocks, because there are a lot of bad dividend stocks. You got false dividends, which are companies that are paying high dividends but don't have the cash flow to support them. You've got fake dividend stocks where you got a high dividend, but the stock is so expensive that you're probably going to see more capital loss that would offset and probably more than offset the dividend you're getting. And then you got dividend trap stocks, which are companies that look like they've got good dividends, they've good fundamentals, but the stock's not going to go anywhere because it's already so expensive. And so we think that this defensiveness is it's a difficult world to work in these days, because fundamentals are often obscured by narrative and misleading projections and metrics, and so investors really got to roll up their sleeves if they want to have a safe portfolio these days.
So I know that you like, for instance, Hershey, and you consider that one of the safer dividend plays. It is underperforming the S&P 500 year to date, though. What is it about Hershey that you like?
Two things, right? Great cash flow, great profitability, and a very cheap valuation. You got a stock price implying little to no profit growth, right? On the other hand, the Nvidia at its current rate implies that its revenues are going to be greater than the GDP of Japan in 15 years, assuming the GDP of Japan grows at around 3 or 4% compounded annually over that same time frame. So, Nvidia is priced, beyond perfection because it's a popular stock, and I think it's in some ways a meme stock too. I mean, you got a lot of people that just pile into it because they think it's safe. And don't get me wrong, it's a lot safer than GameStop because it's got real fundamentals, but that doesn't mean it can go up forever. And so I think it's smart for investors to try to position themselves for companies and stocks that have, can give them their cake and let them eat it too, which is good fundamentals and a cheap valuation. So you've got upside remaining, but yet supported with great cash flows.
We've come.
Okay, and you talked
I
about
missed
some
that.
dividend paying companies that you don't like, and you mentioned false dividend stocks. You see,
I'm gonna go eat my
International
lunch.
as one of those. What about that to you that essentially is that you don't want to touch?
Yeah, I mean, look, it's got a 5.8% dividend. It looks great, but free cash flow was negative $1 billion in the last year and about $5 billion in the year before that, right? So at some point, something's got to give. They can't afford to keep paying that dividend with cash flow so negative, and that's what people aren't always looking at. They just think that everything's going to be fine. They see a nice dividend yield, but you got to roll up your sleeves and make sure the cash flows are there, and you can't trust accounting. You can't trust reported accounting earnings. You can't trust the company's earnings because there's just too many loopholes out there. And that's an example of a fake dividend stock in our system, yes.
Okay, so that's one that you would steer clear of. All right, David Traynor, CEO of New Constructs. David, thank you so much for joining us today. We got a lot more to come on Trading 360. Next up, it's the big three stocks, 3 charts, 3 trades. Rick Ducat goes into the technicals, and Dan Dimming takes us through the trades for Oracle, Visa, and Waste Management. That's next on Trading 360 here on Schwab Network.
Do-do-do-do-do. Okay, here we go. Ladies and gentlemen, keep a close eye on the 59.50s here at $2.59, 55 cents. I do want to go in there and have some lunch, but I think I can get away with another one. We're sitting at the 200 SMA. Do you understand? These are the 59.50s at $2.50. Do you hear me? Angel? What a beautiful name. This is the May 29th strike. And it's really getting that time of day where you don't want to play games. Oh. Okay, we can do it. Come on now. Randy. Come on, baby. There we go. What? Come on. $3. This is double bottom off the 200 SMA on the 1 minute. We're now at $3. The crowd's going wild here at the sports arena. $3.20. La 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 la. I'm gonna have me some lunch. God darn, Jim, what have you done? Stocks just don't want to hold today. Mr. bounced up off my support. Time for Jimmy to take lunch.
business, so they like that, and the partnerships allow them to broaden their reach, certainly around the world. So one thing you hear the president say a lot is we have to be the crypto capital of the world, otherwise China will be the crypto capital of the world. Where a lot of business is being done right now through cryptocurrencies, through Bitcoin, a lot of lending, a lot of borrowing, and a lot of transactions are happening around the world across governments and across institutions. I think the Trump family wants to be front and center on that, and that's why you're seeing this big push in the legislation as well.
I'm curious to know if you come across any critics there. I know there's there's at least one skeptic I know of who is attending the conference, but has been, kind of gradually moving over to what I call the agnostic side when it comes to crypto. Are you hearing anything on that front? Or if you aren't, I'm curious to know what you're seeing or hearing in terms of conversations about headwinds facing broader adoption.
I think everyone here is pretty enthusiastic. It's hard to find people who are anti-crypto here. You have people that have been hodlers, as we say, for the past 15 years that have built a fortune in Bitcoin, among other tokens, among other cryptocurrencies. So the critics have been traditionally, it takes too much energy to mine Bitcoin. It takes too many resources to mine it. But here you're going to find solutions. There's a whole pavilion dedicated to clean Bitcoin mining solutions, hash rates that are being reduced into fractions of fractions. So there's a big push towards a clean manufacturing of cryptocurrency, even though it'll never truly be clean because it does require energy, and all the different ways you could plug crypto into a traditional financial services environment that is decentralized, so you don't have big banks leaning on you and you don't have to worry about things like interest rates or the treasury market. You're thinking, when you walk around here, people are willing to take your Bitcoin and give you cash for it as collateral. So it has matured as a lending product. It has matured as a financial services product. And this is the age of cryptocurrency, ready or not, and it is here.
Yeah, no, it's clear to see that. I mean, for even the skeptics who have, come out against it, it's clear that, the government is on board with this, and the industry itself calling for more regulatory clarity and guardrails around it. It's clear that it's becoming more entrenched. So we just need to face it, that it's here to stay. That's Caleb Silver, editor-in-chief of Investopedia. Thank you, Caleb, for bringing us the latest and greatest from the Bitcoin 2025 conference in Las Vegas. Coming up next, the disruptors will cover C3 AI. It's rallying after its latest quarterly results. Kevin Green will bring us an example trade for that AI stock. Trading 360. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Diane King Hall, live from the New York Stock Exchange. For a look at stocks on the move, I want to bring in Caroline Woods, senior markets correspondent here on Schwab Network. All right, we're taking a look at HP.
Caroline
Shares
Woods.
are falling. Take us through what happened here with this latest quarterly report.
Yeah, shares of the PC maker down about 7% today. A few things happened. First of all, it was an earnings miss, so a mixed earnings report. Revenue did beat. They issued downbeat current quarter guidance, so that missed analyst expectations, and then they actually slashed their full year outlook due to what else? Due to tariffs. So HP said the outlook reflects the added cost driven by the current U.S. tariffs and associated mitigations, although did say that while results in the quarter were impacted by a dynamic regulatory environment, we responded quickly to accelerate the expansion of our manufacturing footprint and further reduce our cost structure. So in terms of the actual numbers, adjusted EPS of 71 cents fell short of the 80 cents per share that analysts were looking for. Revenue came in at $13.22 billion. That was about a 3% increase from the previous year and also came in higher than what analysts were looking for. In terms of that cut full year outlook, they now expect earnings to be between $3 and $3.30 a share. Previously, that was a $3.45 to $3.75 per share range. That was also below what analysts were looking for in terms of $3.56. In terms of some commentary from the CFO, in the earnings release, they said in light of the increased macroeconomic uncertainty, we have adjusted our outlook to reflect moderated demand and the net impact of trade-related costs. We are executing targeted mitigation strategies, and assuming current conditions remain, we expect to fully offset these costs by Q4. So a little bit of good news there, but not enough to actually drive the stock higher. And then for the current quarter, I mentioned that outlook was downbeat. They're guiding for adjusted earnings to be between 68 and 80 cents per share. Analysts were looking for 90 cents per share, so pretty big miss in terms of that bottom line forecast for the current quarter as well.
Yeah. It's like they're missing on not all the metrics, but the metrics that clearly matter. Obviously, with guidance, you can't reduce it. The goal clearly for this quarter for all companies was meet or just don't give guidance, I suppose. At the beginning of the quarter, it was like that. So what are you seeing in terms of analyst reaction?
Well, analysts were already cautious on this name heading into the print. 75% of analysts rate HP as a hold anyway, but the median price target has now come down to $29 a share. We're seeing several price target cuts. TD Cowen cut to 28 from 38 in the hold camp. Barclays down to 28, Citi down to 27.50, UBS down to 26, Wells Fargo cut to 25. If you take a look, shares are down about 7% today, trading right around $25 per share. So the good news is there's still a little bit of upside from these reduced price targets for the most part. The bad news is obviously shares are down 7% today, so that's the only reason why. So basically trading around where analysts basically see it going.
Yeah. All right, tough day for HP. Under heavy pressure right now. Thank you, Caroline. That's Caroline Woods, our senior markets correspondent. Time now for the disruptors. Joining us now, we've got Kevin Green, senior markets correspondent here with today's company, C3AI. It is rallying more than 25% off the back of its latest quarterly numbers. So what are some of your takeaways initially, and then we'll get to your example trade, Kevin?
Yeah, a couple of things to know with C3AI. First and foremost, there was a significant amount of short positioning going in to these announcements of this earnings release here. So not only are you seeing some new and renewed enthusiasm for this company because of some of the deals that they are striking, but also just the mechanics of those short sellers kind of getting squeezed out and pushing the prices higher, which is why it's up a order around 25% here. But they did beat both on the top and bottom line here. Revenue came in at $108.7 million for the quarter. She was looking for 108.2 million, and the adjusted earnings per share loss came in at 16 cents, but the street was actually looking at 20 cents. They did provide updated guidance for their fiscal year 2026 revenue. They're looking between 100 million and 109 million, and also gave an update to the fiscal year 2026 revenue guide here as well. But when you are looking at why the stock is actually moving higher, they did extend a partnership, or basically extend a contract with Baker Hughes, which is a part of the energy sector just in general here. And this is actually one of the bigger drivers of revenue for the company. Around 20% of their revenue comes from Baker Hughes. And they're seeing an extension of this contract out to June of 2028. And they're really focusing on leveraging artificial intelligence within the oil and gas space in general. And that's actually been pretty revolutionary. They do have a niche within that market. But it's not only Baker Hughes, they also have contracts with the Defense Department, Coca-Cola, as well as some of the other energy companies out there, some of the larger energy companies out there. So once again, you're seeing some renewed enthusiasm for this name. Technically, you will see an area of resistance potentially of around $35. We have seen that be an area where it's not been able to break above, let's say over the last year or so. But once again, a short squeeze, some optimism when it comes to new contracts being made, as well as contracts being extended. And this is kind of the result of that play there.
Okay, so then how would you approach an example trade given what you're noticing?
Yeah, just given the fact that we are seeing a pretty aggressive move to the upside, but that short selling dynamic is still there. The technical still say $35 could be an area of resistance. I'm actually looking at a vertical call spread. This is a bullish call spread where you're buying the $30 call, selling the $35 call. Expiring on June 20th. Doing this for a debit of $1.25. So the max loss in this trade is going to be $125. With the max gain potential up to $375. And that's if the stock is above that $35 strike price at the time of expiration, with a break-even point of $31.25. You're looking at around a 3-to-1, risk-reward type of ratio here, and it does give you a little bit of time for the market to still try to rally the stock higher if the enthusiasm is going to carry through over the next couple of weeks, while also being risk-defined, knowing that max loss is up to $125.
Okay, the risk-defined example trade for C3AI. Thank you, KG. That's our Kevin Green, Senior Markets Correspondent. Shares of C3AI rallying more than 20%, more than 25% right now. Coming up next, time for our 360 round. We'll bring our panel to dive into Salesforce's latest activity after it beat earnings. It did raise its full-year guidance. That's next on Trading 360.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Great 360 time for our 360 round where we break down Salesforce after its latest results. For that, I want to bring in our panel to discuss its earnings. We've got Keith Kirkpatrick, research lead at Futurum Group, and Nick Raich, CEO of the Earnings Scout. Thank you both for joining us today. Nick, I want to get your reaction first. Look, it did beat expectations. It gave higher guidance than it previously gave. Adjusted EPS, for anyone who's not caught up, $2.58 a share. Revenue was $9.83 billion, just better than expected. Expecting $11.27 to $11.33 in adjusted earnings per share for the year. 41 to 41.3 billion in revenue for the fiscal year. Nick, what's your reaction to its results?
Yeah, what is your
we think
reaction?
Solid results. The earnings expectations are actually improving on a rate of change basis, and the stock's down because of future soft growth expectations. And we think a lot of the bad news is being priced into the stocks, and it's more about sentiment than it is the actual business actually deteriorating faster than what the street expects. So we think a lot of bad news is in this price, and as you said, it beat on the top line, beat on the bottom line, and gave good guidance. So these are stocks that we'll be more optimistic about, particularly as it's trading at a cheaper price.
Keith, I'm curious to know, beyond the reaction to earnings, there's been a lot of questions, I guess, about this acquisition of Informatica, and some don't necessarily see it as a good thing. What are you seeing on that front?
I think that if we take a look at if there's been a knock on Salesforce, particularly around its agent force strategy, is that a lot of times when you think about Salesforce, you're thinking about front office workflows and that sort of thing. The acquisition of Informatica actually helps out by making data available across the enterprise. If you think about where a lot of critical data is held, it's in an ERP system. Informatica will actually be able to help because it gives sort of a strong data validation framework that allows organizations to pull in data from across the organization. To me, that really helps them execute on their agent force strategy, having agents that work across the entire organization and eventually beyond.
Nick, I'm curious to know your thoughts on this acquisition, especially because, I do see some different viewpoints. RBC thinks that this acquisition creates deal risk because of what's occurred with previous acquisitions and difficulty with regard to integrating, and they point out a mixed track record. A lot of people obviously have faith in the CEO, Mark Benioff, but what's your view about this acquisition?
Well, it's being criticized similar to what Salesforce acquisitions of Slack and Tableau were also criticized at their time of acquisition too. But now they're key integral parts of the firm. So it's still early stages. It's more sentiment and fear
What's your
that
reaction?
it's not going to be integrated well. But the underlying data of all the customers, the relationships, and how the businesses are going to use Salesforce going forward isn't going away. So we think, again, it's more sentiment and fear that the acquisition is not going to be integrated well. But we think over time...
Okay, we had a double bottom here on SPX.
And then, Keith, I'm curious to know overall how you felt about this most recent
Triple
quarter
bottom.
and their guidance.
I think there are some really great signs there.
Quad bottom.
Particularly if you look at the organization.
We break the 63, we're going higher.
AI and AI agents.
And the
probably more than
200.
The other CEO within the SaaS.
We break this wall, we're going higher.
We're starting to see positive
To 1, 2,
results
3.
there. Just in my conversations with the company, some of the company's customers, they're starting to see real value from looking at AI agents and how they can actually be used to improve efficiency, improve productivity, all of the things that ultimately, if you look at what is ultimately driving the purchase of any kind of enterprise software, they want to generate a return on investment, and the only way that you're able to do that is by increasing those, moving those metrics, efficiency, productivity, and it isn't going to be, by hiring more people these days. This is not the way of the world.
Nick, I'm curious to know your thoughts on, the analyst community, when you think about the sell side, is actually largely bullish on Salesforce, but those who are in the hold, in the more
I think we're getting ready to set up.
Or the less than bullish camp, the bearish camp seems to be loud. What's your view on what needs to happen to turn things around in terms of, especially how it's viewed for the growth drivers, and then how you all see this acquisition?
Sure. Yeah. Well, Wall Street, when Wall Street says hold, they really mean sell because less than 6% of ratings on Wall Street are a sell because you still have conflict of interest with sell side research departments and their investment banking arms. So those conflicts do exist. So when an analyst writes hold, that more or less means a sell. We think in terms of the acquisition that's taken place, a lot of the bad news is priced in the stock. This is a stock that's down almost 20% year to date. Peak to trough, it went down, lost a third of its value. So a lot of bad news is baked into this already. And for the stock price to go even lower from here, we need to see things get even worse. And we're not measuring that from the analyst earnings revisions. We don't care about their ratings, but their earnings revisions are actually improving again on a rate of change basis. And that's what we're looking at and going, hey, when a stock's pricing into all the bad news and all kind of possible bad news about it, but we think there's nowhere for it to go but up at this point because the earnings trends are actually improving.
Okay, so maybe we'll get off the mat at some point. That's Nick Rage of the Earnings Scout and Keith Kirkpatrick of the Future Group. Thank you both. And thank you for joining us today on Trading 360. I'm Diane King Hall. Download the free Schwab Network app. It's in the Apple App Store. Tune in 24/7 on schwabnetwork.com. Stay with us. You've got Fast Market up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With
Let's
Investor
go.
Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM.
Get ready. These are going to be the 5920s. $59.20s. At $3, getting ready to buy them right here. This is uncalled for. $3.50. SPX. Come on, baby. God damn it, I got my button, I gotta get out of the thing. Okay already. Come on, baby. Ooh, no, 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 no. Damn it. They're at 340, 350 still.
Got late yesterday into this morning. I'm not sure if it should have had the positive effect that it did. They're going to the Supreme Court as soon as tomorrow, they're saying. Where do we find ourselves, Nate? It doesn't feel like a bullish tone is over this market, despite the fact that Nvidia's up 4%. Tesla's still up 1%, but it's fading off its highs as well, Nathan. Where does Nathan Peterson find us today?
Hey, morning, Kev. Nate finds us at the lows of the day right now. And that's kind of interesting to see that kind of price action, Kev. It feels to me like it's a sell on the news in response to, look, we had the news about the courts coming out and challenging the constitutionality of, some of these reciprocal tariffs. Goldman Sachs put out a note and said, they likely think that Trump will still be able to accomplish what he wants to via other means. That remains to be seen. But if you saw the futures this morning, Kevin, the pre-market, they were up big initially on that news. And then they really just started to drift lower. And what do I mean by sell on the news? Well, sell on the news is, Kev, even if we got rid of all the tariffs right now, we're up 22% off the April 7th lows. The S&P is at the same level it was back in late February. The forward PE on the S&P 500 is 22. You pull forward the gains. Yeah, you already, it's as if the markets have already been anticipating or sniffing out that perhaps these tariffs are not as impactful as once feared, at least in the early parts of April. And then you have NVIDIA. NVIDIA, yes, we'll talk about them. Results look solid, but now what? We got a little bit of, we're coming towards the end of earnings season here. Roughly nearly all of the S&P 500 is reported. I think there's maybe 10 more companies maybe to report. It was a good quarter. It was a great season. But now what? What is the catalyst? Yields are behaving, which is nicely. The 30-year was above 5% earlier this morning in the pre-market. It's definitely backed off that at about 4.93%. So there's some bond buying that's going on, but that isn't supporting stocks. And so, Kevin, from a trader's perspective, you've got to respect the price action. What it's telling me right now is that it's a good time to go ahead and take some profits. It's been quite a rally, and I don't see a near-term catalyst.
Yeah, it's a fair point. You can't argue that despite the good news on a couple key names and all those names that might follow NVIDIA to the upside, and early
on my keyboard.
But now you've got Apple lower, you've got Meta lower, Microsoft lower, Google Alphabet lower, Adobe, Broadcom is still up, but only up slightly. So yeah, you've got a market that has run a long way. Even Nvidia, when you look at a low of 86 up to 140, 143 was the high. I mean, this stock has come a long way. And one thing we talked about on yesterday's show with Kevin Green and I, 24 billion open shares. It takes a lot to move NVIDIA now. It's just not going to have the massive moves that you once saw in this name. After a 10-for-1 stock split a while ago, there's just so much float out there now. It's just hard to look at. Now, let's keep going. GDP. We got our first revision on GDP today, Nate, and it came in slightly better, down 0.3 to down 0.2. Personal consumption, consumer spending, 1.2%. Still driven by 42.6% jump in imports. Still skewing that number to the downside, Nate. Did you see anything from GDP that jumped out at you?
Well, not necessarily anything that was too much of an outlier. And I think that's likely, relatively good news for the bulls. I'll say this, Kev. I think that, we've talked about it on the show before, but it seemed like that we kept on waiting for let's just say, a shoe to drop. If the first shoe to drop was the soft data, the sentiment data, the survey data, then we were waiting for the hard data shoe to drop. It still really hasn't. So despite all of this turmoil, both in the market, which corrected 20% from its highs, or just about, thereabouts on the S&P 500, and all the tariff news, all the concerns, all the pullback.
It's all been hogwash.
Potentially spending, and yet. I feel like the data has been relatively firm, and I feel like that's what supported the market going higher. On the GDP front, let's go forward looking. That was the second revision, but just pay attention to Atlanta Fed's 2.2%. It can be volatile. It does get revised often. That one still looks healthy. FactSet has roughly 10% EPS growth in 2025. Keep an eye on that. And then, Kev, the initial claims, a little bit warm, 240K, but we've seen this before where you get an outlier where the claims come in higher than expected.
What the hell's an outlier?
To watch them drop below 230K the following week. If you smooth it out and you look at the average, it's been very benign. I think on initial claims, that 250K, which I believe was from last August, was like the cycle high. So if we get a print above 250K, you get a new cycle high. Then, and of course, we're leaving out, the early throes of the pandemic. We're talking about after the Fed already lowered their interest rates this cycle. Then that's when you can have some concerns around potentially the employment. But Kev, other than that, I'm not seeing a lot in the hard data that has me concerned or is giving the markets enough of a reason to take the multiple down from 22.
Yeah, Nate, I look at the data, every one that comes out, I go over. And here's the sneaky data that may have softened some of my views on the overall market. The Fed minutes that came out yesterday. The Fed members talked about their expectations for higher levels of inflation and higher levels of unemployment, right? Both their projections were for higher levels of both of those. That equals, by the way, stagflation, right? And that's what they pointed to. Now, here's why that doesn't bother me from, a report a couple weeks ago or a Fed meeting. But here's the thing. We're about to get an SEP from the Fed in June. Do we think there's a possibility that the Fed members, doesn't mean they're going to be right, but they could be hinting towards higher levels of unemployment, higher levels of inflation? That'll put plenty of fear in this market, Nate.
It could. I think the potential is there, Kev. I think that obviously this market is not priced for stagflation.
No.
If we go into one of those scenarios, if it manifests in the data, and what do I mean by that, Kevin? We need to see some trend. We need to see unemployment rate go 4.2, 4.3, 4.4, 4.5, or do that over a couple of months on the non-farm payrolls when we get the monthly jobs data that comes out. Or we need to see some of the inflationary data, which has looked relatively benign, really come into some upward trajectory on the PCE. We get PCE tomorrow, but CPI, PPI before that looked pretty benign. So
benign.
Kev, I just think that the Fed is going to be where it's going to be, and you watch those probabilities in terms of the potential rate cuts. They just continue to come down and down and down because there's not enough one way or the other right now, in my view, that seems like it's going to provide any type of action one way or the other from the Fed. And Kev, correct me if I'm wrong, but I think back in March they upgraded their inflation expectations and their unemployment expectations, or lowered their growth forecast. They were already sending that stagflationary signal, and perhaps the growth component has softened some, but it's by no means alarming. I mean, there is that we still have that negative GDP print from the first quarter, but 2.2% from Atlanta Fed. So we'll continue to monitor that. But Kevin, I think to bottom line it, Fed needs to see give us 3 months in a row where we've got trend, and then we can start looking at some significant changes in the probabilities. Otherwise, it looks like they're probably going to stand pat for now.
Full disclosure, that Fed meeting and those minutes were before the Trump administration
480,
changed on China.
130 a contract.
May have softened or actually done a 180 in terms of the way they feel about the overall market, because those 145% tariffs had come off since that meeting. So we do have to quantify that slightly. Now, let's get to what you mentioned here, and that is personal income and outlays coming out tomorrow morning. I think this is another chance. Some of the expectations, month-over-month PCE up a 10th. Month-over-month core up a 10th. Year-over-year headline from 2.3 to 2.1. Year-over-year core unchanged from 2.6 to 2.6. Now that's the consensus of these numbers. That doesn't mean the numbers are going to come out there, but if they come out like that, that's a pretty moderate level of inflation. And by the way, that 2.6 core number for year over year, something doesn't add up in the math there. If last month we got 0.0, if we get 0.1 this month, that math isn't adding up to 2.6% year over year. So I really want to see that income and outlays number tomorrow. I think it's a big one for the overall market, Nathan. Your thoughts on that?
Yeah, no doubt. Fed's favorite inflation gauge. There's probably some 0.3s or 0.4s in there, Kev, right? I mean, that would only make sense for the year-over-year change. And for our viewers, if you're not familiar with, the Fed's target, 2%, to Kev's point, PCE prices expected 0.1% gain.
Always clean. Washboardjim, may I help you?
They're not going to take 0.1% and extrapolate that 12 months and say, oh, it's 1.2%.
I was going to say, you hung up before I got to tell you to take profit, bitch.
To Kevin's point here, if we get 0.1% on most of the months on a go-forward basis, then yeah, you're going to be not before long moving below the Fed's target. Now the cost, the price index might be at all-time highs, but the Fed's going off the year-over-year change. So that's just the way of the nature of the Fed. So Kev, of course, this is an important report. There haven't, in my view, just in recent memory, the biggest boogeyman that I've seen on the inflation front is prices paid from ISM. On both the services side and the manufacturing side, there's been some creep higher there. CPI and PPI over the past 2 months, I think, have been benign for the markets. And personal income plus 0.3, I'm looking at personal spending plus 0.4, assuming we get that. That's going to be, hey, that's healthy. And then consumer sentiment. We had a positive surprise earlier this week, came in above estimates. Stock market likely had something
all
like
out.
That, along with, just the rhetoric around trade improving as well. But Kev, we'll also get that University of Michigan consumer sentiment. I'm looking at a forecast of 50.6. If I'm not mistaken, that's probably going to be some kind of a multi-year low. But I'm not sure if the market cares too much about the soft data But we'll keep an eye on the PCE hard data there, Kev, to see where inflation's tracking.
Yeah, and that consumer confidence number did get a nice jump up to 98, but that University of Michigan consumer sentiment, that has been in the doldrums and heading lower with inflation expectations high and heading higher. It's quite incredible to see those numbers, but you know my problems with the University of Michigan consumer sentiment. But we'll take our first break and come back with our first trade of the day. We're going to look at Dell Computer, Michael Dell's company, and it's down today on NVIDIA's earnings. So we'll take a look at Dell, who has earnings coming out after the bell. Take a quick break. Come back with more.
590. Eating salad. It's got cucumbers in it. Salad. It's good. Salad. It is good. Salad. It is good. Come over and have some lunch. Salad, salad, salad. Mr. Mill, Johnny. We're at 610. 630 salad, yay. Salad. It's real good. Salad. It's salad.
Whether you're an experienced investor or just getting started, Charles
How dare
Schwab
you.
offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding
Interrupt my song.
technical analysis, options, futures, and more. Best of all,
Technical
you can
analysis,
ask questions
moving
by
averages,
chatting
and being in the now.
directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Fast Market, everyone. Kevin Hinks and Nathan Peterson back here for our first paper money trade of the day, and that is Dell Computer coming out with earnings after the bell today. Pretty massive comeback, Nathan, in this name. It got as low as 66.25 early in April before recovering. That's a big move. This stock really, it's Michael Dell. They are, it looks like this is a name where the guidance is going to be key. He's got to set a tone for, markets as strong as NVIDIA is putting up. Now, the stock's down about 1% today, backing off a little bit with the rest of the market. What are you seeing here in Dell, Nathan?
Yeah, sure. So Dell, hardware company, primarily AI servers and computers. There was a lot of talk this time, maybe last year, maybe a little bit before that, about a super cycle and an upgrade in personal PCs on the AI front. Hasn't manifested yet. So on that leg of the growth, bulls are still waiting in standby. On the AI server front, that certainly has been hot, but the only problem there is it's a little bit competitive. So Dell, has customers like CoreWeave and Elon Musk's XAI. It is a hardware company, guys. So trailing PE 17, forward PE 12. The important thing about a hardware company, you might look at this and wonder, why is a growth company like Dell, the PEG ratio is 1.4, by the way, why is a growth company like Dell trading at a forward PE of 12? And
That's a good
because
question.
of hardware and competition and margins. When you get down to
Okay, I've had lunch now.
margins, like for example, Nvidia had
I'm gonna have some water.
percent margins. Dell's is significantly lower than that. It's in the
And I'm gonna
teens,
lift some weights.
along with its competitors, Supermicro and HPE. So, Kev, great recovery, AI growth trajectory intact. However, due to competition, it's HPE and Supermicro primarily within the AI server kind of space. How much does that impact margins, I think, is the question.
Oh, man.
On a technical basis, the stock has run all the way up to its 200-day simple moving average, which is around 111. And over the past 2 weeks or so, it's held its ground above this indicator, which is encouraging. So if I looked at Supermicro's report, their gross margin was, and maybe it's not a good comparison, Supermicro has had its own idiosyncratic type of issues, but related to accounting, etc. But their gross margin was down to 9.6 from 11.8 in the prior quarter, from 15.5. So those margins have been going the wrong the wrong direction. But I think that reflects just the competitive landscape.
My readings tell me that this company still has a forward PE of about 10 times forward earnings, relatively cheap. They're still rebounding off those lows, but you're right. Technically, holding that, I think I have the 200-day moving average about 111 on the nose, 111, staying comfortably above there. But the risks are obviously any drop off in AI spend is going to hurt Dell, right? Any macro slowdown, any break in CapEx.
I think now I'm going to go have a cup of coffee.
Paper money trade I looked at here, Nathan, was something in the passively bullish camp, which means a May 30th, so expires tomorrow, short put vertical. I looked at the expected move, Nathan, of about $8.5. I looked at where it was. I went just a little inside there, a little on the aggressive side. Sold the 105-100 put vertical. Now, the 105 put has a probability of finishing out of the money about 74%. So it's a fairly high probability of finishing out of the money. And we put that in about 115. It's trading about 105 right now, Nathan. But it's collecting theta. It's risk defined. It's high probability. All the characteristics that we like to look at in a short vertical, either long or call or put. However, that doesn't guarantee it's going to be profitable. You need 3 of the 4 scenarios. It does well, right? Upside, obviously. Unchanged, it does well. Downside, but less than 105, it does okay. But below what, if you get a big catastrophic move towards $100, this trade will suffer, Nathan. Your thoughts on a short put vertical?
Sure. So, one day trade here in your example trade that you set up here, Kev, looking at that implied move, like you mentioned, 850, let's assume the stock's at 112.50 like it is right now. If the options market is right, where does that take you down to? 104. The break even on this trade is 103.85. Yeah, $1.15 credit, about $5 wide width. Yes, if the stock were to exceed that implied move, and it happens from time to time. If the option market was always right, this game would be really easy. So, if it were to have really bad guidance or, go below that, you are risk defined, but you could lose that $3.85 versus the 115 credit. So, look, this is a trade that, to your point, Kevin, that if you get some kind of mixed signals out of either earnings or guidance and the stock is a little bit both bullish and bearish, and doesn't sell off as much as the implied move in a negative scenario, then you have an opportunity here to put up the 500 potential risk, 115 on top of that, looking for, either a muted reaction or a bullish reaction. And then the kicker is you've got that 200-day simple moving average at 111, which you hope will stay intact.
Yeah, all right. I think you're right. I think the guidance here is going to be key. How they see this company going forward with everything we know now about NVIDIA in their quarter. It's all about, but competition could set in, market, they could give mixed near-term guidance that could hurt this, but you've got a high probability short put vertical here that in 3 of the 4 scenarios it does well, but anything below that break even, right around 103.85 if it trades 115, is the key there. So anything above that, but like I said, you do need this to stay above that break even. All right, Dave, let's take our second break, come back with Landon Swan coming on from Lakeville. He's going to talk about our second trade of the day, and that is Costco. They're coming out with earnings, and man, this stock has run a long way. The valuations are quite toppy. So let's take a quick break, come back, talk about Costco with Landon Swan. We'll see you in 2 minutes.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're
Experiencing technical difficulties.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market, everyone. Kevin Hinks and Nathan Peterson. Now it's time for our cash tag segment. I'd like to bring in the co-founder of Likefolio.com, Mr. Landon Swan, to the show. He's going to talk about our feature stock of the day, and that is Costco. Landon, everyone loves this company. That's why it trades at such a high valuation. But can it sustain that valuation? What data are you getting us that says either if it can or can't sustain these high levels? Because, man, this company is universally loved by all, Landon.
It is. It's loved by investors. It's loved by consumers. I mean, it has one of the highest, I guess, trust ratings or consumer happiness and trust categories that we've seen. In fact, not a lot of companies like this can go out and sell gold bars like they have. I mean, that requires a ton of trust, and they're capitalizing on that. So I think that just goes to show. But you know, they have created an experience where You pay to be a member, and you feel like it's a privilege. You enjoy going there. You get good deals, and there's actually an element of discovery, which is unique. I mean, if you go to, generally speaking, if you go to Walmart or Target or a grocery store, oftentimes you have a set number of things you're looking to get. Maybe you pick up something extra. But Costco, you have this different mentality when you go. Yeah, you want some certain things, but you're also looking for deals. They have that discovery element, which we've always loved in like Five Below, but Costco's in a different category. This isn't junk that you're buying for $5. It's actually things that you want, and you're gonna brag to your friends about the deal that you got. The Kirkland brand, which is the generic brand, it's kind of gone viral, which you don't see a lot of times. I mean, that's supposed to be the one that gets no attention, but people buy it. But yeah, it's taking off as well as far as social media. So yeah, this is a beloved company. But you're right. I mean, the price is rich. I mean, I think the PE is in the high 50s, 57, 58 PE ratio. Compare that to a Walmart's in around 40 or so. So, it used to be 20 was a lot back in the day, but now we're 40 seems low compared to Costco. But yeah, it's got a very high trust factor because customers love it. And, they've done well. I mean, if you look at last quarter, their revenue was up 9%. Year over year, same store sales up 7%, membership fees up 7%. And what's interesting is that was largely priced in. They missed earnings by, I think, 6 cents. They came in at 402, and the street was expecting 408. So what was interesting about that earnings report was the stock went from 1,030 to 880 over the next 5 days or so. It's since rebounded to just over $1,000. But I think it just kind of goes to show you that with a PE ratio that high and expectations that high, it doesn't take much to kind of spook investors and get them out of the stock. I would say that kind of action is generally a buying opportunity when there's an overreaction to a small miss like that. But eventually you have to start questioning the PE ratios. So this is a stock that, like Folio's, loved for a long time. We've had it in our portfolio with hedge funds for over 3 years. We've almost doubled on that investment, so it's doing really well. But you kind of got to look at what's going on right now. And so one of the things that I don't like about Costco is they report monthly, which lessens the like Folio advantage on the data side. And so when you look at their March numbers, it was I think their comp sales were plus 6.4, April plus 4.4, kind of heading in the wrong direction. E-commerce, similar story, plus 16% in March, April plus 13%. But they are a dominant player, as you can see here. Their average stores, their sales per store, they're crushing the competition and ramping up at a rate equal to or greater than their competition. So not only are they getting more dollars out of each store, but they're increasing that lead. Now we are seeing that their web visits over the last little bit are down slightly. I think 1% is the number, whereas a company like Walmart is actually doing really well, plus 18%. So this is a little bit concerning. I wouldn't be surprised if this showed up a little bit of weakness in the upcoming report. But to counter that, we've also got searches, people talking about, how can I get a Costco
It's off the
membership?
50 SMA too.
It's actually ramping up heading into summer, and that's going to be a forward-looking, sort of guidance element. If people are looking into getting that membership, that's something they can talk about as being a positive number over the next 3 to 6 months. So there's a little bit of a mixed bag here. The only other element that I'd kind of throw in there is they're somewhat tariff resistant, with about a third of their sales being imported. So they don't have complete resilience from that, but they have far less reliance than other companies. So they're well positioned to take on any kind of tariff trouble. So overall, I think they're mostly fairly priced here. I think a little bit too low despite the high PE ratio. If they did have any kind of negative reaction, I think I'd be a buyer after this earnings report. Long-term, love it. Short-term, slightly bullish going into this earnings report, but with caution.
Yeah, Landon, Costco certainly, just what a phenomenal business model. Yeah, to that valuation, 55 PE, you're growing EPS at 12%, top line at 8%. It's supposed to be a low-margin business. It's supposed to be cyclical. Landon, it feels like this is one of these companies that has a halo, along with Netflix, Spotify, Walmart, that with these business models that are so sticky and provide such value, here, come pay us for a membership, and we're going to save you money. And now we have such a membership base, we can negotiate with all our suppliers. What's not to like? That's why the valuation is where it is. And then in terms of economic cyclicality, you would think that once we go into a recession, here's where we get our buying opportunity on Costco, where it's going to drop 30-40% when it bottoms out at the throes of the recession. But it seems like even in a recessionary environment, that almost elicits people to go and look to save money by going to Costco. What's the bear case? Have you seen anything in your data where clients want to cancel their membership for some reason?
Yeah, so the short answer, no. We actually see a very, very high level of happiness. Customers love shopping at Costco. And to your point about cyclicality, yeah, if times are tough, you need deals, so you go to Costco. And if times are great, then when you're in Costco, you find extra deals. I mean, they have both sides of it nailed. It is really a great membership model. And like you said, people pay for the privilege of saving money. And they brag about it. They love it on social media. I mean, you can't understand how many posts we see and posts that we track about people bragging about the deals that they got, even talking about that generic brand Kirkland, which is amazing to me. What a win for them. So the bear case is it's just going to take a long time to get your money back at this PE ratio. That's the bear case. I mean, there's not a lot of I guess sparks that we see coming that could ignite selling because they're going to miss this or miss that, or there's a brewing customer dissatisfaction. None of that is happening. If that were, then I think puts would be a fantastic place to be, but that's not the case. It's really just a question of valuation and how long is it going to take for me to make my money back at that kind of PE ratio, and how fast can they grow to catch up to that PE ratio. But if you zoom out on a 5-10 year chart and you look at the earnings per share of each one of those reports, you can see why that growth is very, very attractive. It's not going to stay at this level. It's going to continue to grow. So yeah, PE ratio is high, but it's going to continue to grow, so the stock should as well.
I went to Costco to buy paper towels, and I ended up buying a helicopter and the Cleveland Browns. That's my favorite joke about Costco. And that just sums up the extremes of when you walk in that store. But you can't argue with the valuation and how far it's run, and that eventually things are starting to slightly, even just slightly, decelerate. Landon, thanks for coming on as always, sharing the Lightfolio data with us here on Fast Market. Have a great day. All right, Nathan, you were mentioning the PEG ratio of Dell earlier. Costco's is north of 6, Nathan, north of 6 PEG ratio. I know we talk about a lot on this show when PEG ratios are around 1, and that's a good number. What does north of 6 tell you about the PEG ratio?
Well, it tells you that the company's growing about 10%, but its PE is around 60. So 10% per annum, but its forward PE is 60. Let's call it fair PEG ratio, but that can vary from industry to industry. It's 2, meaning Costco probably should be closer to a 20 PE. When you talk about grocers, low margin business, like Kroger, Walmart, Target, they all have their grocery business there. These types of ratios are historically high, and I think what allows them to sustain themselves is the stickiness of their business model, the stickiness of their membership. Their members don't want to leave. Their reoccurring revenue because of their membership fees that they collect. So you have a lot of reliability there. You have the technicals that support that. The analyst community can't really get bearish on it when you have those types of fundamentals. You get Wall Street that continues to move it higher because of those just strong fundamentals. And yeah, you're at a valuation that at the end of the day, yeah, you need to be mindful, like Landon mentioned, how long it would take to get your money back based on that valuation, because that does matter. But it hasn't mattered really over the last 5 years or so, ever since the pandemic. That really kind of reinforced the need for a business model like this. So yes, valuation is expensive. And then Kev, Walmart just reported recently, and they said they might have to raise prices because of tariffs. Yes, we got some news this morning that perhaps the tariff situation might have some give to it. But Walmart did sell off based on that news because The members that are going to Costco expect those low prices.
Yeah, exactly right. And here's one last thing, Nathan. The historic renew rate is about 92%, but they just raised prices. Is it possible that this was not a great time to raise prices? Could that number dip ever so slightly if the consumer gets a bit shaky? I wonder, Nathan, your thoughts.
I think it's kind of like a Prime membership, Kev. You know, you can go $5-10 here and there every couple of years. As long as I'm saving money, as long as you are still providing value, I spend $150, you save me $500 per year. Economics add up in my mind. That's probably what the consumer is thinking. So they probably have, that's another reason I think why you might have this type of high valuation on the stock is because of that inelastic pricing component on the membership that they likely possess.
You have a paper money trade for us today, Nathan. What are you looking at?
Yeah, sure. So, you know, paper money trade. Heading
Paper money.
Here, implied move about $30 if you get it one way or the other. The options market.
What the heck?
At the money straddle that expires tomorrow. So, Kev, I got a bearish example trade. Why? You know, if you look at Walmart's earnings,
You guys, man.
some uncertainty around the
You're
tariff
professionals.
environment. Maybe they have some commentary around pricing or maybe needing to adjust there.
I don't get it.
That said, I think that they are relatively muted and they have a lot of
670, baby.
in terms of their negotiations with their suppliers, but there's the potential that you get some commentary around that. If you wanted to take a bearish stance, one way to do that, I was looking at a bear put spread. I was going within the implied move. If you go $30 down, that takes you to 978 right now. Tomorrow, if you get that implied move lowered. So I was buying the 995 put that expires tomorrow, selling a 985 put against that. The net debit was about $3. You have the potential for that 3 to expand to a total of 10, profit of 7 on that. So this is one way that you could. It's an earnings play. It's bearish. You'd be hoping that you get some kind of negative tariff or pricing news. You would hope that you get somewhat of a Walmart type reaction, but it is a very tough stock to bet against when you look at the 90-degree angle of the stock price over the past 4 or 5 years.
Yeah, let's take a look at this one. The May 30th, so it expires tomorrow. So you're looking for a quick move to the downside here. 995, 985 put vertical, spending about, you know, we put it in pretty close, $2.95, $3. It's trading about $3.15 now as the stock is moving down slightly. But this is one that you need a movement, right? I mean, think about it. You know, Costco currently trades about 1,008, and your long put is the 995. You do need a move down, but you're within that expected move, right? At your short strike 985. So this is a name that, you know, if you get it right and you get the move in the direction, remember, you need a move on the downside for this to be profitable. The break even, probably around 992, right around somewhere around that level. You need to move through there, but if you get it right and you get it down towards 985, you got a triple on your hands, Nathan.
Yeah, certainly, and that's, you know, that's the attractiveness, or it can be at least. I mean, look, guys, if you're talking about you're not in the stock and you're looking on putting on a spread like this, if the stock is flat or higher, you can lose 100%. But on whatever unit of capital that you invest, because that 3 could expand to 7,
Always clean.
that Kevin is referring to is what you hear when you talk about the options market.
Did I ever tell you you were full of shit?
This is, again, it's one of those types of trades where you're
Always clean.
against the longer term trend, but the reason
Did I ever tell you you were full of
this
shit?
time is because of pricing and tariffs, that this economic environment for this specific quarter could be different than one that we've seen over the past, you know, several years.
Yeah, it's an interesting. I mean, if you look, the 12 months, the stock is still up 24.6% in the last 12 months. So it's still, despite selling off from 1,078 is still up pretty significantly over the last 12 months. But if these numbers are starting to decelerate, that's the worry out there, because the valuation is unsustainable at these levels without some significant growth here. All right, let's take our final break. Nathan and I will come back to talk about our final trade. That's Zscaler. The cloud security company has earnings out after the bell as well. We'll take a look at Zscaler. We'll put on a paper money trade in there as well. Take our final break of the show. Come back with more Fast Market. See you then.
If you believe the journey is the destination,
need a break right now. If this thing doesn't break soon, I'm getting out.
Is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more.
That's a threat.
Crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market, everyone. Kevin Hinks and Nathan Peterson.
Kevin
Our
Hickey.
Final segment. Before we dive into Zscaler, let's do a quick market update.
That ain't what that chick called you the other day.
From down to up on the day, the S&P 500 now up 0.3%, about 18 points to 59.06.
We're flat.
The Nasdaq up about 0.3%,
Ooh,
77
520.
points to 21,395. Dow Jones Industrial Average still down about 0.1%, 30 points to 42,069, and the Russell 2000 up about 0.1%, 2.25 points to 2070 even on the day. So the market is, when we came on the show about 48 minutes ago, the markets were all down. Now 3 of the 4 positive on the day. All right, now let's bring back in Nathan Peterson to talk about our final trade of the day, and that is the cloud security name Zscaler. You know, here's my favorite thing about Zscaler. Zero trust everywhere. That means no one gets a pass, no one gets in easily or for free. Everyone has to, even the CEO of a company has to go through verification. Nathan, what are you seeing on Zscaler? Stocks had quite a run lately, up 47% in the last year. Your thoughts?
Yeah, zero trust, that reminds me a little bit of Bitcoin, a little bit blockchain, a little bit of open source, this kind of new technological paradigm where everything's available at once all the time and that we can instantaneously transfer it. I think that's kind of the dream of a lot of the blockchain technology and this open source and, solving a lot of the issues that we have as an intermediary. But with Zscaler, look, cybersecurity, when you think of just the trajectory, the runway for the fundamental need for cybersecurity as we move into this even more advanced technological age, that you can't really see an end in sight. And if you look at Zscaler's annual revenue or even quarterly revenue they came public in 2018, over the past 5-6 years, it is just a stair step higher, 90 degrees, annual recurring subscription revenue that is sticky, that once corporations sign up for, it's difficult to get away from because it takes a lot of investment to shift. And so their business model, much like a Costco, like we just talked about, is very attractive from that vantage point. You know, the forward PE I'm looking at is roughly a 60. I'm looking at a forward EPS estimate of $3.60. They're growing at about 20% currently, or at least that's projected 20 to 21% for 2025. A lot of times you got to look at price to sales when you're looking at valuation. Zscaler is around 15. Yes, it's pricey, but you go, guys, cyber security stocks generally are going to trade at a premium because of their just beautiful fundamentals, so to speak, in terms of how clear their future is in terms of the need for cybersecurity. If you look at something like CrowdStrike, many might say, hey, that's the leader based on price performance. Stock's basically at all-time highs. Their price to sales is 29, just for a reference. So expensive stock, great fundamentals. Kev, this stock is ran right up into roughly 255-ish. If we can get a 1 year or 18-month actually chart on Zscaler, this is where it topped out in January of 2024. Just perhaps something interesting to note.
Yeah, exactly. I mean, the chart looks great in a 1 year, but oftentimes you got to go out to that 3-year chart to see that the fact that there was a pretty big trough there from $259 to where it is now. I mean, it hit $259. It looks like February of 2024, it hit $259. Pretty big trough, but it's working its way back there lately with a pretty strong run, that's for sure. But I mean, the metrics are still good. The question is the valuation, right? I mean, their margins are expanding, the customer adoption going well, the deals with large customers are expanding as well, so they're scaling this model. It's just a matter of valuation, and can they stop that decelerating word from creeping into some of their growth? Right now, doesn't seem to be doing that. The stock has made a pretty nice comeback here, Nathan. But I still, because of how much it's run, because it's sitting at an RSI of about 67, just under 67. The paper money trade I looked at here was a short it is a long put calendar spread in Zscaler, where I looked at the expected move. Right, we have expected move about $15, $16 basically. So I looked at the 235, just the 1 week, buying the June 6th, selling the May 30th 235 put calendar. Now, that's trading about, I put it in around 90 cents. It's trading right around 80 cents now. So a relatively inexpensive way to play for downside. But you need downside. Less expensive, less of a capital outlay. You still need a downside move. The risk on this trade is whatever you spend, the debit, and the target on this trade is the 235 trade. Your thoughts, Nathan? A downside put calendar with about 7 long vega on this trade as well.
Yeah, no doubt. So, look, this is an example trade, guys, that Kev's proposing to us. It's a long put calendar. It is an earnings play. In this example, it is bearish. It's at that 235 strike, roughly $17 below where we are now.
Let's
go.
go.
Advantage of implied volatility. Tomorrow's 235 put strike that Kev is selling has a 109 implied volatility. He's purchasing to cover. This is the long put calendar to cover that 235 strike at the June 6th expiration. That has a 59 implied volatility. So 50-point implied volatility differential there, $90 per contract, excluding commissions. Kev, if this is a bearish trade, what stands out to me, number one, this stock is up 25% in 6 weeks. It has just been stair-stepping higher. There's been a lot of money flow that has gone towards it, as evidenced by the price action. And like I mentioned, but it's ran right up into this potential resistance area around 255, which where the stock pulled back in January of 2024. There's no guarantee that's going to happen. Cybersecurity has looked really strong. I would look, sometimes to point to other cybersecurity companies. Normally, I'd say Palo Alto Networks. They traded down post earnings, but I'm going to put them in their own kind of bucket for now because the price action has been, the market has said, CrowdStrike, new highs, CyberArk, new highs, Zscaler, at least new 52-week high here recently. Palo Alto, a little bit of a different bucket there, but like you're saying, Kev, growth, any hints at growth deceleration or any, maybe even when you get to a valuation like this, an inline guide could result in a something.
I might just sell it. Then when I do, it'll bounce.
As always, Nathan, and we appreciate you coming out and spending the hour with us as you do on Thursdays. For all of us here at the Schwab.
I don't know if that's a good idea, Hickey.
Next Gen Investing is coming up next on the Schwab Network. Have a great day. We'll see you tomorrow with another edition of Fast Market.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account. Plus, solutions. All
there we go.
Investors unlimited ATM fee rebates for cash withdrawals worldwide. No
Yay!
And enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Do, 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 do.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Yabba dabba doo. Yep. Well, I didn't get that, but it was a good one. It probably was by the end of the day. I mean, yeah, hell yeah.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, the actual inverse
what
of
one?
what we were looking at as far as the four major averages to
What
come on
one?
the show yesterday is what we're seeing
Yeah.
today
Bottomed
with
out
some
while giving
modest.
59.50s at $2.
Well, that don't make sense. Oh, yeah. Well,
Yeah.
they're
SPX, yeah.
they're at 150 right now.
Shit. You know what? I'm sorry. 59.30s.
Yay. Very good. I was trading in 50s earlier.
I was looking at the 5 that I did earlier this morning.
Yeah. I just scalped the 20s. I'll be right back. That was a good one. Thanks for alerting me them trees are bottom. I would have never looked at the hour. I took it earlier. I took the bottom earlier on the 1 minute.
Yeah.
But I'd never thought about looking at the hour. I mean, that was like a confirmation. Complete. Maybe, but it was a good spot. I'll be right back. Randy. Randy, we had 14 inches of rain in April, and last week we had 10 inches of rain. That's a lot of rain. It's only about 4 or 5 times more than what we're used to. I don't see how the judges can call the tariffs unconstitutional. It just sounds like way out of line. Maybe I need to be educated, or I know what socialism's all about.
back to the 63. I mean, pull back to the 200.
Right there.
That's the bottom of the support zone on the ES too.
Do 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 do.
Jenny. Not quite the same, maybe market mover that Nvidia is, but Best Buy. This has been an interesting move today, though, because we were initially higher, now lowered 8%, so not even a small move at that. After we did see they missed analyst estimates for their quarterly same-store sales and revenue, but they beat for profit expectations. So cutting their full-year profit guidance due to the impact of tariffs.
Best Buy.
Consumers are really weighing the effects of inflation when making some of these big ticket purchases like home theater systems. They also did say they're aware of a move by a panel of judges to block some of the tariffs put into place by the Trump administration, but saying it's an incredibly fluid situation, and that's really where they left it. So including the impact of tariffs as they currently stand.
I'd like to know what judge ruled this.
Earnings to be between $6.15 to $6.30, down from their prior forecast. Not hugely so. I mean, we've talked a lot of revisions to guidance. This was not the worst of it, but also they did not expect same-store sales to drop as much as 1% or rise 1%. Wall Street was expecting more of a break-even figure. So I think that the story with Best Buy is maybe even simpler than that. There was so much expectations around a super cycle. There was so many strange but very strong conviction notes out from the sell side that were like, we're going to see this massive refresh cycle. All these electronics and electronic retailers are going to benefit. And none of that happened. So now a name like Best Buy that was upgraded time and time again on the expectation is now facing the reality that didn't come and play out as they had been expecting.
Yeah, I think what my takeaways mostly was from this report was they said the first quarter consumer behavior didn't really change. They said 30 to 35% of their cost of goods sold is from China. And then when you look at their guidance, they are suggesting, hey, we expect consumer behavior to moderate a little bit, but we also raised prices just a little bit. So this sort of confirms, and I know the tariff stuff is in flux. If anything, we have more question marks now around it than we did before. But what it does confirm to me is some of these are going to be passed on to consumers, and there is going to be some impact to margins. They're not going to pass everything on, and it's probably going to impact the amount of consumer demand. All three of those things can be true. It doesn't have to be just one of them. I think Best Buy, largely, in its guidance and its report, I think that's what they confirmed to me.
I completely agree, and I also don't think I've been to a Best Buy in maybe the last decade or so. There's just not any really near us in the city, and so I'm like, this is such a...
Bounced off my trend line on all the moving averages there. I mean, all the time frames. The red one. 5 minute, 3 minute, 2 minute, 1 minute. /ES.
Yeah, I'm looking at ES now. It's doing that 1 minute curl that I like. Put good money, it's about to pop.
Yep. It's 78 degrees in here. I think I'll knock it a couple notches down. Oh, the heck. It was a hot chocolate burp. Always clean. Hello?
Hello.
Yeah.
Hello, sir. I'm calling from U.S. Subsidy Department. My name is Lisa Hayden.
From what department?
Hello. Sir, this call is about subsidy. It's a free subsidy, sir, that you are getting by the government. And for this, you don't have to pay anything from your pocket. Neither you have to provide any of your personal details, sir. Are you interested, sir?
No, I don't drink beer anymore.
So it's about a subsidy, sir. Actually, sir, this free subsidy is provided by the government because, for the corona pandemic, many people have lost their job and their financial condition got worse. So the government is providing this subsidy to help people.
I hope not, because Joe Biden hired too many government workers to begin with. We can't afford them.
Okay, so you don't need any subsidy, right?
No, I don't drink beer.
It's not about beer, it's about the free subsidy.
Oh.
It's a relief fund, sir.
I thought you said beer.
Sir, it's not beer, it's subsidy. Subsidy is a relief fund that you will be getting by the government. It's a free relief fund. For this, you don't have to pay anything from your pocket. Neither you have to share any of your banking information or your personal details.
Oh, really? Well, no, I'm not interested. I don't drink beer.
Okay, thank you, sir.
I don't want your government welfare. So do I get a grade on how I handled that phone call? Magnificent. Would you like to give me a grade? I can see Angel already did. Okay, we're pulling back to $5 again. Oh, I'm not in. No, I was talking about the phone call. I was talking about the phone call, not the trade. I'm not in the trade yet. I'm getting ready to, though. We have a 1, 2, 3 setup here. 1, 2 bits, and a freebie. You dumb Americans, I'm not talking about beer, I'm talking about free money. One, two, three, four, we just might make a little bit more. Oh, you was in a trade? Yeah, I deserve an A+ on that trade. No questions asked. And I wasn't quiet either. I was very vocal about it. But I can see you're concentrating. So we'll just let it be. Now this is not an official 1, 2, 3, 4 because 2 of them are wicks. Well, no. This is a body. So we've got 1, 2, 3 bodies with a wick. I think we're getting ready to break out. $5, and I did not jump in the trade. So that's my fault. I'm going to do a tranquility of Schwab. I'm in a paper trade at $5. There it goes. Did you see how I called that? Magnificent? Funky? If you can count to 4, you can make a little bit more.
Count to 3 and trade with me, but count to 4 to make much more.
That's right. 1, 2 bits, 3 bits, and then a higher low with a wick as number 4. When we broke out of the flag. See, that's a flag. Do you understand? I don't drink beer. La 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 la. Rum-pa-pum-pum. I didn't jump in that trade when I should have. Pull back. Boom. If you can count to 5, we might take a nosedive. It's 12. Fat. I used to say this time of the day the fat cats are back, but I kind of stopped saying that. Because there's been so many good sell-offs in the afternoon. You'd think after what the court's ruling today that this would be very bullish for the market. But I don't know if the courts have the right to say that. Court ruling on tariff lifts in USA futures pre-bell. I'm not all excited about jumping in this market yet, but like I said, big knife and then catch it. But we're at a squeeze right here, Funk. If it's going to do it, it's got to do it soon. Oh, there's a $50 bounce. Wow. I think this would be a good bounce if it breaks out. We broke out of the, kind of broke out of it right here. We're above the 200 right now on the 1 minute SPX. Mm-hmm.
I missed the quiz for almost 5 minutes. I don't know how I did that.
There's a chance to get back in it again. The 59.20s. $4.90. about now. $4.50. There it is. $4.10. Okay, Funky. We're coming back and pulling back to the top of that resistance line here at 410, 420. Let's do it. 420. I'm going to do it. Let's do it. Break it. 480 now. It's funny, I got 1, 2, 3, 4, 5 pairs of shoes around me. Ooh, there's 370. That's not what I wanted to see. After I get my water, I'm gonna come right back. Now I'm not liking where I am right here. Belch. Come on. Come on. We don't want you to go down yet. There we go. I'm still in it. If you're in this trade, you can get out, but I'm gonna hold on. All I gotta do is break this 50.
Very resistant on the yes.
Come on. Oh, God. That was nasty. It's $5. Don't say it's at 410. What caused it? Shit.
Mm-hmm.
Yeah.
Oh. Nikki, you're back on again, baby. You're talking romance to your hubby there. Huh. That was rough. $5. I held on. And all of a sudden, I got down to 410. I couldn't even blink an eye.
You must have missed the part where I said you're in resistance zone for yes.
No, I heard that.
If you like master calls, it's about a tad to 63. I do not want to play in this little chop zone right here. It's not respecting any averages. It's just doing crazy shit in the middle of nowhere.
Yeah.
Zones, like there's nothing that tells me where it's going. Master lost at 63. It's headed to the 200. Good pullback. Looking at 380 calls on Master right now.
It kind of scared me after that last pullback.
I'm in Master in 380s and 220. Jesus Christ. Yeah. Alright, I'm out at 260, so what was that? $40 one pair?
Yep. Right off the 200 on the 1 minute.
Yep. Work out in it.
Right above the VWAP.
Jesus, what a candle.
We bounced off the VWAP earlier too. A couple times. Doesn't show up on the SPX. At least the one I got. So I'll use it with a SPY. Well, I think about buying 2 contracts here. If I think it's going to hold, we could still easily drop down to the trend line.
Yes, it's just all the way up to 38.75.
Come down to 5,900 right here. Watch it here. There's nothing holding it up on /ES. Just the inverse head and shoulders. Now, right now, I'm gonna go get me another tea going.
Watch this 59.08 50
Yep.
low on this.
You mean right here? Or?
Yep.
I'll be right back. Got 3 black crows. So this is the time of day where you really got to be careful. I usually get stuck in trades. This used to be the best time I used to love to trade. It was like from 10, 11 o'clock to 1:30. I used to kind of just wait. And then I'd jump in the trades, and then all of a sudden you got just the opposite. Still after that 11 o'clock, but Eastern time. But now I'm leery to jump into trades after 1:30. This is a real good setup. I got these at 250, so we're going to hope that I can save my ass here. On the 3 black crows. $3. I got a pretty good average. And I'm even right now at 285. And I was up a little bit. Right back. Got my water on in the sink. I'm trying to warm it up. Wash dishes. There's 3 o'clock here, $3. Be back. That's 1257. I need to trim my nails. How many girls in here trim your own nails, or do you go to, what do you call it, manicure? So I don't date women that go to get manicures. I date them that trim their own. Michelle, you trim your own nails? Come on, let's do it. Dang it.
Yes, just lost it.
Still above my trim line here. I'm gonna have to change my lunch hour between 12:30 and 1:30. But I like getting that fast, you know, I can. If I do it around 10. Shoot. Oh, it's time for my tea.
Good God, get ready on the MSDR calls. Holy shit, they're dumping it.
Mister? They dumping it?
God, yes. It's headed for the bottom of the orb. Watch that 367.50 for a double ball.
Bit head and shoulders. Universe head and shoulders if it reaches that far. It's still in these suckers, so we'll see what happens.
I'm in at 185.
Wait until you started seeing a reversal, didn't you? Yeah, okay. Down $250. Well, today's Thursday. I couldn't sleep yesterday after I had that weird day. I just went and did a job and came back. So I went to bed kind of late, but I had a red day yesterday for the. No, not red. I mean, I made some up here at the end of the day, but still, most of the day I was red.
Yeah.
Come on, let's go. Can we break the 21? That's the question. Oh.
Master's still breaking down.
You might be right about the orb. Yeah, here's the head and shoulders right here, more or less. Not a complete one, but it is one.
There we go. There's the candle I'm looking for.
Excuse me.
Now we're talking.
Kind of tricked you, didn't it? Back to 255. We got a wall right here to break at 59.03 on the SPX. 63 on the 1 minute. There we go. There's my 80.
Hey. I'm getting at him at 1.9. No, it's profit. It's not a huge profit, but I don't like the way it's acting.
Stay in a little bit longer. Bake it.
Yeah, even with that pop, the contract only moved $1. Like, that's not good price action.
Yeah, we got a hard resistance right here too on the SPX. A 1, 2, 3 off the in the 200 SMA and EMA in the 50 SMA. So if it breaks, it's going to be a nice pop. Not, it's going to be a nice drop.
Your master contracts are up $20 a contract, so 15% rate.
2:13 Eastern time. I'm still in these things. We break the wall. Ugh.
Blame me. Everything's dumping.
Yep.
Oplo, Palantir, Master, they're all dumping.
What's that orb there on your master? That's a real solid one.
think we're hitting trend line right here on ES.
Mm-hmm. It
Hitting
is.
trend line on ES right here.
Mr. 2. Let's see what happens here. About passed out there. Feeling very tired. I'm gonna sleep like a baby tonight. I'll take a nap when I get done here. Well, that's God, 121 over 110. Yeah, I got low blood pressure today. But, Boeing had a good pop this morning. Boeing stock jumps on CEO's comment. Here's what he said. He says, "We're not woke no more." Well, we got an hour and a half left. I think I'm going to go walk around the complex and come back. And I'll be right back. I fell asleep a couple times.
Only all these reciprocal tariffs, but these other tariffs that they put on was not part of this case. And they've actually said so much in that case saying those stay in effect. We don't have an issue with that. We just have an issue from the business that filed the case on the big reciprocal tariffs. So therefore you saw the reaction in Mexico.
He reminds me of someone. Oh, he reminds me of that other guy that giggles all the
So what
time.
about the taco trade? I mean, they're saying that, there was the Sell American trade, Sell America trade, and now that's gone. Maybe it's Buy Less America, but it's not Sell America anymore. I mean, look at the bond yields.
It never was, baby.
On the 10 years, so that
Didn't last very long.
But there's still this Trump always chickens out idea,
Right.
which may be good news for stocks or no?
So I kind of looked at it differently. I mean, yes, that's the joke because, basically he announces big tariffs and then he changes his mind and de-escalates and then the market rallies. That's the taco idea. But I thought of it more like, think of it tactically adjusting your core position. If you get to this case and say that these tariffs really are off the table,
I'll be right back.
has really lagged in this whole sell-off rally since April 2nd. Materials, energy, staples, even the dollar have very much lagged to what otherwise has rallied the S&P.
I want to see this thing back up.
I think that's your taco trade, so to speak. You get the alternative opportunities that have not been affected by the tariffs but have lagged already.
So where are the opportunities for investors as chief investment officer? I mean, you're putting some strategies together for I guess, an economy that is strong enough, but right, and not terrible, that may have inflation, that may have some unemployment issues. What might work in a portfolio?
So at this moment, obviously, we continue to sit in this recovery trade from the low. What has to lead there? It really is technology and semis and growth stocks. So I do think you should maintain that, because if the economy stays on track and it hasn't been really affected by the tariffs so much, and the GDP data actually today showed that there's actually a big component of fixed investments even higher than last time. So there's investment happening underneath. And I think the growth stock story is a good story. As I mentioned, like the sectors have really lagged because the tariff has such a negative effect on sentiment. Energy stands out to me, and materials as well. I think that would be new additions I would put to my portfolio.
Where does the Mag 7, I mean, most of those are growth names, right? Where does Mag 7 fit in?
Yeah, I think it fits in that picture, right?
Do people buy dips? Is that what you're saying?
It's already happened, but I guess that's continued to happen. Maybe that the ones that have lagged in the Mag 7, like an Apple and before was Tesla, that's maybe the way Mag 7 recovers. I think I've been a little bit bigger picture, Nicole. Like we did have, and it still is, these restrictions on semis, right? There was yesterday news out that once again, certain companies cannot get our exports from semis, and that's an important change, I think, in terms of like how the performance will go from here. So there continues to be divergence there between different companies. Nvidia obviously stands out because it's such an incredible growth company, but Nvidia stock hasn't performed so well. So I would more look at it saying, take the Max 7 as a whole, not having so much to focus on the Nvidia, but add in some of these cheaper sectors like energy, like materials, maybe even financials too, because that I think gives you a better diversification as we continue to recover. And I do think we're going to go all the way back where we came from, to the February highs, in my view.
Ah,
yeah.
Really? That would be good news. I mean, what did you make of NVIDIA? Do you think that propels sort of tech overall and just keeps it afloat?
It does. But it's interesting to see the stock performance. It hasn't really done as well, and it's deviated from the growth forecasts that are still out there, including from yesterday. EPS growth is even just a bit higher. The guidance was affirmed, but the stock isn't performing well. So I think there's people, I think we're maybe overweight there and have taken off that position, or continue to take off position. There's news out that the hedge funds are again shorting the Max 7 as we recover. So there's going to be this moment where as we reach the highs from February, that stocks like those will be reassessed to say there's a valuation issue here again.
What about international trades? I mean, there's been a lot of folks who really like some of the European stocks, some of the defensive stocks there. What do you think?
So what does stand out to me is that Hong Kong, China are still really undervalued markets. Now, you got to pick your spots there, but I think a Hong Kong market being so like affected by China and the international trade, if we're getting further resolution here, then I think that is a really interesting opportunity. Europe has been in the focus because this fiscal stimulus put in Germany, but German DAX is at a record high. It's way beyond the S&P. So I'd be much more for the S&P relative to the DAX. So that kind of be my position there.
No sense on how long this could drag out with the Supreme Court and ruling on the tariffs. I mean, you know, because people want things done and they want clarity on Wall Street, right?
They do. So what we could be looking at that the deadline for Europe is July 9th and the deadline for China is August 12th. That we're going to be well past that. So again, the story will be for the markets, the big tariffs are not coming back.
Right.
But the tariffs stay in place.
Okay.
Right?
Ben Evans, it's great to see you.
Great to see you too.
We always love when you come in. Thank you, Ben.
Thank you.
Nice to have you here. Fed Watch Advisors, Ben Emmons. Still ahead, Michelle Gibley joins us to discuss the future of tariffs, shifting stimulus, the rise of defense spending, and a changing global economy. The Dow right now is up 33. We will be right back.
trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalini. So glad you're with us on this Thursday. Michelle Gibley, Director of International Research with Charles Schwab, joining me right now. And we've gotten the big news pertaining to
Right, getting back up there.
U.S. court blocking many of the Trump tariffs, particularly those reciprocal tariffs.
85 to 190 now.
International trade. And now we have
Anybody in the
White House
SPX?
knowing that. What do you make of it? What do you think could be some of the maybe a most likely path, or what are folks saying?
Yeah, I think this slows things down, but it doesn't really end the tariff uncertainty. Like you said, the court blocked the tariffs. Now,
Oh my.
those are the ones imposed by IEPA authority. Administration has filed for an appeal, asked for a stay on the ruling. If they get a stay, it could keep the tariffs in place.
Well,
and
this
just
girl's
set up
on.
a long legal battle. Now, if the stay is not granted, they have other means to increase tariffs. They could use Section 122, which allows for a 15% across-the-board tariff, but only for 150 days. And then they could use Section 338, which allows for up to 50%, but there's no limit on duration. We still have these sector-specific tariffs on steel, aluminum,
is this?
autos, and auto parts. We're waiting for chips and pharmaceuticals. But I think what it means for investors is that trade negotiations are just going to become more difficult, and there may be less urgency for countries to cut deals now. And we could get some relief because maybe we don't have as severe tariffs or not as long of duration. But this really just
205.
extends
Let's break
uncertainty
it.
for businesses and for the economic outlook.
Right, understood. In the meantime, what do you think about the
SBET.
big picture here for investors who are still looking abroad? I mean, we think about Europe doing so well. When investors
Missed
are
her
looking
rebrand a little
for
bit.
opportunities, have there been some drivers abroad that
Ooh.
you think are working?
Yeah, and I think we talked about it a little
Sharp
bit in the
Link
prior session.
Gaming Company.
We're becoming less focused on monetary policy and more focused on fiscal, particularly in Europe. And that was because of the big changes in Germany's budget this year, really very swiftly and a big size and a very big change from their prior focus on austerity. And that could set up for an increase in defense spending from what is just barely 2% of GDP to up to 3% in the next couple of years. And then taking Germany's lead and the potential for less U.S. military support in the future, that's prompting NATO as a whole to consider increasing spending. At their next meeting in June, they could announce more than a doubling of spending, up to 5% of GDP on defense by 2032, and that would be 3.5% allocated to core defense, and then an additional 1.5% on cybersecurity and defense-related infrastructure.
And so at this point now, we talk about the coordination of central banks, and many of which have been cutting rates. The Fed here at home has chosen to sort of pause. Where do we stand on some of the responses and fiscal stimulus from some of the other countries?
Yeah, so for the upcoming central bank meetings, next week we have Make Canada and the European Central Bank. And they'll be the first ones to get a crack on what is basically ever-changing U.S. tariff policy. Bank of Canada is up first on Wednesday. They paused at their last meeting, basically because of trade uncertainty. But they had a weak jobs report this month, and we can see that it's already hurting Canada's economic outlook. But we're not expecting any change next week, but we'll certainly be paying close attention to what Governor Macklem says. And the ECB, they will cut rates. That's what the market's expecting, a rate cut next week. But, we could start to get maybe a slowing of the pace of rate cuts or a pause there as well. But yeah, monetary policy is becoming maybe a little bit more in the background at this point.
Right. So monetary policy for these central banks and what they're doing, fiscal policy, what the administration is doing, for example. What's going on in China of late? I mean, they've certainly been working to stimulate the economy in many ways, whether it's lowering sort of regulations and parameters on the banks, and they've been trying to beef up the economy pretty regularly. Sort of the latest on China and how China is doing?
Yeah, China, what's really interesting is that before the de-escalation happened, so when the 145% tariff was still on Chinese goods, Chinese policymakers came out and said, we're okay. We still think we're going to meet our 5% growth target this year. So they have increased fiscal spending this year, but they really haven't done it in like a reactionary way to the new tariffs. And so now that things have backed off, they're kind of waiting and seeing. They still have room to add more stimulus, but at this point they aren't doing that. The main area that they need to address for the weakness in their economy is, two main areas. One, consumer confidence is very low, and also business sentiment has been hurt. But there's reasons to think that the optimism about DeepSeek and Chinese innovation, as well as maybe a more easy policy toward businesses by the government, is kind of maybe helping.
We're at 220 now.
There's still more that the government could do to support growth.
Right. And a final thought here about investor sentiment overall at home and abroad.
Yeah, and the main thing I guess I would say is that, a lot of investors are still underweight international. Over the past 15 years, the weight of, just even in the index, for the All Country World Index, the weight of international relative to U.S. Has been cut in half. IFA countries were around 40% of the index, now they're 20%. And we're seeing that in many investor portfolios too. They don't have as much exposure to international. And they've been slow, but they're starting to reassess their allocations. And that's because we're seeing these unpredictable policy moves in the U.S. A weaker dollar also helps boost international returns. And there's really attractive valuations. The IFA is trading at just 14 times next 12 months earnings relative to 22 times here in the U.S.
And last but not least, I do want to throw in the Sell America trade. That's really off the table now. There was a lot of concern that other countries were selling off U.S. bonds, and we saw bond yields moving higher and pretty quickly at that. And today, right now, I just saw the 10-year go down to 442. So maybe, just maybe, other countries aren't selling U.S. bonds so fast.
Yeah, I think that it makes sense. If you're an exporter, let's say in Asia, and you got a lot of dollars from selling to the U.S., you may not have hedged that in the past, and now you are looking at a weaker dollar, and it might make sense to hedge those dollars. And so that might be why we're seeing some of the moves in the currency markets that we're seeing. It's basically exporters now hedging those positions instead of being unhedged before.
Yeah. All right. Well, Michelle Gibley, great to see you. Thank you so much for being with us. I'm Charles Schwab. Thank you.
Thank you.
Still ahead, our panel is ready. We want to take a close look at Marvell Technologies, get a preview of those earnings for you. We'll be right back here on the watch list. The Dow's up 62.
Carl Nation, it's your number one broker with the best full service
Carl
skills in the biz.
is the best way.
You see something from Schwab?
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can
Carl's way is the best way.
Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Carl's way is the best way.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis,
Richard, how are you doing today?
moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive.
I think we need
learning at its finest.
to avoid the hours of 1:30 Eastern time
Head over to Schwab.com.
to 2:30, unless there's a good setup. What do you think about that? Carl's way. Oh, Dad, how come Grandpa doesn't sleep with me anymore? I'm sick, ain't I? Dad, can I ask you a question? How come Grandpa doesn't sleep with me anymore? You're one sick human being. Low, darling, yeah. Oh, lay me down. 16, 17 has to hold. Lay me down. Uh-oh. He said boom shakalaka. Oh, let me move it up. I could get out of this trade right now. $2. But, oh. Oh. Ah. Dropping a little bit right here.
Only on the Schwab Network.
Market dive, yeah. New thing here.
Trading at Schwab is now powered by America.
Oh, there's a big knife. God.
The award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including
5920s again.
Studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute.
From 225 to 120.
Trade brilliantly with Schwab.
115,
Morning
110.
Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I've seen something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing
Technical difficulties.
Carl.
We got a hammer here off these two engulfing candles off a support line at 110. Starting to get a little volatility. It is now power hour. $110 to $135, $140. Can we go back to the top of the resistance and break it? Right here's your scalping idea.
MSDR. Just bounced into a support zone. Came back up.
Caroline, but it definitely does consistently add to the overall volatility of this market. Although I will say the volatility actually, as I'm looking at it, slightly lower on the session.
Makes you wonder if the UK is like, wait a minute, we made a deal too fast. But
Right.
I think, to your point, technically good news for the market, but it does seem like this could kind of delay any progress and add this new layer of uncertainty. So we'll continue to monitor those headlines. We're also keeping track of NVIDIA shares today after earnings. They're actually doing a pretty good job of holding on to gains. Shares are up more than 3% right now, so off the highs, but not by much. And, we're going to dig into the actual numbers a bit later in the show.
Oh, we are?
Auto, but I want to check in about analysts' reaction because we know, based on stock price reaction, that investors appear pretty upbeat. What are the analysts saying? Because they were bullish heading into this print. Are they more bullish now?
No, they weren't.
Absolutely. I have read nothing but just absolute optimism from
That's not what I heard.
Not all price targets do imply further upside from where we are currently trading, although right now all the ones I'm looking at,
I think she's wrong there.
I'm looking at like 180 from Piper State.
I mean, the day before these earnings came out, they were very bearish on NVIDIA. And then right when after they came out, all of a sudden they got bullish on it. And what I saw was mark-offs of billions of dollars. So I don't know. I'm not that bullish on it. Not like these fat cats are. I'm bullish, don't take me wrong, on a pullback. That's all I got to say about that. Shakalaka. What do you think about that assessment, Magnificent? I think they overreacted to earnings, what I think.
Affirmative.
God.
Uh-oh. Someone die?
That handle did.
Okay, get ready. Get ready here. We're watching this real close right now, folks. The SPY's at 2 cents. The 593s I traded this morning. That's funny. They're not that far out of the money either. The 59.20s right now are at $1. So Washboardjim's going to buy him some here. Yep. 95. $85. We're holding up that support line. Oh. Kind of just sitting here right now. Still at $1. Almost we're too far out of the money right now for this one. They're expensive. No, have to move away from the 59.20s. Unless it has a huge spike. And we got 47 minutes left. 85. Well, I've done pretty good today. I don't want to ruin it.
If you think that there is elevated recession risk,
59.10 is what I'm looking at. I have to move them up.
But I think structurally right now, if you think we coast or have a soft landing on the economy, banks tend to benefit.
Soft landing? How many years have I been hearing that?
They borrow on the short end and invest in the long end, so spreads, again, will help profitability.
So bullish for banks and some cyclical industries, but it sounds to me like you think that people should be also investing in bonds.
And it's funny, you know, when the last 5 minutes I'll talk about how interest rates on the long end of the yield curve have threats to the high side, where again that would be bad for bonds. There are niche markets in fixed income where we have allocated quite a bit of capital in the last 2 to 3 months, where you have seen dislocation in certain parts of the fixed income world, where you could find short duration.
We're back at support.
In our opinion, limited credit risk and still generate yields near 7.5%, which in conversations with our clients, you'd be funny how that number, Caroline, you start getting above 7% in a fixed income investment. And it's funny how investors go, oh, I'll take that level of return. I don't need to be invested in the stock market. And so again, investments, say fixed term bonds, baby bonds, term preferreds, and registered investment companies, which are governed by the Investment Act of 1940. They have asset coverage ratios, minimum ratios that have to be met. We have found through the decades and through multiple recessions that credit performance tends to be well in those types of entities, and that would be closed-end funds, business development companies. Each have their own risks, but if you invest in the higher end of the capital structure, you can find attractive rates of return, very good spreads above, say, investment grade bonds or U.S. Treasuries, and again, have returns that are really comparable with the historical rate of return of some of the most popular equity indexes like the Dow Jones or the S&P 500.
Josh, going back to the idea that, you know, the U.S. needs to eventually kind of pay off this deficit, wasn't that a potential goal of the tariffs? I think that there was still some uncertainty about the goal of these tariffs, how long that they would be implemented. But if it's to raise capital to pay down this deficit,
where we go? 245. Shit.
Offset the,
Jimmy missed it.
The pitfalls of what it could do to the economy and to inflation.
Yeah, no, Caroline. I mean, there was still a pretty material hole, and I think, you know, we've seen some of the numbers from the proposed tax bill, and again, I would be under the opinion the Senate is going to do quite a bit of work of the House's version of the tax bill, and it's going to look completely different in the coming months. But even we've seen the best case scenarios, or at least the assumptions built into this model.
Just a little bitty move.
Even if
40 cents.
A lot of, say, the tariff revenue or economic growth associated with these tax cuts, you're still operating at a sustained deficit level between 6 and 6.5%. That is still well above historical norms, and again speaks to a imbalance where you're going to have material growth in U.S. Treasuries. And again, not to belabor a point made a few minutes ago, but you're going to need growing demand to at least maintain flat interest rates. And I think when you line up all the variables, the risks are associated with all these variables are that interest rates on the long end of the yield curve, especially the 10-year, will continue to rise, or at worst really have a higher floor than historical norms. And the reason why that's
275, there we go.
For equity investors is not only cost of capital.
Well, that's another miss. $2 to 280.
If not the most important discounting variable.
Right on the bottom of that trend line. It held real well.
It has to be at least one of the top 2 or 3. And so structurally, a higher 10-year puts a wet blanket over equity prices.
Right. So rise to what? From 4.4 or 4.5 to what? Are you talking above 5%? And what does that mean in terms of where you think the Fed is going in terms of any potential interest rate cuts? It doesn't sound to
well,
me
she
like
got a lot of freckles.
Caroline, I think that's a very tough situation for the Federal Reserve. I just had a conversation with a CEO of a bank.
Damn,
in our
310 for them suckers.
We had the same conversation about the 10-year U.S. Treasury, and I think we both agreed that
I missed that trade.
Approach 5%. That implies a 30-year that's 5.5. 5.75, maybe even flirting with 6.
I had the
And
order
things
ready.
start to break at that point. You know, credit and
59.10s from $2 to
important.
$3.40.
And if you can't get a loan that makes a project or a business opportunity, and if you can't make those numbers work, and certainly higher borrowing costs make a lot of less projects look attractive, it's tough. From 4.4, I think the next checkpoint you're looking at 4.7, 4.75. 5%, again, if we get there, the equity markets are going to be in a lot of trouble again. So I'm certainly hopeful we do not get to that. But there, over the next couple of quarters, whether it's what's going to happen with the trade negotiations, I think, again, the court order makes these trade negotiations, Caroline, very interesting because, you know, I try to imagine how the United States is going to have a negotiation with a country when a lot of their leverage was just taken away by the courts. So what are those negotiations going to look like? Sadly for us, only time will tell. But again, next couple of months, the next couple of quarters are going to be fascinating to see how that resolution gets met.
Yeah, we thought we had July and August trade deadlines. Seems like that could be elongated. At least the tax bill has a deadline, so we'll get some certainty on that front later in the summer or September. Stash Graham, Graham Capital Wealth Management, really appreciate your perspective
That's
there.
100%er right there.
Thank you, Caroline.
Have a good one. Coming up, we'll dive deeper into NVIDIA's earnings with Melissa
Almost
Otto.
$2,
We'll be right back.
$3.90.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
$4.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard and
He works hard. Now I'm living off of his hard work. I've never had a job. I miss Grandpa. There's 4:30. God darn it. Don't you hate that? 7 candles in a row. They're 220%.
Okay, I'm going. Where is the 7th Street?
Straight. Make a left.
Make a right?
Straight, make a left.
So right, then left.
Bro, you gonna go straight, make a left on 7th Street. Like right there.
Why are you mad?
You asking me questions, I'm trying to help you, bro. What's up with you, straight?
I'm asking for directions, you're yelling at me.
I just told you go straight, man.
From, G.
What you mean where I'm from? What's up with you? Where you from?
Why are you banging at me?
Hershey, so where you from, bro?
Earth.
Earth, keep on walking, go straight, bro. Get on.
Okay, but you're giving me attitude. That I'm trying to get rocked out here or what?
What the that supposed to mean, nigga? What the am I supposed to mean, nigga? Huh? Bro, get the out of here.
Are you telling me I'm making
So
a
you on
joke?
the pedal? Get up out of here.
Is it cool you're on video?
Man, get the out of here.
Alright. Okay, I'm going. Where is the 7th Street?
Straight. Make a left.
Make a right?
Straight, make a left.
So right, then left.
Bro, you gonna go straight, make a left on 7th Street. Like right there.
Why are you mad?
You asking me questions, I'm trying to help you, bro. What's up with you, straight?
I'm asking for directions, you're yelling at me.
I just told you go straight, man.
From, G.
What you mean where I'm from? What's up with you? Where you from?
What you mean, man? You want to get dropped? God, look at that 5:30. No, I'm really mad. $320. a contract, and I'd had 5 of them. There's an F for not taking the trade. It got him. VIX dumps, market rallies. Oh, here comes Sue with her little chart. Oh, that's magnificent with the chart. Whoa.
Yeah, I wanted to know where the gamma exposure was.
Man, I just missed a great trade right there.
You ain't the only one. I didn't see it either.
That was $2. I sat there and watched it.
Well, I had a trend line that was like 3 more points away, and I was trying to wait for it to touch that trend line.
Yeah. It hit mine. Hit it a few times. Hit it and it bounced up and then came back and retested it. I'm trying to figure out why I didn't take it. That'd been $340 contract for sure. If I'd held it that long, who knows? Is now in full, okay, the Blackwell chip is now in full scale production. Trade jump in it now. We're at support off the 9. Ooh, Sue's on fire.
That girl is on fire. Alright, here's a level.
We're back to the 200 right here, so it should, if it's going to bounce, it's going to do it here. What time is it? 228, 328. $275. There it is right there. If it's going to hold, it's got to do it here. 3 black crows. Nine tens at 260. Didn't hold it. Attention, attention. Oh, we got a radio announcer here.
I'm waiting patiently. I'm not pushing the button. I have a trend line I want it to get to. Where's your bottom? There it went, right off that Toys R Us. $130 to $170.
The 15s. Randy has that gut feeling. So what he says, we do the opposite.
Inverse Randy. Got it.
Randy says it's bearish, so we become bullish. We have had a pullback, Randus. Tomorrow's Friday, though. Well, we're at a pivot point right now. If we dump, it'd be 58.85. And if we bounce, it'll be 59.17. Or no, 59.10, a little under 10. You see what I see? I see a head and shoulders. And I see a resistance. To a little under 59.10 to a head and shoulders at 59.96, 58.96.66. $66. There it is, right there. Bam. Perfect. Oh, junkster. I've never seen that word in stocks before. Juncture. Randy, you know what that word means? Is that like a fork in the road? A particular point in events or time. It is difficult to say that this juncture whether this uptrend can be sustained. That's what I thought. Fork in the road hillbilly talk. I remember hiking on Mount Hood. I took the wrong turn. It cost me about 3 hours. Oh, Randy's being a wise guy. Well, you're definitely right. We are at a juncture right now, and we're staying above the 63 on the 1 minute. I don't know to grab one here or not. No spamming, please. Randy's spamming again. Quit calling me names. YouTube Randy called me a bloated pig. $59.10. Okay, get ready. We're about ready to make a difference. It's taking its sweet time. Hilton Grand. Always clean. This is Jim. How may I help you?
Hello?
Yes, ma'am.
Good afternoon. My name is Mary. The new Trump administration has changed the Medicare policies for your state of Missouri. To proceed with checking your available benefits, I need to confirm you have both Medicare Part A and B, right?
Is this the Hilton Grand? I made reservations there, and that's what it says on the caller ID.
Well, I was asking if you have both Part A and B of Medicare.
Well, I'm asking you if this is the Hilton Grand in Virginia. Because I think you're a scammer. You ain't got nothing to say, do you? Shame on you. Your mother should not be proud of you at all. Do I get a grade on that one? Hello, is this the Hilton in Virginia?
No soup for you.
No soup for you? Is this the Hilton in Virginia? I made reservations. Interrupted me in my trade, you idiots. There's $100 right there. I was just getting ready to make that trade. I had it all typed in. So I told Randy. Randy said that he felt bearish, so he should have went bullish. I'm going to end up getting me another phone, I think, phone number. This has got ridiculous. I've been dealing with this for, what, a year now almost? And I've had gone through 2 different phones to get it to stop. Changed the number once. It's Verizon. They can't control it. Anybody else have Verizon in here? There's Martin Brax. No, we had a little bounce there. 185 to 3 something. It's 15 more minutes. God, there she goes. Megaphone.
Boom, shakalaka!
$5. Talk to the megaphone. Oh man, I just now noticed something on this trade. I wish I'd have saw it a little bit earlier. That kind of pisses me off. I missed that. Head and Shoulders. Perfect. Came back and touched that right shoulder right there. I mean, that was perfect. Perfect setup. $6.60. $3.660. Another 100%er. Shock. Oh, Randy. I thought you were taking a break, Sue. $59.10s are in the money. Dad gum. There's another $100. Well, Randy, you got 10 minutes to make a decision. $2:51. We got 9 minutes here for me to get in this thing. I'm going to bring it down to the 59.15s. Okay, get ready. I tried to get 240 and wouldn't let me have it. Let's do it again. Come on. $2.60. No. Hold the 9. Right here. 260. Right now. How'd your puts do? You're right at support here. Caca. Four minutes left.
Ongoing deficits and increasing debt loads. That's really why we saw yields move up. But then we saw them fall earlier this morning on what can be characterized as a pretty disappointing GDP release. On the surface, it looked relatively okay. It was revised up by 0.1%. It still declined in the first quarter, but it was revised up from the initial estimate. But a look under the hood shows that consumer spending or personal consumption was revised lower than initially released, and it was the lowest in, I think, 7 quarters or so. And the consumer is the driver of the overall economy. So that, I think, was concerning, that maybe the economy wasn't as strong as we were expecting right now, and then that pulled yields a little bit lower. You also have the inflationary impact. If the tariffs do end up being on pause, the inflationary hit might not come. And if you pair that with the potential for maybe slightly weaker growth under the surface, that maybe raises the odds of more cuts going forward. We don't necessarily think that's the case right now, but we did see a modest repricing in the Fed funds futures market where they're back to pricing in 2 cuts by the end of the year.
Okay, so 2 cuts by the end of the year, even despite the fact that the economic data was a bit weaker than expected here. Nate, should we be looking at the tariff developments and this pause, or so it seems like a good thing for the market, or is it just
good question, Caroline?
Volatility and the headline risk here.
Well, I mean, even if, regardless of what happens with this court situation, I think they have some upcoming deadlines of, June 5th and June 9th, I think, in order to, get a response or to have this stay in place, so to speak. But even if this had not come up, we still had the end of the 90-day negotiation window that is coming up in July, that the markets know that it's kind of already an overhang. Now, I think at the end of the day, we just want to see what is going to be the ultimate kind of, and maybe that's too soon, even 90 days. I mean, I've talked to a lot of individuals that say it takes a lot longer to negotiate a trade deal than this 90-day window, but it's just an uncertainty overhang. So the tariffs are important. You got to keep an eye on, your EPS estimates for the S&P 500, your FactSet EPS growth estimates, your Atlanta Fed GDP estimates. I think yields, assuming they're behaving, then I think that's okay. But if they make new cycle highs, or if there's a lot of stalling in the government in terms of, passing these bills and getting funding, etc., then that's the riskiest thing in my mind to the market. Outside of that, on the economic data front, you got to look for a boogeyman on the hard data. We haven't seen it yet. There has not been anything that's really
boogeyman.
That. And even with the tariff uncertainty, prospect was actually pretty good.
Okay, well, my last trade of the day went sour on me. Stopped out of it pretty fast. So, I'm going to take a break. Read a little bit of out of a book that I'm reading. I can't believe I'm finally going to church. This will be week number 19 coming. I mean, week number 20. straight. 20 weeks in a row I've gone. I mean, that's amazing. Anybody else go to church in here? They'll probably close you down. What's going to happen to Daniel with his calls? I hope you don't lose it all. So I'm going to take a break. Like I said, kind of felt a little tired later in the day. Couldn't get outside and do any walking. Should have went to the weight room. Man, this S-Bet must be a low floater. This thing's all of a sudden it's got power. Those are kind of I got to be careful of. We'll catch you later, YouTubers.